Hello Rockstars, I hope you're all doing amazing. Welcome to today's session of SCMPE Revision. So today's chapter is going to be Modern Business Environment. Again, a very important chapter from your examination perspective. If we see an analysis into the past examination, yes, there have been questions of up to 20 marks. Yes, past 3 to 4 attempts continuously. On an average, we are having 12 to 15 marks. Yes, one of the most important chapters from the examination perspective. Again, too many theoretical concepts are there. Yes, so all the concepts, be it theoretical, be it practical, we are going to understand it properly. Yes, we are going to revise and ensure that we remember and retain the things from the examination perspective. Yes, so let us begin the chapter, everyone. So first, let's begin with the basics of modern business environment. Yes, what is this term modern business environment talking all about? It is telling, yes, recently the business environment, the business dynamics have changed. The way business is doing has changed. So based on the change in the way business is being run, we should also change. We should also come up with latest techniques. So what is the change? Now, I can only tell you, yes, assume students 10 years before, yes, you had to purchase clothes. Where would you go? To a nearby shop? Yes or no? Yes. Suppose the MRP given there was 1500 rupees. Yes. Did you have much of a bargaining power? What will you ask? Yes, you'll ask for a discount. He will give you maximum 5% discount. There are hardly one or two, yes, shopkeepers in the town. So you'll go, maximum he'll give you 5% discount. You will purchase, you will come back. It was a supplier driven market. Yes or no? It was a seller's market. But now, after e-commerce, yes, there are too many people, too many suppliers. Yes, the competition has become so much intense. Buyer has got options from around the globe, and it has all changed into a buyer's market. Today you go to buy a cloth, first you will compare with online prices. Then even if you go to offline store, yes, they tell you, yes, it is 1500. You tell online it is available at 800. They'll tell, okay, take it at 800. Yes or no? So the main shift we are telling, during the past 2 decades, my business environment has undergone too many changes. In that, one of the main shift is a transition from a seller's market to a buyer's market. So what all has happened? Yes, in the modern business environment, yes, the world economy has become one, globalization, competition has become intense. Yes, global excess capacities, overall there is excess capacities. Suppose the overall production, the demand of mobile phones in a month in India is 1 lakh. However, the production capacity is 1,50,000. So everyone is catering to the same market. Yes, the capacity is more, however, the demand is less. Yes, new managerial methods and techniques have come into picture. Yes, again, there is availability and accessibility of data and knowledge for all the customers. It's not that customer is not aware. Customer has each and every knowledge. So it becomes very important that we be more and more proactive in the modern business environment. Now, what all things we have to do, students? Firstly, we are telling, in the modern business environment, we should give paramount importance to quality. Quality should be managed. So, how do we manage quality? For that, we have three concepts: cost of quality, total quality management, business excellence model. Then we are telling, yes, we should focus on quality. At the same time, we should also see sometimes we may be having some constraints, some bottlenecks, yes, some limitations. In that case, how do we operate our business in the most optimal way? Again, we are telling, yes, how do we manage our supply chain and ensure we can add maximum value to our customers? Again, if at all we are having any gain, how do we share? Yes, outsourcing arrangement, how do we enter? All those things are there. So let us get into the concepts one by one, students. Yes, concept number one is cost of quality. It is more of a practical concept, students. Yes, cost of quality. Now, quality is important. Yes or no, students? Everyone wants quality. Everyone wants quality goods, quality services. But why is it that everyone is not in a position to provide quality? Because quality is not free, students. Quality is not free. Quality comes with a cost. Yes, either you have to pay the cost now or you have to bear the cost later. Now, what is this concept telling? Look at this, students. Quality means three things they are telling. Quality means three things: conformance to specification, ability to satisfy customer expectation, and value for money. Yes, say for example, I am telling, I am providing SCMP classes. When do you tell SCMP class is of good quality? First, conformance to specification. I am telling I am going to cover you ICAI study material questions. I should conform to the specification that I am giving you. 100% of the module is covered. Next, ability to satisfy customer expectation. Yes, students' expectation will be there that sir will be explaining the logic, sir will make things simple, sir will make things, in a most interactive way. That I should be in a position to do. And value for money. Yes, I'm doing both this, but SCMP class fees are 50,000 rupees. Will you tell, very good quality class? No, you will tell very expensive. So, yes, student should feel it is value for money. Only then you are going to tell it is quality. Okay, now we are telling, yes, quality is important for anyone, anywhere. But why is it that every company is not in a position to achieve quality? Because quality is important. However, quality is not free. It comes with a cost, students. It comes with a cost. Either you incur the cost now or you incur the cost later. Anywhere, yes, make it as a philosophy in your life. Yes, either you incur your cost today or you will be incurring your cost tomorrow. Say, for example, you were going to your school. Yes or no? Homework was there in school. Yes, either you struggle now, that is, do your homework. Tomorrow you will be happy. Or you enjoy today or struggle tomorrow. That is, don't do your homework, enjoy today. Tomorrow in class you struggle. You are doing CA. Yes or no? Either you pay the cost now. Now you study properly, in the examination you succeed. Or you pay the cost later. Once you have given your examination, till there you enjoy, you chill. Once you have given your examination, then what will happen to my results once result comes? Yes, all the consequences, aftermath, all of that. Yes, similarly, I'm telling any business in the organization. Yes, we have to ultimately incur cost for quality. Either we incur the cost now, that is before my finished goods are produced, or I incur my cost later, that is after my finished goods are produced. Now, just to give you a very simple example, suppose I am a car manufacturer. Yes, so I am telling either I have to incur my cost now, that is before finished goods are produced. Yes, before car is produced, I am incurring my cost to ensure quality. Say, for example, I am buying perfect quality raw material. I am doing testing of my raw material. I am ensuring I am doing proper maintenance of my machine so that there is no, yes, issue in between. I am doing inspection of my finished goods. Yes, what am I doing? Yes, all these I am doing before my finished goods is produced to ensure that the finished goods I am produced is of perfect quality, or else I will have to incur my cost after my finished goods is produced. Yes or no? I have not done any of these things. I did not purchase proper quality raw material. I did not train my employees. Nothing I did. I produced my car. I sold it. What will happen? Customers will use the car. They will not like it. Yes, they'll start making complaint. Yes, I'll have to recall my vehicle. Yes, I'll have to give sales warranty. Yes or no? Sales return, warranty claim. Yes, loss of market share, loss of goodwill. So many things are going to come into picture. Okay, so look at this. Quality is not free. Yes, either you incur the cost now, that is before your finished goods are produced, or you incur the cost later, that is after my finished goods are produced. So cost of quality has two components, students. Cost of good quality, it is the cost incurred before my finished goods are produced. Cost of poor quality, it is my cost incurred after my finished goods are produced. Cost of good quality, it is the cost incurred in order to produce good quality goods or services. Cost of poor quality, it is the cost incurred because I could not produce good quality goods or services. Understand the difference, students? Yes, again, my cost of good quality again has two bifurcations. One is my prevention cost, one is my appraisal cost. Cost of poor quality again has two bifurcations, internal failure cost as well as external failure cost. So now let's try to understand each and everything, students. Now look at this. Yes, understand it properly on a timeline. Yes, I have told, yes, either I have to incur my cost now, that is before my finished goods are produced, or I have to incur my cost later, that is after my finished goods are produced. Okay, cost of good quality, cost of poor quality. Okay, cost of good quality, again I am having prevention cost and appraisal cost. What is a prevention cost, students? Yes, it is the cost incurred to prevent poor quality goods or services from getting produced. What am I trying to do? I am preventing poor quality goods or services from getting produced. Ideally, these are incurred before the start of my production. Say, for example, before my production starts, I'm a car manufacturing company. Before my production starts, I'm giving proper training to my employees. Why am I giving that? So that when they produce the goods, they do not produce poor quality goods at all. Yes or no? I've given training to my employees. Say, for example, I'm doing preventive maintenance of all my equipments. Why am I doing? Yes, so that while we produce, no poor quality goods or services are getting produced. Is it clear? I'm doing my supplier review. Yes, while selecting my supplier only, I am selecting such a supplier who can give me defect-free raw material. Why am I doing that? So that, yes, while I produce, defects are completely avoided. I can prevent poor quality goods or services from getting produced. Is it clear, students? That is my prevention cost. Now, what is my appraisal cost? These costs are incurred during my production. Why am I incurring? to check, to check, to inspect if the goods produced is of perfect quality or not. Say for example, I am doing testing, I am doing inspection, I am doing a quality review. Say for example, I am doing periodic audit. Yes, why am I doing this? To check, I am not preventing. Yes, I have done inspection of my finished goods. I am not preventing poor quality goods from getting produced. What am I doing? I am checking if good quality goods or services are being produced or not. If any poor quality goods are being produced, I am just checking that. Here I am preventing. Here I am preventing. Here I am just checking. Is it clear, students? So look at this cost of good quality. Yes, it is the cost incurred in order to produce good quality goods or services. Okay, these are incurred before my finished goods are produced. Yes, in that my prevention cost, it is incurred to prevent poor quality goods or services from getting produced. All examples are there. You guys can see that. Next, I have my appraisal cost. These costs are incurred to check. What am I doing? Check if good quality goods or services are being produced or not. If the goods that I'm producing is of good quality or not. To check that, I'm incurring my appraisal cost. Is it clear? Prevention cost is generally incurred before start of production, even before my production starts. I'm doing all these things. I'm giving training, I'm doing preventive maintenance, I'm giving supplier education, supplier evaluation, yes, quality planning, all of these I'm doing even before the start of my production. Appraisal is during my production. During my production, I'm seeing, the goods that is getting produced is of good quality or whether any poor quality goods are being produced. Is it clear, students? Any doubts? Should we continue, students? Everyone? Yes. Next, I am telling I did not incur cost of good quality. I did not incur my prevention cost. I did not give training to my employee. I did not check if the cars being produced is of perfect quality or not. What will happen? Once my production is complete, what will happen, students? I will be having defective goods. Yes or no? All these assume are defective cars. Now, yes, I'll have to be incurring cost of bad quality, cost of poor quality, cost of non-conformance. What are these? These are the cost incurred because I could not produce good quality goods or services. These are the cost incurred because I produced poor quality goods or services. Now, cost of, yes, poor quality again has two bifurcations: internal failure cost, external failure cost. Now, defect is produced. Yes, defectives are produced, students. Yes, assume a car is produced which is defective. Either I am telling, okay, I've realized this car is defective. What will I do? Even before I give it to my customer, yes, I will do rework on that. Yes, I will either scrap that. I will do some work, but I will ensure that before my goods reach customer, it is of perfect quality. Goods is produced. Produced goods is defective, but I have realized now. What am I doing? Before it reaches my customer, I am taking steps to ensure that defects do not reach my customer. Yes, I will be doing rework. I can scrap it off. I can do, one more round of work, whatever I am doing. That is my internal failure cost. Defects are produced. It is a failure, but it is internal failure. It has not reached my customer. And what is my external failure cost, students? Yes, it is a cost incurred. Yes, once the goods have reached the customer, that is, the defects are detected by my customer. Yes, I did not care at all. Yes, defects were produced, but I did not care. I've sold it to my customer, telling, yeah, nothing will happen. But customers have discovered the defect. Yes, they are recalling. Yes, they have started a complete campaign. Yes, they have started banning our products. So we'll have to recall the products. Yes, we'll have to give warranty claims. We'll have to do sales return. Yes, we'll have to give after sales service. Yes, there will be a loss of market share. All these are my external failure cost. Yes, so understood the logic, everyone? Yes, understood the broad difference between what is my prevention, appraisal, internal failure, external failure. Yes, either I'll be incurring cost of good quality or cost of poor quality. Cost of good quality is incurred in order to produce good quality goods or services. Cost of poor quality is incurred because I could not produce good quality goods or services. In that prevention cost, appraisal cost, prevention cost is incurred to prevent poor quality goods or services from getting produced. I'm directly preventing. Yes, I'm giving training, I'm doing machine maintenance, I'm doing supplier check, I'm preventing. In appraisal, I'm checking if any good quality goods or services are being produced or whether there is any poor quality goods or services. If I'm having poor quality goods or services, that is, I am having my defect, I have to treat them. Yes or no? Today or tomorrow. Either I will tell I will treat them before my goods reach to my customer. That is my internal failure cost, or I will tell no issues at all. Then the goods will reach the customer. Again, yes, customer will start making issues with that. Yes, customer will give negative feedback. I will have to recall my product. I'll have to do sales return. All of that is my external failure cost. Is it clear everyone? The concept is over. Yes, short and sweet. Now generally practical questions will be there. Yes, obviously you will have to solve the practical questions by yourself, students. Yes, cost of poor quality we have, which is also called as cost of non-conformance. Yes, it is a cost incurred due to production of poor quality. It is incurred because we have produced poor quality goods or services. Yes, because we have produced, we have to treat them. Yes or no? So I have internal failure, external failure. Internal failure is a cost associated with defects before goods are delivered to the customer. Defects are produced, failure is there, however before it reaches my customer I've worked on that. That is my internal failure. Yes, defect is there, I've delivered to my customer also, then customer is coming up with issues, with complaints. These are defects after the goods or services are sold to my customers. Is it clear? Recall, warranty, customer support, yes, product liability, yes, loss of market share, all of these things. Is it clear, students? Yes. Now tell me one thing. Yes, what is the relationship between cost of good quality and cost of poor quality? Suppose in my car manufacturing company, yes, I have incurred sufficient amount, substantial amount as cost of good quality. Yes, to produce good quality goods or services, sufficient amount I have incurred. That means, will there be a need for me to incur cost of poor quality, students? Tell me. I have incurred sufficient amount, yes, to produce cost of good quality, to produce good quality goods or services. That means, will there be a need for me to incur cost of poor quality? Yes, no, my cost of poor quality will get reduced. Yes or no? Yes, either I am telling, yes, I have incurred my cost to produce good quality. That means there is no need for me to incur cost of poor quality. Cost of poor quality will be less. I am telling I have not incurred cost of good quality. I have not done, yes, I have not incurred prevention cost, appraisal cost, none of that I have incurred. That means I will have to incur my cost of poor quality. Yes or no? Is it clear, everyone? Yes, so there is an inverse relationship. If my cost of good quality increases, cost of poor quality decreases. If my cost of good quality decreases, cost of poor quality increases. That means there is an inverse relationship. Obviously, which is better, students? Which cost is better for me to incur? Is it better to incur cost of good quality or cost of poor quality? Obviously, cost of good quality is better. Yes or no? Because cost of poor quality, obviously it is impacting my customer. Yes, it is going to reduce my market share. It is going to bring a dent, yes, on my goodwill. All those things are going to happen. Is it clear, everyone? Yes. Next point that we have is optimal cost of quality. Now, you may think that, yes, obviously cost of good quality is better. So what I'll have to do? I'll have to incur maximum amount for as my cost of good quality. That is my prevention as well as appraisal cost. However, that's not the case. Now look at this, students. Yes, I'm giving you 4 different options. You have to tell me which is the most suitable option. Yes, option number 1, prevention cost is 0, appraisal cost is 0. I have not incurred at all. That means my internal failure and external failure cost are huge. So my total cost of quality is 10 lakh. Option number 2, my prevention cost I have incurred 3 lakh, appraisal is also 3 lakh, internal failure is 50,000, external failure is 50,000. My total cost of quality is 7 lakh. Option number 3, I have incurred 1.5, 1.5, 4 lakh and 4 lakh. My total cost is 11 lakh. And final option, I have incurred 8 lakh. I have incurred 8 lakh prevention cost. I have incurred 4 lakh appraisal cost. 12 lakh cost of good quality I have incurred. But I am ensuring my internal failure as well as external failure cost is 0. My total cost of quality is 12 lakh. From a financial perspective, which option is the most suitable one? Option 1, 2, 3 or 4. Which one is most suitable, students? Tell me. Yes, is it option 1, 2, 3 or 4? Yes, tell me, students. Yes, it is my option 2, yes or no, wherein my overall cost of quality is minimum. Yes, I will tell. Yes, option 4 looks good. Option 4 looks good. Yes or no? Because there my cost of poor quality is 0. However, my total cost is maximum, very high there. Yes, if I have to aim to ensure that my cost of poor quality becomes 0, yes, if I have to ensure that my cost of poor quality becomes 0, I'll have to incur substantially high amount of cost. Yes, I'm not interested in that. Yes, what I will tell, from a financial perspective, which is the most suitable point, students? From a financial perspective, yes, option number 2 is the most optimal point. That I call it as my optimal cost of quality. What is my optimal cost of quality, students? Optimal cost of quality is that level where my combined cost of quality, that is my cost of good quality plus cost of poor quality, is minimum. Is it clear, everyone? So we've discussed cost of quality. Yes, cost of good quality, cost of poor quality, prevention, appraisal, internal failure, external failure. We've also discussed, yes, optimal cost of quality. Now, how do we take decision, students? Yes, every time, yes, question is asking you to analyze, take a decision. Yes, if it has given multiple alternatives. From a financial perspective, always go for optimal cost of quality. Yes or no? Financial perspective, you have to select. From a financial perspective, you have to select. Which one you will select? I will tell here my overall total cost of quality is less. I will go for this. However, from a non-financial perspective, you have to take a decision. You can also, what is it, students? It's not compulsory. If needed, you can also go for the alternative wherein your cost of poor quality is minimum. Yes or no? If my cost of poor quality is minimum, what will happen? In the long term, yes, my customer satisfaction will increase, my brand image will increase, and overall sales in my long term will increase. So from a financial perspective, I will be going for my optimal COQ. However, from a non-financial perspective, if needed, I can also go for that alternative wherein my cost of poor quality is lowest. Is it clear, everyone? Any doubts, students? Should we continue? Okay. Next, I have my PAF model, PAF, which is also called as Prevention Appraisal Failure Model. Yes. Why I am using it? Yes, it is used to measure, classify, and analyze my quality cost. All my quality cost I am incurring. Yes, prevention cost, appraisal cost, internal failure, external failure. Yes, to understand, to analyze, to work on that, I will be using this PAF model, PAF. What is the steps to be used? Very simple, students. Suppose I am telling, yes, I am Maruti Suzuki. Yes, I have taken data of 1 month about what all quality cost I have incurred, what all failures were there in the system. Okay, suppose I am getting that in 1 month there were 20 failures. Okay, so altogether 20 failures were there at different points of time. So I have got that data. First I have collected the data, how many failures are there. Okay, then I will try to see, yes, because I have had 20 failures, what is the overall impact in terms of rupees? What is the rupee impact of these 20 failures? Yes, it could be possible that because of that, one employee is damaged, or one car, yes, which was not of good quality is being delivered. Because of that, there was an accident. Because of that, product liability damages, all of that is there. So I'll have to apply my assumptions, telling, okay, what will be this impact? What will be this impact in terms of rupees? And try to quantify my data. Suppose I have quantified, I am telling 20 lakh rupees is the total impact because of 20 failures. Now I will classify my cost. Yes, the cost that I have incurred, I will classify into 4 elements. What are the 4 elements, students? How much is my prevention cost? How much is my appraisal cost? How much is my internal failure cost? How much is my external failure cost? So I have classified my prevention cost is 5 lakh, appraisal is 5 lakh, internal failure is 8 lakh, external failure is 2 lakh. This way I have incurred 20 lakh. I am telling. Okay, then I will see which is my weak spot. There I will try to put more and more resources. Yes, I am telling, yes, my internal failure and external failure cost is almost 50%. In that, internal failure cost is very high. Too many defects are getting produced. So I try to understand why it is happening. I realize that because I have not done sufficient, prevention cost. So what I will do, I will try to incur some more prevention cost, so that my internal and external failure cost gets reduced. Is it clear? So I have got that. I have got an idea telling where should I incur more cost, where should I work more. And finally, I will keep doing this on a regular basis. Now look at this, students. Yes, what we have to do first, gather information about number of failures in a system. Okay, 20 failures were there in a month. Apply your assumptions and quantify the data. What is the overall rupee impact? 20 lakh I have quantified. Chart the data on 4 elements and study it. How much is my prevention, appraisal, internal failure, external failure, bifurcation? I have done it. Yes, allocate resources to combat your weak spots. I got that. Yes, prevention I have not done. That was my weak spot. Because of that, I am incurring all these costs. So I will allocate more resources. Yes, I will incur more prevention costs. And finally, do this on a regular basis to continuously improve your performance. Is it clear, everyone? Any doubts? Yes. Ultimately, we are telling cost of quality. Yes or no? Yes, there are 2 different years. You have to compare your cost of quality. Suppose year 1, you have incurred your cost of quality as 12 lakh. Year 2, you have incurred your cost of quality as 13 lakh. What you will tell? Yes, year 2 is bad because your cost of quality is more. But wait, it is quite possible that in year 1, your sales is 1 crore. In year 2, your sales is 2 crore. Yes or no? So absolute number comparison is always difficult. So what you can do, Yes, generally in a real life, you can take it as a percentage of your sales or as a percentage of your total cost. This way it becomes easy for us to compare. Is it clear? Yes, one final point is there, students. Yes, which is used generally in terms of analysis. Yes, question will be asking, yes, tell us certain measures which can be used to reduce non-conformance cost. My cost of poor quality, non-conformance cost, I have to reduce. What all measures can be used? Okay, ICAI generally gives two terms, yes, two measures. Either I can go for TQM, total quality management, or I can also implement TPM in my organization. Because of that, my non-conformance cost gets reduced. Now, what is TQM? What is TPM? We will discuss it later on. We have a separate concept for that. Again, I am telling one more point is there. Internal failure cost is better than external failure cost. Suppose we have to take a decision. Yes, defect is produced. Should I incur internal failure cost or external failure cost? Which one is better, students? Obviously, internal failure cost is better. Yes or no? You have to work on your product before it reaches your customer. Before your goods reach your customer, they should be defect free. Yes or no? Because ultimately, your external failure cost is going to impact your brand image. Is it clear, everyone? Any doubts? With this, our first concept, cost of quality, is over. Let's quickly try to revise, students. Yes, what cost of quality is telling? Yes, we are telling, yes, quality is important, but quality comes with a cost. Either you incur the cost now or you incur the cost later. That is, either I'll be incurring cost of good quality or cost of poor quality. Cost of good quality, again, I have prevention cost, appraisal cost. Prevention cost, I'm preventing poor quality goods or services from getting produced. Appraisal, I'm checking if good quality goods or services are getting produced or not. Prevention is incurred before the start of production. Appraisal is incurred during my production. Yes. Now, production is over. Defects are produced. Either I'll be incurring internal failure cost or external failure cost. Internal failure cost. Yes, these are the costs incurred on the defects which are produced but not delivered to my customer. Before I deliver to my customer, I worked on that. Yes, or else external failure. Yes, these are the cost of defects which are delivered to my customer. That is, I have delivered to my customer. Customer has detected all these issues are there. Is it clear? Yes, my external failure costs are going to impact my brand image, goodwill, long-term sales. Is it clear? Yes, then I have told relationship, there is an inverse relationship, optimal cost of quality, that point wherein the combined cost of quality is minimum. How do I take decision? Financial perspective, go for optimal CAQ. Non-financial, you can also go for that point wherein your cost of poor quality is minimum. Yes, again I have told path model. Yes, collect information about number of failures. Yes, apply assumptions, quantify the value. Yes, put it under 4 elements. Yes, allocate resources to combat your weak points. Do it on a regular basis. Again, we have told what can be used to reduce your non-conformance cost. You can use TQM, you can use TPM. Is it clear, everyone? One concept which is very important is over. Now we'll be moving to the next concept, my dear students. So how is the Josh? Should we continue to the next concept, everyone? Yes. Okay. So let's move to the next concept, students. Total quality management. Yes, now quality management, there are three, yes, techniques that they've told. Yes, cost of quality, total quality management, business excellence model. We should understand what it is, what is the difference. Only then we'll be in a position to appreciate. Yes or no? In the limited time, yes, let's try doing this. Yes, total quality management. What my cost of quality was telling, it was a practical concept. It was telling, see, either I have to incur my cost now or I have to incur my cost later. It is better to incur the cost now. That is before my finished goods are produced. Yes, my objective was, goods should be defect free before they are delivered to my customer. Yes or no? My goods should be defect free before it reaches my customer, because if defects reach my customer, yes, it is going to impact my brand image, yes, customer reputation, future sales, goodwill, all of those things. So do whatever you want. You can incur either prevention cost, appraisal, internal failure, but ensure that by the time your goods reach your customer, they are defect free. That is what my cost of quality was telling. So for that, what all options were there, we had analyzed. Now look at what TQM is telling, students. Yes, TQM is telling, TQM is a philosophy. Yes, it is telling my goods should be defect free the very first time they are produced. Yes, understand the difference, students. What is cost of quality telling? Yes, it is telling my goods should be defect free before they reach my customer. What is TQM telling? My goods should be defect free the very first time they are produced. What is the difference? Yes, it is as good as telling, yes, I should become a CA. I will become a CA. This attempt, next attempt, I don't know, but I will definitely become a CA. It's a never give up attitude. Yes, what is TQM telling? That was cost of quality. What is TQM telling? I will become a CA in the very first attempt. I will become a CA in the very next attempt. So I'll have to ensure that right now only, first time only I'm producing, I'm giving maximum focus on quality so that defects do not occur at all. Is it clear, everyone? Yes, got the difference between, what is the difference between my cost of quality and my total quality management? Yes, in my cost of quality, I'm telling, yes, goods should be defect free before they reach my customer. TQM, I'm telling, yes, goods should be defect free the very first time they are produced. So in that way, we have to produce our goods. Now, there is a big history for TQM, not getting into that. Yes, after my World War II, Japanese products were not of good quality. So, quality management gurus, yes, our Deming, Juran, all of these people, they went there. Yes, they've told, how to, improve their process. So, that is the result, because of which Japan has become an exporter of superior quality goods. Okay, so at that particular moment, one of the principles that these people had advocated was TQM. Now, what is TQM, students? Let's quickly understand what is TQM. The name itself is telling TQM, Total Quality Management. Yes or no? Total Quality Management. So, what it is telling? Management. So, it is a management style or a management philosophy. Yes, TQM, yes, management. It is a management style or management philosophy. What is it focused on? What is this management style focused on, students? Yes, which is focused on quality. Yes, it is a management style where they are focusing on quality. Everything they are doing, they are focusing on quality. Yes, now how do we achieve quality? How do we achieve quality? By involving everyone and by considering every process in the organization. What is it, students? TQM, Total Quality Management. It is a management philosophy or management style. What are these people, management people, doing? Yes, focused on quality. Yes, the management style is focused on quality. Yes, everything we are doing, we want perfect quality. Now, how do we achieve quality? By involving everyone. We have to involve each and every person, and by involving every process, each and every process, we have to try to make improvements so that everything becomes perfect quality. Is it clear, everyone? Now look at this. Yes, it is a management philosophy. Yes, TQM. TQM. It is a management philosophy. Yes, which is focused on quality. That is, which is aimed at improving the quality of goods or services produced. How? By involving all employees and through continual improvement of internal practices and processes. Is it clear, everyone? Yes, whether the meaning of TQM is clear? Yes. So what is it, students? It is a management philosophy which is focused on quality. That is, continuously improve the quality of goods or services produced. How? Yes, by involving everyone and by taking every operation of the organization. Is it clear, everyone? Now, we are having a definition by CAMA as well. Not that important, but still, let's have a look at that. Yes, what they are telling? It is an integrated and comprehensive system. It is a completely integrated and comprehensive system, wherein what we are doing, students? Yes, we are planning and controlling all business functions, PCBF. Okay, planning and controlling all business functions. It is an integrated and comprehensive system of PCBF, planning and controlling all my business functions. All my business functions, I'm planning properly in an integrated way, in a comprehensive way. I'm controlling whether what I've planned is being achieved or not for all my business functions. Why am I doing that? So that the goods or services produced will meet or exceed my customer expectation. That means, yes, they will meet my quality standards. Yes or no? Obviously, meet or exceed customer expectation means quality is being achieved. So it is an integrated comprehensive system of planning and controlling all my business functions, PCBF, so that goods or services are produced which meet or exceed my customer expectation. Yes. Now, next point, students. Yes, important. Yes, 6 C's of TQM. Yes, Deming is telling, yes, in order to implement TQM, yes, there are 6 C's that we have to implement. We are asking, okay, what are those 6 C's? Let us know. Yes or no? So, Deming is telling 6 C's are there. What are these? He is telling commitment, culture, continuous improvement, cooperation, customer focus, control. Now, just pay attention. We'll ensure that you guys understand, remember as well. Now, one thing, students, yes, what TQM as a philosophy is telling is, TQM is telling, if at all any defects are being produced, yes, previously what people were thinking, yes, it is the people who are producing the defects. Yes or no? But TQM is telling no. It is not that the people are producing defects. It is that your systems and processes are poor. Suppose in your article chip, yes or no, day one they have sent you to do audit. Obviously, you will commit an error because you don't know. Yes, it is not that you are committing an error. It is that they have not implemented a proper system. There is no proper process to ensure that you do not commit an error. So Deming is telling only 15% of defects is because of employees, balance 85% is because of poor system as well as poor process. Okay. Now 6 C's of TQM, let us try to understand, students. Suppose I am telling we are a car manufacturing company. Okay, so we've started our own car manufacturing company. I am telling Dinga Cars Limited. So we want to implement TQM. Yes, what all should we do? Firstly, I want commitment. From whom I want commitment, students? Yes, from whom I want commitment to implement TQM. I want commitment. Who should give that commitment? Commitment is needed from the top management. Yes, it is not possible. Suppose I am telling I am the CEO of Dinga Motors. Yes, I am not concerned about quality at all. I am telling you take care of quality. You guys ensure that yes, goods which is produced is of perfect quality. I am not concerned at all. People are coming with me telling, okay, yes, in order to improve the quality, we should come up with changes. I am not doing anything. I am not having any commitment towards quality, but I am telling TQM should be implemented. Goods should be perfect quality. I am not doing anything. I am not giving that vision. It will never be achieved. Yes or no? If TQM is to be implemented, a clear commitment from the top management is required. It is not sufficient to delegate quality issues to a single person or department. Okay, commitment from top is needed. Yes, once there is that proper commitment from top management, what we need to do? Yes, we need to create a culture. Yes, we need to create a culture that focuses on quality and makes quality a part of everyone's job. We should create that culture wherein everyone is talking about quality. Everyone is talking about how we can improve the quality. Suppose in our organization, Dinga Motors, yes, every Saturday we are coming up with ideas, brainstorming, telling, okay, how the quality of goods could be improved, how this process could be made better. So continuously we have created that culture so that even though tomorrow I may be there, I may not be there. Yes, people will focus on quality. Okay, yes, so for that training is very important to bring a change in my quality. Yes, so commitment, culture. Yes, next I am telling continuous improvement. What I am telling is TQM, total quality management. I want to achieve 100% perfect quality. So it is a continuous process. Continuously I should try keeping to come up with better and better ways. Yes, but I should never tell, okay, this is enough, nothing more. So what they are telling, look at the students, TQM is a process, not a program. Program is just a 1 day, 2 day thing. Yes, one time thing. Process is a never ending, continuous thing. So yes, TQM is focusing on continuous improvement. Continuously we should try keeping, yes, becoming better and better. So it is a process, not a program. Company should be committed, yes, in the long term to the never ending ways to do the job in a better way. We should continuously try focusing on how this could be done in a more better way. Is it clear? 3 things we have discussed: commitment, culture, continuous improvement. Again, cooperation. What is cooperation, students? Ultimately, who have to implement TQM? Ultimately, who has to implement TQM? My employees have to implement TQM. Yes or no? So if my employees do not cooperate, yes, top management commitment is there. We are trying to build that, yes, culture, but employees are not cooperating. They are not concerned at all. Yes, will we ever be in a position to implement TQM in our organization, students? We will never be in a position to implement TQM. So cooperation and involvement of employee is necessary for successful implementation of TQM. Now you'll ask, yes, why is employee cooperation necessary? Yes, now ultimately, who is working on the grassroots level? Who is working on the ground level? Employee. Who knows the real issues at the ground level? Top management only knows what is happening at the top level. They only know the strategic direction. They don't know what issue properly we are facing, what is the correct solution we should come up with. Say for example, we are telling, okay, you have a partner in your office. Okay, he doesn't know how to do Excel, how to file ITR, all of those he doesn't know. Yes or no? Properly he doesn't know. If at all any technical glitch is there, what he should do. You, being at grassroots level, you know how to do it. So if at all we have to ensure that 100% quality is being done, you should come up with suggestion telling, okay, for this issue, this is what we have to do. For this issue, this is what we have to do. We can do the work in this way to ensure that there is no defect. Okay, so total employee involvement of all the employee and their on-the-job experience. Yes, what all they've learned, what all their lessons are there is very much necessary for success of TQM. Is it clear? Yes, then we are telling customer focus. Yes, in TQM, yes, we are trying to achieve quality. Yes, we are trying to ensure that my customers are satisfied. First time only defect free we are producing. So needs of my customer is going to be the major driving force. What my customer wants, based on that, I will be working to achieve that. Is it clear? Now customers could be either external customers or my internal customers as well. External customer is my final customer. Internal customer is any internal department. Say for example, I have done stamping of my car. Okay, stamping is, yes, putting that your outside body part. Yes, after that it is going into assembly. So yes, assembly is my internal customer. Stamping is giving the goods to assembly department. Internal customer. Yes, about them also we should focus. It's not just that I'm only concerned about my external customer. My internal customer ultimately will give to my external customer. So I should focus on my internal customer as well. Yes, my focus should be perfect service with zero defect. Finally, control. Yes, I should be having a proper documentation procedure telling what all should be done, how we are doing the work. Yes, proper control mechanism should be there to ensure that TQM is implemented successfully. So 6 C's of TQM students: commitment from top management, culture, create a culture of quality, continuous improvement, continuously try to become better. Yes, cooperation from employees, we want the cooperation, customer focus, customer could be internal, external, as well as control, documentation is necessary. Now let's see how we can remember the students. So we are having, we have come up with something very unique for you guys. So see if you guys love it. If you guys love it, yes, tell us. We'll try coming up with more such things. Otherwise, it's anyways fine. Okay, it was just an experiment. So let's see, everyone, pay attention.
Commitment culture में हो तो continuous improvement हो, cooperation और customer focus हो तो control हो, यही तो TQM है बात, जाने की बात ना करो, मेरे साथ तुम रहो, जाने की बात ना करो. Wow, 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 wow,
Yes, everyone. So I hope the audio was clear. Yes or no, everyone? Audio was clear, right? You were in a position to listen to the audio. Yes. Now I think you should never be in a position to forget the 6 C's of TQM. Yes, commitment, culture में हो तो continuous improvement हो, cooperation और customer focus हो तो control हो. So it's commitment, culture, continuous improvement, cooperation, customer focus, control. The 6 C's of TQM. Is it clear, everyone? Commitment we want from the top management. Yes, culture, we should create a culture of quality where everyone is focusing on quality. For that, training is necessary. Continuous improvement. Yes, TKM is a process, not a one-time program. Yes, cooperation from employee is necessary. Customer focus. Ultimately, it is everything is driven based on what my customer wants. He could be internal or external customer. Finally, control. Have your documentation control mechanism to ensure proper implementation. Is it clear, everyone? Should we continue, students? Yes. So now let's move to the next point, students. Deming's 14 points for TQM implementation. Again, see, all these points were very general, right? Yes, we want commitment. We should create a culture. Yes, customer orientation is needed. All of that. Yes, we are asking specifically, tell us something. How do we actually implement TQM? So Deming is telling again 14 points are there. We are like, okay, fine, tell. Yes or no? 6 points anyways. We've tried remembering. Again 14 points we have to remember. Fine, we'll do that. No issues. Now 14 points he has told. Now should we remember all 14 points? No. At least 7 or 8 or 10 is necessary. We'll ensure that yes, maximum 14 also we can remember. Okay, just to pay attention for the next 5 minutes, students. Yes. So all my 14 points I have bifurcated into 3 things. Deming is telling in 3 different areas we should work. Firstly, in our raw material. Secondly, in case of my employees. Finally, overall at the management level. I'm telling fine. Yes. In raw material stage, he is telling, yes, we should cease dependency on inspection of raw material. We are telling we should not inspect raw material only. We are asking why. Yes, buy perfect quality raw material. Purchase perfect quality raw material so that there is no need for inspection at all. So cease dependency on inspection. I'm telling fine. Then he is telling, move towards single supplier for one item. For one raw material, you should be having only one supplier. Why? Because he will be giving perfect quality goods. Ensure that you are selecting a supplier who is giving perfect quality goods. Again, at the same time, because you are buying from only one supplier, you will be getting your bulk risk. Is it clear? So for raw material, 2 points. Cease dependency on inspection. Yes, one raw material, one supplier I want. I am telling fine. Okay. Now tell towards employees. He is telling, yes, give Institute training on the job. Give your employees on the job training. Now think of your articleship period, students. Yes, now if your employer, if your principal gives you on the job training, yes, will it not be in a position? Yes, you will, whether you will not be in a position to work better. Yes. So yes, if you give on the job training, your employees will be in a position to work better, produce better. That means defects will be avoided. So give them training on the job. Fine. Yes, institute leadership. He is telling, yes, you should come up with the leadership, not with supervision. Supervision is just target oriented. Okay, in this one day, 100 units you should produce. That's all. Yes, leadership is more human oriented. Yes, we understand the employees. We understand what is causing them trouble, what is causing them pain. Based on that, we get the work done. Employees will connect more with the leader, not with the supervisor. So amongst our employees, we should try to build leaders, not just a supervisor. Institute leadership, he is telling. Fine. Drive out fear, he is telling. Yes, amongst employees, there should be no fear. You should try to drive out the fear, he is telling. I am asking why? Because ultimately, for my TQM to be successful, my employees should give me ideas, telling, where all we can come up with changes, suggestions. If my employee is very much afraid of me, will he come up with suggestion? Suppose you are very much afraid of your, yes, principal. Yes, Bindas idea that will give your principal 1 crore extra profit. Will you ever tell that? No, because you are very much afraid. Yes or no? So you should drive out the fear amongst your employees. There should be an open culture. Okay. Next, break down barriers between departments. Yes, between different departments, barriers will be there. We should try to eliminate that. Why we should try to eliminate that? It might be possible that, yes, my output of one process is going as input of next process. So I should go and ask them how they are using, what is it that they want. Based on that, I should produce, so that ultimately it is going to be beneficial for them. I should not be like, okay, this is my, yes, process, this is what I am doing. Yes, I am not concerned about anyone else. We should break down the barriers between departments, and we should try to eliminate slogans. What are slogans, students? What are slogans? Yes, what are slogans? Yes, slogans generally, if you would have gone for audit for manufacturing company, yes, in some companies they would have written, yes, #1 steel manufacturer by 2024. Yes, defect-free goods. Okay, customers' most trusted brand. Yes, all these people, all those, yes, logos, quotes, they will write and they'll put it at different places so that employees will be motivated. Now, Deming is telling you should not do that. Eliminate slogans. But we are asking why? Slogans are good, yes or no? Employees are seeing the slogan. Yes, #1 car producer. Yes, by 2024. Employees will get motivated. Now, what Deming is telling, pay attention, students. Yes, why do we put slogans? We are putting slogans on an assumption that my employees are not motivated. So I am putting slogans telling, okay, yes, they are not motivated while working. So if I put slogans, the moment they see a slogan, okay, #1 car manufacturer, they'll be like, yes, we have to become #1 car manufacturer. For that, they will work. But what Deming is telling, yes, defects are produced not because of my employees. Only 15% of defects are because of my employees. 85% defects are because of poor process. So if you want, you can put your logos, yes, logos, your quotations, slogans, all of that. But work towards making your process better. If you have made your process better, obviously your goods are going to become better. There is no need for bringing in your slogans. Is it clear, everyone? Yes. So all these points, let us try to remember. Yes, we have discussed 7 to 8 points. Now look at the students. Yes, altogether we are telling 14 points are there. Regarding raw material 2 points, regarding labor 5 points, and regarding your management 7 points. Raw material 2 points, simple. Cease dependency on inspection. Inspection should not be done. Okay. For one raw material, one supplier. Fine. Regarding labor, we have told 5 points. Yes, you have a small mnemonic. Yes, I am telling. Yes, Tabish loves football. Okay. Tabish loves football. However, the sad part is, okay, Tabish loves football. However, the sad part is temporarily, yes, he had to say rest in peace to football. Why? Because we are doing CA. Yes or no? So, Tabish is me, for your kind information. Tabish loves football, but the sad part is temporarily we had to say rest in peace to football. Now, let's try saying Tabish loves football. Tabish loves football, but the sad part is Tabish, T stands for training. Yes, institute on the job training. Love, L, leadership amongst your employees. Yes, develop your leadership, institute leadership. F, fear, drive out fear amongst your employees. B, yes, barriers, break down the barriers between the department. S, slogans, eliminate slogan. Whether 7 points are clear, students? Yes, try remembering one time. Yes, I have 2 points about raw material, 5 points about labor. Raw material, yes, while you are purchasing raw material, C is a dependency on inspection and one goods, one supplier. Fine. Next for labor, Tabish loves football, but the sad part is T. T is for employees. I have to give training, on the job training institute. Yes, L is for leadership, institute leadership. Yes, F stands for fear, drive out fear. Yes, B stands for barriers between department. Yes, break down barriers between department. S stands for slogans, eliminate your slogan. Is it clear, everyone? Yes. Yes. Now 7 more points are there. Yes, about management. If you remember 7 also, it is sufficient, believe me. But let's try to, yes, remember all 14. Yes, if it is simple, why to ignore it? Now, yes, what management should do? Firstly, we are telling management should adopt the new philosophy. Yes, which is concerned about quality. Yes, firstly, management should adopt that. Only then we can expect workers to adopt it. Fine. Yes, create a constancy of purpose towards improvement, continuous improvement. Yes, continuously, all time. Yes, irrespective of whether it is peak season, non-peak season, we should be having that goal towards improvement. For that, we should set time aside. Fine. Eliminate management by objectives. Management by objectives means target-oriented management. Yes, wherein we are giving target to our employees. Suppose I am telling, okay, in 1 hour, do 15 ITR. Yes, what Deming is telling is management by objectives is leading to production of poor quality goods or services. Suppose you are giving target to your employees, telling, okay, in 1 hour, yes, you should do 100 units. It may be possible that because they have to produce that output, they are, yes, resorting to producing goods which are of inferior quality. We don't want that. So eliminate management by objectives. Remove barriers to the pride of workmanship. Yes, for a worker, the pride of doing the work is everything. You should never take away that pride. Yes, if there are any barriers, you should remove that. Just a simple example, I am doing my articleship. Okay, so I have done all. Yes, a very difficult audit was there. I have done it completely. Yes, start to end, I have done. Yes, even the report completely I have done. Yes, I have given it to my senior. My senior is showing to all partners. He is telling that he has prepared. Every work I have done. Yes, I had the pride telling yes, it was one of the difficult client. I have done it. But he has taken that pride of workmanship, pride of doing that beautiful work away from me. Yes, by showing to people that he has done the work. Yes or no? So it should not be there. Only then, yes, when employees are coming up with suggestions, yes, that suggestion should reach the top management by that concerned employee only. Only then they'll be having that pride. You should not be removing those pride. Is it clear? Yes, then we are telling transformation is everyone's job. Everyone should try to transform. Again, yes, as a management, we should try to institute education and self-improvement. Yes, again, finally, improve constantly and forever. Okay, look at this. You guys can revise 1 or 2 times. Yes, you will remember it. Leave us, yes, in our regular course. Yes, we ensure that students do not forget. Yes, challenge is try forgetting if possible. Okay, yes, that many number of times we keep revising. However, because it is a quick revision batch, we are not in a position to do it that many times, but still we'll do it 1 or 2 times. Yes, we have told, yes, Tabish loves football, but the sad part is, yes, temporarily TEMP, we had to say rest in peace to football. T, yes, management, transformation is everyone's job. E stands for education, institute education and leadership. M stands for management by objective, eliminate management by objective. P stands for philosophy, adopt the new philosophy. R stands for remove barriers to the pride of workmanship. I stands for improve constantly and forever. P stands for purpose, have constancy of purpose. This way, we've remembered 14 points of TQM. Yes, let us try to revise one final time, students, then we'll proceed ahead. Now look at this. Deming has given 14 points. Raw material 2 points. Yes, C is a dependency on inspection. There is no inspection. One raw material, one supplier. Okay. Labor. Tabish loves football, but the sad part. T. T is training on the job. Institute on the job training. L stands for leadership. Institute leadership. Yes. F stands for fear amongst employees. Drive out the fear. B stands for barriers. Break down the barriers between the department. S stands for slogans. Eliminate your slogans. Again, management, temporarily rest in peace. T stands for transformation. Transformation is everyone's job. E stands for education, institute education. Yes, M stands for management by objectives. Yes, eliminate your management by objectives. P stands for philosophy, adopt the new philosophy. R, remove barriers to pride of workmanship. I, improve constantly. And P, have constancy of purpose. Is it clear, everyone? So, we have discussed 14 points by Deming as well. Yes, now we are having PDCA cycle or Deming's wheel. See, all this was again more of philosophy. TKM as a concept itself is philosophy, students. There is nothing much practical here. Again, this is a theoretical concept. From your examination, a theoretical question may be there. Yes. Now, PDCA cycle or Deming wheel, he is telling us how do we see that whether we are continuously making improvements or not. He is telling 4 things you have to do. Plan, do, check, act. PDCA, which is also called as Deming wheel. Wherever you want, you can do it. Yes, you have to, yes, study for, say for example, in the next last month before examination, you are making a plan. 300 hours I am going to study. Then actually do. Yes, you study. Yes, then you are checking how many hours you have actually studied. You are in a position to study only for 250 hours. Then you analyze why you are not in a position to study for 50 hours. Probably, yes, you are telling India-Pakistan game was there. How could I ignore? Yes, too many other things are there. So, plan, do, check, act. Is it clear, everyone? Yes. And finally, yes, there are some criticisms for TKM as well. Yes, what the criticizers are telling, obviously for everything there is going to be criticisms. Yes, they are telling, yes, there is excessive focus on documentation. Yes, in everything we are focusing on documentation. When you excessively focus on documentation, you sometimes forget that, the focus, the ultimate thing is not documentation, but to do the work. Sometimes it happens, okay? Sometimes people complain, okay? Sometimes in your articleship, yes, too many checklists. It sometimes feels as if, we are not doing audit, we are just filling checklist. Documentation, too many documentation we are doing. Yes, they've given SOPs for everything, but we are just ensuring that we are complying with SOPs. We are not coming up with something different, something value addition. Okay, excessive focus on documentation could be possible. Again, they are telling emphasis is on quality assurance rather than quality improvement. We are focusing only on quality assurance. Telling, okay, yes, all these SOPs have been fulfilled. We are not trying to improve the quality, add value. Again, they are telling it may not be suitable for service-based industries. Why? Because in TKM, what we do is we come up with a standard, with a SOP, with a standard for everything. In service-oriented industries, it is not necessary that SOPs will work because every service could be customized. Yes or no? Goods you are manufacturing. Yes, you are manufacturing a bottle. Every bottle production is same. So you come up with the best operating procedure, you standardize, you ask everyone to implement. It's fine. However, you are doing service. Say for example, you are doing audit. Yes, every audit is different. So you cannot come up with a standard way telling, okay, 1, 2, 3, 4, 5 only I am going to do. Every business, yes, is going to be different. So based on that, every audit is going to be different. Yes or no? So you cannot implement TKM to service organization. Again, they are telling ways in which TKM investment can be made. Yes, you can fine tune your product mix or you can fine tune your processes. You can empower your employees. You can improve your top management commitment to quality. You can ensure customer satisfaction. All these things are there. This is a point which is taken from a question. It is not there in the textbook. Okay, is it clear, everyone? Yes, so should we continue, students? Everyone. Yes, thank you so much for all your love and feedback. Yes, I've got, yes, super response. Thank you so much again for the, yes, unique mnemonics as well. Thank you so much. Should we now move to the next concept, students? Should we move to the next concept, everyone? Yes. Okay, so the next concept that we have is business excellence models. Now try to understand, students. This is also, yes, a technique which is coming under quality management. So the first question is, what is the difference? Yes or no? First you have told cost of quality, then you have told TKM, then you have told business excellence. So what is the difference? Now try to understand, students. Quickly I'll explain. Yes, my cost of quality was a practical concept. Yes or no? It was a calculation. Yes, it was telling my goods or services should be defect free before they reach my customer. Fine. Yes, TQM was more of a philosophy. Yes, they are telling my goods should be defect free the very first time they are produced. The very first time they are produced, my goods should be defect free. That way I should work on my processes. Okay. Ultimately, if my goods are defect free, who will be happy, students? If my goods are defect free, who will be happy? If my goods are defect free, who will be happy, students? Which stakeholder will be happy if my goods are defect free? My customer as a stakeholder will be happy. Yes or no? What is business excellence model telling? Business excellence is also a philosophy. It is telling, yes, my customers should be happy. There is no doubt about it. Customer is an important part of my business. Customer should be happy. But customer is not everything in a business. A business is much more than customer. There are too many other stakeholders as well whom I need to satisfy. So what business excellence is telling is all my stakeholders should be happy. Business should be run in such a way. Here TKM was telling business should be run in such a way that ultimately my customers is happy. Business excellence is a much wider term. It is telling, yes, business should be operated in such a way that all my stakeholders should be happy. So what we should do in everything we are doing, we should achieve excellence in everything we are doing. Now, say for example, I am running a business where my customers are happy, but my employees are not happy. Say for example, few years back it happened with Tesla. Yes, very bad working conditions. Yes, very serious working conditions. Yes, work week. Yes, there was no work-life balance. All those things were there. So customers are happy. But overall, whether all my stakeholders are happy? No. So have we achieved excellence in everything we are doing? Whether all my stakeholders are happy? No. Yes, suppose I am telling one more company we have started. Say for example, we are producing cars. Yes, best quality cars. Customers are very happy, but yes, every car is sold at a loss. Whether my shareholders are happy? Can I survive for the long run if my shareholders are not happy? Can I survive for a long run? Can I run for a long run? Nobody is willing to invest money. Everybody is willing to purchase goods, but nobody is willing to invest money. Yes, can I survive for a long run? No. So I am telling, yes, business should be run in such a way that not just customers. Yes, customers should be happy. There is no doubt about that. But all my stakeholders should be happy and satisfied. In that way, I should run my business. Yes, that is my business excellence model. Is it clear, everyone? Yes, in very simple terms, yes, from my TQM, I am coming to business excellence model. Yes, TQM told that my customers should be happy. Business excellence is telling that all my stakeholders should be happy. Yes, is it clear? So, now look at the students. Yes, again, one more thing is there, students. Now, TKM is telling, see, I should be producing defect-free goods and ensure that customer is happy. Customer will be happy today. Tomorrow, it is not necessary that customer will be happy again. Say, for example, just to give you a very simple example, students, Airtel. Yes, till 2016, everybody was happy with Airtel. Yes, best quality. Yes, data service they were giving. Okay, prices was also reasonably fine. Best service was there. Best connectivity was there. Everywhere you were getting your calls. But 2016, yes, TKM they had implemented. Everything was defect free. Everywhere they were getting network. Everything was there. But all of a sudden, Jio entered the market. Yes, they came up with a complete market disruption. What happened? Everyone all of a sudden overnight started hating Airtel. Yes, they looked at Airtel as a villain. Yes or no? So what business excellence is telling? Yes, again, I should focus on my customers, but my customers should be happy today also, even in future also. That means I should be ready for market disruptions. It is not just that I will be happy with whatever I'm doing. I should be ready for market disruptions. Nokia, yes, iPhone came, Nokia completely went off. All Nokia phones were perfect quality, but what happened? Market change, market disruptions. They were not ready for that. So business excellence is making me ready for the market disruptions as well. Is it clear, everyone? So what is business excellence? Look at the students. It is a philosophy. It is a philosophy. Yes. Here what we are doing, yes, to develop and strengthen management systems and processes. Yes, here we are trying to develop and strengthen the management systems as well as processes. Why? So that organization can improve the performance, create value to all stakeholders, and achieve excellence in everything that organization is doing. Look at the students. It is a management philosophy. Okay, what we are doing, we are trying to develop management systems and processes. We are trying to strengthen my management processes. So why we are doing this? So that organization can improve the performance, okay, create value to all stakeholders, and achieve excellence in everything that the organization is doing. Is it clear, everyone? Now, few common business excellence models which are there worldwide. So let's see few common business excellence model. Yes, first I have my Japan Quality Award model, Australian Business Excellence Framework. Yes, we have a mnemonic JABSE. J stands for Japan Quality Award model, A stands for Australian Business Excellence Framework, B stands for Baldrige criteria, S stands for Singapore Business Excellence Framework, E stands for EFQM model. Okay, JABSE. Yes, there is a song in Hindi. Yes or no? JABSE tere naina. Yes, so you can remember it that way, JABSE. Okay, now the most important 5 models are there. In that, the most important one for us from the examination perspective is EFQM model. Now let us try to understand EFQM model. Everyone pay attention. EFQM excellence model. Yes, what is EFQM standing for? EFQM, European Foundation for Quality Management. Yes, it is one not-for-profit organization. Yes, they have come up with EFQM model, European Foundation for Quality Management. Yes, they are telling, yes, how we can achieve a business excellence. Ultimately, business excellence is a model. Every person comes up with their own model telling, okay, how to achieve excellence. Okay, yes. Now, what EFQM helps us to do is, yes, it helps us to achieve excellence by giving primary importance to customer needs and taking a long-term stakeholder-centric way. Yes, we are giving primary importance to our customer needs. Main focus we are paying to our customer needs, but at the same time, we are also taking a long-term stakeholder-centric way. This way, we try to achieve excellence in our organization. Now, structure of EFQM model, students. Yes, EFQM model is divided under three different modules. Module 1 is the direction, that is why. Module 2 is the execution, that is how. Module 3 is the result, that is what. Just stick with us. We'll ensure that you guys can understand and remember all this. Yes, don't worry, that's a promise. Yes, now, any goal you are doing, yes, three things you have to do. Suppose I am telling, yes, I want to become a CA. Now, three questions I have to answer. First is why? Why should I do CA? Yes, so suppose I am telling, yes, I have to become financially independent. Yes, I have to, yes, earn respect in my family. Yes, I have to take care of my parents. Yes, that gives me the direction to do the work. My why gives me the direction to do the work. Is it clear, everyone? Yes, that gives me the direction to work hard to become a CA. Yes, so I have got my why. Yes, why I should become a CA. Second question is, how will I become a CA? Yes or no? That is my execution part. Yes, how will I actually execute? How will I actually become a CA? Okay, I have to, yes, go for classes, I have to do self-study, I have to give mocks, I have to do revision, all of that. That is my execution part. How am I going to do it? Finally, yes, I've become a CA. What will I ultimately get by becoming a CA? Yes, I've got the name, fame. Yes, I ultimately wanted to marry a girl of my dream. I've done that. Possible. Yes or no? Yes, I've become financially independent. I'm now in a position to take care of my family. Yes, it is the ultimate result that we are getting. So any goal, three things. First is why we are doing, that gives us the direction. Second is how we are going to do that, that is the real execution part. Finally, what result I'll be getting, that is the result part. Now look at this on a timeline. Yes, first I'll be having my why, that gives me the direction. Then how am I going to do it? Yes, that is my execution. And finally, what I've got by doing it, that is the result. Now look at this, students. EFQM model also has three modules. First module is the direction, that is the why. Why am I doing this? Second is my execution. How am I going to do this? And finally, I have my results. What will I get by doing this? Is it clear? Now, under each of these, separate set of points are there. First, let us try to understand it with the help of a very simple example, students. Yes. Now, everyone, yes, pay attention, students. Yes. First module, I am telling direction, that is the why I am doing EFQM model. Suppose I'll give it with the help of a simple example. Suppose we are Dinga Motors. Okay, yes, we have started our own car manufacturing company, Dinga Motors. Yes, what was the purpose? What was the vision? Why we have started this? Yes, we wanted one car for every home. That has been a long dream of mine. So for that, we have started a car company called as Dinga Motors Limited. Now, that is my purpose. So what we are telling is we should achieve excellence in our business. But while we are achieving excellence in our business, firstly, we should begin with our why. We should begin with our purpose, with our vision. Suppose I am telling, okay, I am Dinga Motors. What is my objective, students? I want one car for every home. Yes, so can I come up with a strategy of product differentiation? Can I tell, yes, I am going to sell, yes, very high costly cars in the range of 1 crore rupees. Can I do that? Yes, for that best quality features we will do, best equipments will give. Is it possible? No. I should come up, obviously I should come up with a low cost strategy, because ultimately my objective is, yes, one car for every home. Yes or no? So what I'm telling, firstly, I should see what my vision is. Based on that, I should come up with a, yes, plan to achieve my excellence. So that is my purpose, vision and strategy. Okay. Next I'm telling, okay, once you have seen your vision, based on that you have set your strategy. Also see the organizational culture and leadership. Now, EFQM model, in a reality, yes, it is a not-for-profit organization. There are going to be advisors. Okay, you have become a CA, you can also, yes, give their examination. You can also become an advisor for EFQM. Yes, what they will do is, yes, they will go to our organization. They will audit the complete process, how things are working there. They will come up with a report telling, you know, how we can implement EFQM. So, while they are preparing their report, coming up with the changes, with the suggestions, with the recommendations, firstly, they have to see what is the vision and strategy of the organization. Secondly, they should see the organizational culture and leadership. How leadership is there. Suppose leadership is not dynamic. Yes, leadership is not ready for change. They are telling, no, we are not going to change at all. Can we ever come up with excellence model? Can we ever come up with any changes in the organization, students? It is never possible. So before we implement, yes, this is before we implement business excellence, before we implement, We should first see what is the vision of the organization. In that line, we should come up with an excellence model. Secondly, we should see how the culture is there. If culture is not ready for change, first we should ensure that the culture is ready for change. Only then we'll be in a position to implement business excellence model. Is it clear? 2 points, remembering, leave it on me. Yes, we'll do that, don't worry. Yes, so first I've told, yes, it is my vision. Next I've told, I have my organizational culture as well as the leadership. Yes, I've seen that. Now, how do I achieve excellence? Suppose Dinga Motors, yes or no? Yes, everybody is telling, yes, what we should do to achieve excellence. First, engage your stakeholders. Call all your stakeholders and ask them what is it that they want. So I called a meeting of all my stakeholders. Yes, I tried asking what is it that they want so that their needs, their demands are satisfied. Yes, everybody came up with an idea telling, okay, recently electric vehicles is the trend of the hour, so we should also come up with electric vehicles. Yes, I've engaged my stakeholders. They have given me input saying, yes, what is it that they want? So the advisor, yes, engaged all the stakeholders. He got to know that, okay, we should come up with electric vehicles because, yes, we are getting ready for the future. Fine. Yes, I've engaged all my stakeholders. Yes, then now I've got an idea telling, okay, I should come up with electric vehicles. Now what I should do? I should drive transformation. Yes or no? I should drive transformation. Currently we are producing only manual cars. Yes, only petrol driven cars. Now I should come up with the transformation and ensure that I am coming up with the infrastructure necessary to produce electric cars. So I should drive a transformation, and based on that I should try creating sustainable value. Continuously I should keep making improvements so that I can achieve sustainable value. Is it clear? Execution, what I'm going to do, students, firstly I will engage all my stakeholders, ask them what they want. Based on that I will drive transformation. Based on that I will try to create sustainable value. Finally, what results I will get? Yes, I've come up with electric vehicles. Yes, I've brought about a change. Yes, what are all the results I will get? Firstly, I will see my strategic and operational performance. Operational means current period profit. Strategic means long-term profit. Yes, I will see, yes, because of implementing, yes, electric vehicle, what happened to my current profit? Whether my current net profit has increased. If it has increased, that means, yes, it is having a positive impact. Strategic, from a long-term perspective, how is it going to be? From a long-term perspective also we are telling, okay, it is having a good impact because electric vehicles anyways is the, yes, need of the hour. Yes, strategic and operational performance is over. And finally I will see, yes, all these things, why did I do? Because I wanted to bring about a change in the minds of my stakeholders, because I wanted to satisfy all my stakeholders. I will see how is my stakeholder perception after I have come up with the change. Yes, I have begun this, yes, to engage my stakeholder to satisfy. Finally I will see whether I am in a position to satisfy my stakeholders or not. Is it clear, everyone? Yes, now look at this, look at this, look at this. Yes, we will remember, we will revise, don't worry. Yes, leave it on me. Yes, so EFKM model, three modules are there. EFKM model. First is module 1, that is the direction, why am I doing? Second part is how, that is the execution. Finally is the results, what will I get? Yes, direction, why am I doing it? Firstly, I'm telling, keep in mind the vision of the organization. Yes, look at the organization culture. Based on that, come up with suggestions, come up with excellence, come up with changes. Okay. Now, execution, when you're planning to come up with changes, firstly, engage all your stakeholders. Know what they want. Based on that, you come up with the changes. Okay. Yes, once you've engaged your stakeholders, based on the recommendations you've got, drive a transformation. Once you've driven transformation, yes, ensure that you are creating sustainable value. It should not just be a one-time change. Continuously, you should try, yes, engaging your stakeholders, yes, making them happy, coming up with better and better alternatives. Fine. Finally, the results, whatever we're going to get. Firstly, we see what is the strategic and the operational performance. And finally, we'll see how is going to be our stakeholder perception after the change. Is it clear, everyone? Yes. Now, yes, same thing is being written here. Now for you guys, yes, to remember this, yes, again, our own creation. Yes, our next song, students, everyone pay attention. Yes, so remember, yes, this is going to make your remembering process very simple, very easy. Pay attention, students.
EFQM मॉडल है, डायरेक्शन है, एग्जीक्यूशन है, रिजल्ट मिल जाए तो फिर तो एवरीथिंग इज परफेक्ट है. आना से उन्हें आया, दिल बांग बांग मेरे टकराया, खागा बोल के दस जावे, बावा क्यों दी चोरी नो. पर्पस कल्चर देख के स्टेक होल्डर्स को एंगेज करो, ट्रांसफॉर्मेशन ड्राइव करो, सस्टेनेबल वैल्यू ले आओ, तो परफॉर्मेंस और परसेप्शन इंप्रूव करो. हाँ बनी मनैया दी गल बात की वे होवे आ जावे दिल तेरा पूरा भी ना होवे
Yes, how was it, students? Yes, anyways, we cannot ignore these items. Why not try and make it interesting? Yes, make it simple for us to remember. Now look at this, students. EFQM model है, direction है, execution है, result मिल जाए तो फिर तो everything is perfect है. Okay, then there is that one more line which is coming. Okay, then purpose culture देख के stakeholders को engage करो, engage your stakeholders. Yes, transformation drive करो, drive transformation and performance. Sustainable value ले आओ, create a sustainable value to performance. Yes, you'll be getting your operational and strategic performance or perception improve karo. That is, yes, change your stakeholder perception. Is it clear, everyone? Yes. Okay. So this was your EFQM model. This way you guys can remember your EFQM model. Yes. So now next we have radar, which is an assessment tool for EFQM. Yes, how do we see if we have EFQM is achieved properly or not? They are telling radar approach. What is radar? R stands for result, A stands for approach, D stands for deploy, A and R stands for assess as well as refine. Suppose I want to achieve a goal. Say for example, I have to clear CA final. Yes, we are telling first begin with your final result. What you want to achieve? I am telling I want to achieve CA final. Yes, I have to clear CA final exams. Okay. For that, what is the approach you have to implement in order to get your results? Say for example, I am telling, yes, the approach I am going to implement is I am going to class for every subject plus self-study plus mock test plus 3 rounds of revision. This is the approach I have kept in mind. Yes, first day one I will think what result I want. What result I want. Again, I will think to achieve the result, what approach should I implement? Yes, I have set in mind, okay, class I am going to attend, proper self-study I am going to do, 3 rounds of revision, mock test also I will give, all of that I have done. But in a reality, you should execute also, right? Yes, in a reality, you should deploy your resources. Actually, you should try and do that. Actually, you should listen to the class. Yes, do your self-study. Yes, give your mock test, do your revision. And assess and refine wherever you are feeling, some changes are needed, possibly, your plan did not go the way you wanted, so you have to come up with alterations, changes. Yes, you should be ready to assess as well as refine. Is it clear? Yes, you guys can read it one time. Yes, it will be clear. Yes, now finally, you have uses of EFQM. Yes, not that important. Yes, you can just read it one time. Okay, it gives a holistic view of the organization's operation. Yes, it brings agility, preparedness for change. It helps us to achieve our long-term vision, because ultimately we are starting based on our long-term vision. It helps us to achieve a transformation, helps us to change the organization, creates a positive brand image. Yes, helps us to achieve popularity. Yes, we have given a small mnemonic as well. Halt, macha, halt. Yes, if you focus on brand image, you will be getting popularity. H stands for holistic view, A stands for agility, L stands for long-term vision, T stands for transformation. Yes, brand image as well as popularity. Okay, yes, we are not explaining things in very much detail, students, because we are lacking the time. Okay, I know you are having very less time for your examination, so keeping that in mind, yes, we are doing. Everyone? Okay. Now, we are also having one more thing, students, which is the Baldrige criteria for performance excellence. Now, yes, we have discussed 5 different business excellence model. Yes, Japan, Australian, Baldrige criteria, Singapore, as well as EFQM. So, for us, what we are having in our syllabus mainly is EFQM model. But about Baldrige criteria, one simple paragraph is given. Yes, I'll explain you what they are telling. Yes, see, there are 7 categories of Baldrige criteria. Now, we have to achieve excellence. In order to achieve excellence, what we want, students? Suppose we want to achieve excellence, we want a leader. Yes or no? We want a proper good leadership. Now, what a leader will come up with? Say, for example, I am telling, yes, I am taking over Kingfisher Airlines, which is a completely gone company. Yes or no? Now, I want to, yes, completely restructure that. What I want? Yes, I want a proper leader, a very good, strong leader who can achieve excellence. Okay. What leader will come up with? Leader will come up with a strategy in order to, yes, achieve the desired result. Fine. Yes, if he comes up with the strategy, if we implement the strategy, what we will get? we will be getting our desired result. Finally, I'll be getting my result. Okay. Now we are telling while we implement our strategy, few things have to be kept in mind. What all has to be kept in mind? Firstly, we should measure, analyze the knowledge management. We should first measure and analyze what is the existing knowledge that our people are having. Where I am standing right now, I have to come up with a strategy. Yes, when I'm coming up with my strategy, I should first see where I am standing right now. Measure, analyze the knowledge, the expertise, the competence of your people, your processes, your systems right now where we are having. Okay, based on that only come up with a strategy. Suppose I'm telling, yes, right now I'm not technologically advanced. I cannot come up with a strategy telling, yes, I'm going to build my own website. I'm going to convert everything into e-com business. Yes. So first I should see where I am standing. Yes. Next I should see, yes, where I want to reach, what my customers ultimately want. Okay, where I am standing, measurement, analysis and knowledge management, where I want to stand, what my customers ultimately want. For that, what all I should do? Yes, I should come up with changes in my workforce as well as my operations. I should come up with changes in my workforce. I should give training to my employees, change the composition of my employees, get in more experience, more trained workers. Yes, come up with changes in my operations. Yes, make more machine oriented, more technology driven operations. And finally, what results I am getting. Okay, just in short, I have told, yes, firstly, we want a leader. Leader will come up with a strategy. Yes, while you're coming up with a strategy, keep in mind, yes, measurement, analysis, and knowledge management, where my people are standing right now. Next, what my customers ultimately want. What is it my customers want? To achieve that, you should come up with changes in your workforce as well as your operations. Finally, you've implemented your strategy. What is the ultimate results that you've got? Is it clear, students? With this, our business excellence model is over. Is it clear, everyone? Should we continue? Should we continue? Should we continue to the next concept, my dear students? How's the Josh? Okay, so now let's do one thing, students. Let us move to the next concept. We've already discussed three concepts, students. I've told quality management, three concepts we've discussed. Cost of quality, it's a practical concept. It is telling goods should be defect free before they reach customer. Yes, TQM, philosophy, it is telling goods or service should be defect free the very first time they are produced. Business excellence, it is telling goods should be defect free, that is there. But my objective is not just to make my customers happy. All my stakeholders should be happy. All my stakeholders should be satisfied. And business should achieve excellence in everything that it is doing. Is it clear, everyone? Yes. Now we have the next concept, which is theory of constraints and throughput accounting. Yes, in a very simple one line, if I have to tell what is theory of constraints and throughput accounting, it is my limiting factor amongst my limiting factors. What is it, students? It is my limiting factor amongst my limiting factors. So many limiting factors are there. In that, which is my most, yes, limiting factor, that is my constraint. Now look at this. Just in a simple example, the complete concept will be clear, students. Yes. Company wants to produce a product A, whose demand is 2000 units. Yes, 2000 units is needed. I'm thinking, okay, 2000 units I will produce. But total raw material which is there with me is only 9000 kg. Only 9000 kg raw material is there. That means to produce 1 unit, I want 10 kg raw material. That means how many unit of finished goods can I produce, students? To produce 1 unit of finished goods, I want 10 kg raw material. I'm having only 9000 kg raw material. I'm having 9000 kg raw material. Yes, so how many? You want a small break? Do you guys want a small break? We'll do one thing. After theory of constraints, it's a small concept. We'll give a small break of 5 minutes. Is it fine? Then, yes, we'll take a small break of 5 minutes. We'll come back. We'll finish off supply chain management as well as gain sharing and outsourcing. Is it clear, everyone? This is just a small concept. 5 minutes, it will be over. Don't worry. Okay, now what I'm telling, see, 2000 units I want to produce. My finished goods requirement is of 2000 units. However, raw material which is available with me is only 9000 kg. To produce 1 unit, I want 10 kg raw material. I'm having only 9000 kg raw material. That means how many unit of finished goods can I produce, students? Maximum only 900 unit of finished goods I can produce. So whether my raw material is limiting factor? Yes, raw material is limiting factor. To produce 2000 unit of finished goods, I want 20,000 kg raw material. I'm having only 9000 kg raw material. Material is limiting factor. Fine. Based on material, I can produce 900 unit of finished goods. Labor hours available is 4000 hours. To produce 1 unit, 5 hours is needed. Okay, to produce 1 unit, 5 hours is needed. I'm having 4000 hours. So in 4000 hours, how many units can I produce, students? 800 units can I produce. Can I fulfill my complete demand of 2000 units? No. Labor is also a limiting factor. Yes or no? Yes. Material is also a limiting factor. Labor is also a limiting factor. Now look at machine hours. Yes, total machine hours which is available with me for that period is only 3000 hours. Machine's capacity is only 3000 hours. In 3000 hours, how many units can I produce, students? To produce one unit, 6 hours is needed. That means if I'm having 3000 hours, maximum 500 units can I produce. So whether machine is also limiting factor? Yes, machine is also limiting factor. Now raw material is also limiting factor, labor is also limiting factor, machine hour is also limiting factor. Now based on raw material I can produce 900 units, based on labor I can produce 800 units, based on machine hour I can produce 500 units. Raw material is also limiting factor, labor is also limiting factor, machine hour is also limiting factor. All three are in shortage, but which is that factor which is in most shortage, which is in most shortage? Yes, which is that factor? Yes, which is in most scarcity, students? Is it my raw material? Is it my labor? Is it my machine hour? Which is that factor which is in most scarcity, everyone? Yes, which is my factor which is in most scarcity? Yes, very much scarce. Which is that factor, students? It is my machine hours, yes or no? Because based on raw material, yes, 900 units raw material is available with me. But yes, labor, whether labor is available for 900 units? No, labor is only available for 800. So 800 I can produce. Yes, machine is not even available for 800. Yes, material is available, machine is available only for 500 hours. That means all three are my limiting factors. All three are my limiting factors. Material is also limiting factor, labor is also limiting factor. Yes, machine hour is also limiting factor. In this, which is my bottleneck? Which is my bottleneck, students? Which is my bottleneck? Which is my constraint? Machine hours is my bottleneck or my constraint. Yes, it is my limiting factor amongst limiting factors. See, material is limiting factor, labor is limiting factor, machine hour is limiting factor. Amongst these limiting factor, which is my, yes, limiting factor which is most scarce? It is my machine hours. That is my bottleneck. Is it clear? In simple term, it is my limiting factor amongst my limiting factor. 1, 2, 3, 4, 5 limiting factors are there. In that which is most scarcity, that is my bottleneck or that is my constraint. Is it clear? Yes, bottleneck. Why we are telling bottleneck? If you have looked at a bottle, yes, the neck is going to be slightly small. We are telling this is what machining is for us in this particular case. Look at this. Raw material is available for me for 900 units. Raw material is available for 900, so I can produce 900. But my labor is only for 800, but my machine is only for 500. So ultimate output I'll be getting is only 500. Is it clear? This is my, yes, bottleneck. This is my limiting factor. Is it clear, everyone? Same calculation is done. Now look at this. What is a bottleneck? It means any process which slows down the overall speed of production. Any process which is slowing the overall speed of production is called as bottleneck. Yes, it is a resource whose availability is minimum when compared to all other resources. When I'm comparing it to all other resources, yes, a bottleneck is such a resource whose availability is very much in minimum. It can also be said as limiting factor amongst my limiting factors. A bottleneck is a limiting factor amongst my limiting factors. So many limiting factors are there. In that which is my most limiting factor, that is my bottleneck. Now, yes, Goldratt and Cox, these are the two people who have advocated, yes, the concept of theory of constraints. Yes, they have come up with a new approach for production called as optimized production technology. Till now, what we were thinking, students, we were thinking that we should be producing maximum, whatever maximum is possible, we should be producing that. That is what we were thinking. But Goldratt and Cox are telling, no, it is wrong. You should focus on optimized production. So we are asking, what is this? What on earth is this optimized production? He is telling, yes, firstly, you bifurcate your resources as your bottleneck, non-bottleneck. I am telling, fine. Then your bottleneck resources, utilize it 100%. However, non-bottleneck resources, don't utilize it 100%. Yes, if you utilize it 100%, it will lead to unnecessary work in progress inventory. Now, let's try to understand it with the help of the same example, students. Let's see where that example is there. Just a minute, students. Yes, it is there here. Now look at this, students. Yes, I had 3 different processes. One is my raw material. Yes, firstly, yes, I should get my raw material. Based on that, employee should work on that. Based on that, machining should be done on that. Based on that, output I'll be getting. Now material, yes, I can get my material for 900 units. Yes, based on that, my labor, my employee can work for 800 units. but whether my labor should work for 800 units. Previously, what was my production technique? We were telling maximized production technique. Produce maximum, raw material maximum, how much you can get? Yes, use that. Labor maximum, how much you can work on that. Machine maximum, how much you can do that. But here what you are telling, yes, if you work on 800 units of labor, okay, 800 units output you will get here. Yes, but only 500, only on 500 units machining can be done. That means 300 units will still be lying as work in progress here. Yes or no? So it is going to unnecessarily lead to work in progress pile up. On that I've incurred my cost, carrying cost, all my cost that I've incurred is going to become a waste. So what we are telling, you should go for optimized production. What is optimized production? Goldratt and Cox are telling, first bifurcate your resources as bottleneck, non-bottleneck. Okay, I've bifurcated. Bottleneck utilize 100%, maximum you utilize. However, non-bottleneck don't utilize 100%. Yes, you utilize it based on the capacity of your bottleneck. Here my capacity of bottleneck is 500. That means non-bottleneck utilization should also be 500 units only. Is it clear? This is what my Goldratt and Cox have told. Is it clear, students? Yes. Now, theory of constraints or throughput accounting, two things are there. First is how do we identify bottleneck? Second is once we've identified bottleneck, how do we try to maximize the profit? Now, how to identify bottleneck is not there in our syllabus. However, in the regular batch we have explained, but for us from examination perspective, not important. Now, once we have identified bottleneck, how do we try to maximize profit? Now, look at this, students. Very simple example I am giving. With this example, we will try to understand. Company is producing three different products, X, Y, Z. Yes, we are telling time is the bottleneck. Yes, I am not having sufficient time to produce the goods. Generally, in all our case, time will only be the bottleneck. Yes, the budgeted factory cost for the period is 2,21,600. For the period, factory cost is 2,21,600. Bottleneck resource time. Yes, in the period, how much total time is there? 75,120 minutes is there. Additional data is given. Selling price is given. Material and other variable cost except labor is given. Bottleneck resource, that is the time, is given. Now look at this, students. Simple will do. Yes, rank the products based on product return per minute. I should be calculating the product return per minute. How do I calculate, students? Product return per minute. Simple. First I will calculate what is the return. I will divide by minutes. I will be getting my return per minute. Now what is my return? Sales minus variable cost. Yes or no? So look at this, what I am telling. First I will do my selling price minus variable cost. I will be getting my contribution. Yes or no? 60 minus 24, 42. Similarly, I have got my contribution. Yes, this is the contribution per unit. Now see, from your calculation perspective, it is as good as your limiting factor only. I will not be taking a decision based on contribution per unit. I was taking a decision based on contribution per limiting factor. So here also same thing I have to do. Here my time is my limiting factor. So I will not be taking a decision based on throughput contribution per unit. I will be taking a decision based on contribution per minute. Now look at this, very simple. How do you get your return per minute, students? How do you get your return per minute? Now if I am producing X, I am getting a contribution of 42. Selling price is 60. Look at this, selling price is 60. I have got variable cost is 24 I have paid. That means net how much I am having? 42 is my contribution. To get this 42, how much time should I work, students? I should be working for 15 minutes. That means per minute, effectively how much I am getting? 42 I will get in 15 minutes. That means per minute I am getting 2.8 rupees. Yes, this is my contribution per limiting factor. In this case, contribution per bottleneck resource. Yes or no? Look at this, product return per minute. Same thing we have done. Now look at this. Yes, selling price minus variable cost gave me contribution per unit. I have divided by the limiting factor per unit. I have got my contribution per unit. Only few terms have changed, students. Now look at this. Selling price minus variable cost. When you are reducing your variable cost, you should reduce all your variable cost except labor cost. Because in theory of constraints, Goldratt and Cox, they assume that yes, my employees are permanent in nature, so I will be paying them fixed salary, so their cost will not be coming as variable cost. Is it clear? Yes, we will not get into details about the proper explanation logic. Yes, they are telling okay, my labor cost will not come under variable cost, it will come under my fixed cost, that is my factory cost. Okay, I will be getting my contribution. So here my contribution I will be calling it as throughput contribution per unit. Okay, but I am not taking a decision based on contribution per unit. I am taking a decision based on contribution per limiting factor. Now generally for me, yes, my limiting factor will be time. Generally it will be given in the form of minutes. So what I will do? I will do throughput contribution per unit divided by time per unit. I will be getting my throughput contribution per minute. That is my product return per minute. Is it clear? I've got it as 2.8, 3 and 2.5. Now based on this, if I have to give a ranking, for which product I will give first ranking, students? Y. Second ranking is X. Third ranking is Z. Is it clear? Till here, any doubts, students? Nothing new we have done. Nothing new we have done. The only thing we have done is same thing only we have repeated. Selling price minus variable cost. However, variable cost except labor. I've got my contribution per unit. I've called it as throughput contribution per unit. Yes, I've divided it by my limiting factor. Here it is my bottleneck resource. Generally it is time. I've got my throughput contribution per bottleneck resource. Now it is going one step beyond. From here there is a small change, students. Pay attention. Yes, my theory of constraints is going one step beyond. Now what is this telling me? Yes, it is telling me if I produce 1 unit of X, effectively I am getting 2.8 per minute. Yes or no, everyone? Look at this. If I am producing 1 unit of X effectively, per minute I am getting 2.8 rupees. Fine. However, to get this 2.8, which all cost I have considered? I have just done my selling price minus my variable cost. So I have just done this calculation based on my contribution. In reality, I am not just incurring variable cost, I am incurring fixed cost as well. So I will be seeing for 1 minute how much return I am getting, and for 1 minute how much fixed cost I am paying. Yes, say for example, I am telling for 1 minute, effectively return I am getting is 2.8. For 1 minute, this is per minute. For 1 minute, my fixed cost is 2.5. So will I tell overall it is profitable? Yes, I will tell overall it is profitable. Yes, how much I am getting more than my fixed cost? I will tell it is my return per minute divided by factory cost per minute. Yes, I am getting 2.8. Every minute I am getting 2.8. Yes, however, every minute effectively I have to incur 2.5 rupees. That means I am getting, yes, 1.12. That is 112 times of my cost I am recovering. 112 times of my cost I am recovering. 1.12 times of my factory cost I am getting every minute. However, I am telling, yes, 2.8 for 1 minute I am getting as contribution. My variable cost is already reduced. However, per minute my fixed cost is 3 rupees. So, am I in a position to recover my complete cost to students? No, per minute my cost is 3 rupees. I am only getting 2.8. That means I am only recovering 93.33% of my factory cost that I am incurring. Is it clear? So, theory of constraints is going one level beyond my limiting factor. Limiting factor ended the story in contribution. Yes, it has went till contribution. Per limiting factor it is telling, okay, per limiting factor, yes, how much contribution I am getting. But what theory of constraints is telling? Yes, contribution I have got, but from this contribution I should be incurring my fixed cost as well, factory cost, what they are calling it here as well. So I will be seeing overall, am I in a position to recover my factory cost also or not? Now for that, yes, I have got my return per minute. So I also want my factory cost per minute. Now look at this, students. What is question telling me? Yes, question is telling me factory cost for the period for next 1 year. What is my factory cost, students? 2,21,600. Okay, they are telling this factory cost is incurred for next 1 period wherein I have worked for 75,120 minutes. So I will tell 75,120 minutes. So I will tell I have incurred 2,21,600 for 75,120 minutes. That means per minute I have incurred 2.95 rupees. Is it clear, everyone? So what I am telling now, look at this. Yes, I will calculate my throughput accounting ratio. I am telling what is my return per minute, throughput contribution per bottleneck resource. If I am producing X for 1 minute, I am getting 2.8. Y 1 minute I am getting 3. Z 1 minute I am getting 2.5. However, what is my factory cost per minute? For 1 minute, I am incurring a factory cost of 2.95. Now look at this, students. In X, for 1 minute, I am getting 2.8. However, for 1 minute, factory cost, I am incurring 2.95. Overall, is it profitable? Overall, it is not profitable. I am recovering only 0.95 times of my factory cost. It is overall not profitable. Yes, in case of Y, per minute, I am getting 3 rupees. However, per minute, what is my factory cost, students? 2.95 only. That means overall I am recovering my factory cost also. Variable cost anyways I am recovering. That I will get in my contribution only. Yes, my factory cost also I am recovering. Now variable cost if I am not recovering, there is no point of doing my business at all. Yes, I will not sell the goods only. However, here I am telling, okay, variable cost anyways I am recovering. My fixed cost, factory cost also I am recovering. Is it clear? So in this case I am recovering 1.017 times of my factory cost. Here again, throughput accounting ratio is 0.847. This is my throughput accounting ratio. Simple, yes or no? Throughput accounting ratio, what we have done, students, I have told what is the return per minute divided by what is my cost per minute. I got my throughput accounting ratio, how many times I am getting with respect to my cost. Based on that also I will give a ranking. Now keep in mind, students, whether you give your ranking based on return per minute or you give your ranking based on TA ratio, your final answer is going to be same, because ultimately you have divided by the same number. So your final answer is going to be same. Is it clear, everyone? Now look at the steps, students. What all we are going to do? First, we will calculate throughput contribution per unit, which is selling price minus variable cost. However, in my variable cost, I will not be considering my labor cost. Fine. Throughput contribution per unit I've got. However, I don't want contribution per unit. I want contribution per bottleneck resource. So I will tell it is contribution per unit divided by bottleneck resource per unit. In my case, it is my contribution per unit divided by time per unit. I'll be getting my return per unit. Then I should also be calculating my factory cost per bottleneck resource. I will tell, yes, it is the total factory cost for the period divided by total time. I'll be getting my factory cost per minute. Based on that, I'll be getting my TA ratio. Overall, what is the ratio of my return with respect to my cost? So I'll tell it is my return divided by my cost. So I have my throughput contribution per minute. Per minute, how much I'm getting. As against that, per minute, how much factory cost I have to incur. That will give me my TA ratio. If my TA ratio is more than 1, I will tell my product is overall profitable. TA ratio is exactly equal to 1, I will tell it is my indifference point. My variable cost I have recovered, my factory cost also I am recovering, but profit as such I am not earning. If my TA ratio is less than 1, I will tell my product is not profitable. I should try to make attempts to increase my TA ratio above 1. Is it clear, everyone? Yes, first give priority to the product which is having the highest TA ratio. Is it clear, everyone? Now we are having, yes, Goldratt's 5 steps to improve the performance. Goldratt is telling 5 things we should do to improve our performance. What all are the 5 things? Yes, he is telling, same example we will continue. Material I am having of 900 units, labor I am having of 800 units, machine I am having of 500 units. Yes, so I want to improve my performance. Now look at this, students. Yes, my limiting factor was just telling me, yes, which is my limiting factor, how should I focus, yes, in order to optimize my profit, in order to maximize my profit. Yes, theory of constraints will tell me that thing, will tell me which is my limiting factor, in that which is my constraints, which is my bottleneck, and how do I maximize profit. At the same time, it is also telling in future, if you are planning to come up with improvements, where you should focus first. Limiting factor was not telling me that. Here I know that in future, if at all I have to increase my capacity, where should I focus first? Should I focus first on material? Should I focus first on labor? Or should I focus first on machine, students? I know I should focus first on machine, because that is my bottleneck. That is in most scarcity right now. So what Goldratt is telling, yes, do these 5 steps, yes, in order to improve your performance, in order to increase your profit for the future. First, identify the bottleneck. Okay, we've identified machining is the bottleneck. Next, exploit the bottleneck. Use your bottleneck to the maximum possible extent. Yes, do not sub-optimize your bottleneck. Use it to the maximum possible extent. Okay, I've done that. Yes, complete 500 units machining I'm doing. Subordinate and synchronize everything else to bottleneck. Yes, that is my non-bottleneck. Here, don't utilize your 100%. Subordinate, synchronize it based on the, yes, capacity of your bottleneck. Yes, your bottleneck can produce 500. So here also you produce 500 only. Okay. Then what you have to do? This is for the current period. You have identified your bottleneck. You have exploited your bottleneck. Non-bottleneck, you have subordinated and synchronized based on bottleneck. Elevate the performance of your bottleneck. Yes, then what you do? For future, come up with improvements, come up with changes. So elevate, improve the performance of your bottleneck. So what you have done? You have purchased another machine. Yes, now 500 plus 500, 1000 units you can produce. Now what you will have to do? Repeat the process. Now again you will identify, now what is my bottleneck? Labor. I will exploit my bottleneck. Yes, I will try to subordinate and synchronize everything else to bottleneck. I will elevate the performance of bottleneck. I will repeat the process. This way it is telling me, if I am coming up with improvements, where should I come up with improvements? Limiting factor was just telling me right now, yes, if I have to optimize my profit, what I have to do? Yes, my limiting factor, my theory of constraints, bottleneck, is also telling me in future, if I have to come up with changes, improvements, where should I focus to get my improvements? Is it clear, everyone? Any doubts in this one? Yes, again you are having operational measures of theory of constraints. Now look at this, three things are there, students. Firstly, I have my throughput, which is my sales minus variable cost, throughput contribution. Yes, it is the money which is entering the system. Ideally, what I want, students, ideally what I want, my throughput to be more or throughput to be less. I want throughput to be more, yes or no? So ideally, I should try to increase my throughput. It is the money which is entering the system. Then I have my operating expenses, that is my factory cost. It is the money which is leaving the system. It is the money which is going out of the system. Ideally, what I want, students, money leaving the system. Ideally, I want it to be less. So I will try to minimize it. Yes, again, I have my investment. It is the money which is blocked in the system. Yes, I have purchased equipment, assets, all those things, software, yes, all those. It is my investment. Money is blocked in the system. Ideally, what I want my amount blocked to be more. I want it to be less. I want it to be less. Yes or no? So I want my investment to be less. So look at the students. 3 points are there. Yes, throughput. It is the incoming money. It should be increased. Then I have my operating expense. It is the money which is leaving the system. It should be decreased. And I have my investment, which is the money blocked in the system. It should be minimum. With this concept is over, students. Now we have one main concept of supply chain management, then one small point of gain sharing arrangement. We'll do one thing, we'll take a small break of 5 minutes. So let us continue after the break, students. So welcome back after the break. So we have one big concept of supply chain management pending for you guys. So presenting to you supply chain management as a concept. Now pay attention, students. Supply chain management as a concept is an ocean in itself. There is a separate 2 years MBA program only on supply chain management. That's how big a concept it is. Now, yes, what we have in our CA final, it's not even a chapter. It is just a small topic. Okay, again, it is a revision series. So just from, yes, understanding perspective in the most simplest way, whatever is necessary for us from the examination perspective, I'm going to explain, students. Everyone pay attention. Yes, quickly, this one will also get over. Now look at this, students. Supply chain management in one simple term. If I have to tell, yes, my complete supply chain management, I will tell it is my logistics. Okay, very one term. Yes. Now, suppose I am telling, yes, we have come up with CA final SCMP classes, SCMP recorded classes. We are giving it along with the printed books as well as pen drive. Now, what do our students want? Yes, the delivery of the books as well as the pen drive. Should it be fast? Should it be immediate? Or they are fine even if the delivery is slow? They want the delivery to be very fast. Yes or no? Again, the quality of the books. Yes, the quality of the pen drive, the quality of the overall classes. Should it be best or they are fine even if it is okay? Quality should be best. Again, cost. Are they willing to pay maximum amount? No. They want the cost to be minimum. So what they want? Yes, they want the delivery to happen very fast. Yes, they want the quality to be best. They want the cost to be minimum. In order to achieve all these objectives, what will help us, students? My supply chain management will help us. What is my supply chain? It is my complete chain from my supplier to my end customer. Okay, in my example, yes, it is a complete chain from my supplier to my student. Yes, from my supplier to my student. Say for example, from my supplier, I have to purchase papers. Yes, I have to purchase a pen drive. Okay, all these flow from my supplier, I should be getting properly on time. Based on that, here in my organization, I'm transforming the paper into printed books. I'm putting my name, logo. Yes, in the pen drive, I'm transforming, I'm adding my content. Yes, there is a flow of goods. Again, there is transformation happening. Again, yes, the goods which are ready, that is my books and my pen drive which is ready, should reach my customer. In a business term, yes, from my supplier, I will be getting my goods. So there is a flow of goods from my supplier. Again, there will be transformation of goods also. Again, it has to reach my customer. So from my source supplier, main supplier to my end customer, that complete flow, that transformation of goods, that is called as my supply chain. Now look at this, students. Yes, what is a supply chain? All activities associated with the flow and transformation. Flow and transformation. Flow from supplier to me. I'm getting that flow of goods. Again, transformation. Here in the organization, we are transforming the paper into books. Yes, the pen drive into, yes, printed classes. Yes or no? Encrypted classes. That transformation from my raw material stage, that is from my source supplier, to my end user, that is to my final customer, is called as supply chain. So from my main supplier to my end customer, in between I have the company, the flow and the transformation, that is my supply chain. And I have to manage my supply chain properly so that I can deliver, yes, the goods in the most quickest time. I can deliver the best quality goods or services, and I can ensure that I'm delivering my goods or services at the most optimal minimal cost. Managing my supply chain, that is from my supplier to my customer, that complete flow, that complete chain that I'm managing is called as supply chain management. Is it clear? Now in supply chain management, two things are there, students. Firstly, I should be managing transactions with my supplier, that is my upstream. Yes, above me, I'm having my supplier. With him, all the transactions I should manage, so that he is giving me the books. Yes, he is giving me the pen drive on time. He is giving me at the best price. He is delivering the goods perfect quality. Again, I should be managing transactions with my customer. In our case, I should be managing transactions with my students, so that I can deliver the goods. Yes, I can deliver, yes, the books properly, on time, perfect quality. Yes, whatever grievances they are having, I can resolve that. Yes, all those I have to do. So an organization, supply chain management ultimately is two things. Firstly, upstream supply chain management, management of activities with my supplier. Downstream supply chain management, management of activities with my customers. Is it clear, everyone? Yes. Now, yes, upstream is management of all transaction with supplier. Downstream is management of all transaction with my customer. Yes, in our regular class, so many real life case studies we would have told. Toyota, KFC, Apple, so many case studies we have told, so many supply chains we have analyzed, but for now that's not necessary. Yes, now let's directly go into the steps or processes in supply chain management. Yes, supply chain management has 5 steps, students. Yes, it is plan, procure, make, deliver, and service. Yes, firstly, what we have to do, yes, assume I am a calculator manufacturer. Okay, I'm a calculator manufacturer. So what I have to do, I have to produce a calculator, I have to deliver it to my customers. Yes, so firstly, what I have to do, first I have to make a plan. Yes, I have to make a plan telling for the next 1 month how many calculators will be needed. Suppose I'm making a plan telling, okay, for the next 1 month, 1000 calculators, yes, will have to be produced. Yes, I've made a plan. Okay, that means I'll have to produce. So to produce what I want my raw materials. So what I'll have to do, I'll have to procure my raw materials. First, I've made a plan telling, okay, next 1 month, I want 1000 calculators. So based on that, I will procure my calculators. Yes or no, I will procure my raw materials. I will procure for that what all I want. Plastic I want. Yes, what else I want. Everything I will procure from different suppliers. Okay, I've procured all my raw material. I've got my raw material. Now what I'll have to do? I'll have to make, I'll have to manufacture. So no, I will manufacture the calculator. 1000 calculator I've produced. Yes, once I've produced 1000 calculator, is it over? No, what I'll have to do, I'll have to deliver it to my customers as well. Yes or no? So I will deliver my goods to my customer, which is concerned with logistics. Firstly, yes, with warehouse as well as logistics. Firstly, I have to warehouse my finished goods. Then I have to logistics, deliver them to my customer. Is it clear? And finally, if at all any issues, any complaints are there, I should be having a proper service team. So 5 things, students, in supply chain management. Yes, I have to be handling all my things from my final customer to my source supplier. So firstly, what I have to do, I have to come up with a plan. Okay, I've come up with a plan. Based on the plan, what I'll have to do, I'll have to procure from my suppliers. Yes, I've procured my raw material. Now what I'm going to do, I'm going to manufacture the product. Yes, I've produced the goods. What I'll have to do, I'll have to deliver the goods. If at all any issues, any complaints are there, I should come up with a proper service, after sales service. Is it clear, everyone? Next, types of supply chain. There are 2 different types of supply chain, students. One is push model, one more is pull model. What is push model, students? I am producing the product that I am produced, I am pushing it to the market. In pull model, what am I trying to do? I am pulling my demand from my customer. Based on that, I am producing and giving. Very simple example. Suppose I am a shirt manufacturer. What I am doing? Yes, I will manufacture the shirt. Okay, this is a standard shirt that I have produced. Yes, once I have produced, I am asking who wants to buy. Yes, I am trying to sell to my distributor, wholesaler, retailer, finally my customer. That is push. I have produced. Based on my anticipation, my expectation, I have produced. I am pushing it to the market. What is pull? I am not producing anything upfront. I am pulling the demand from my customer. Say for example, car. How are cars produced? Whether cars will be produced upfront? No. Now 99% of the cars, they will be produced based on customers' requirement. Suppose you have to go and purchase a Creta. What you will do? You will go to a Hyundai showroom. You will tell, yes, I want a black color Creta. All these features. Yes, all these should be there. This should be there. This is not needed. This is there. All these features I will tell. Again, I will make an advance payment of 30,000 rupees. They'll tell, okay, within 1 month car will be ready. Now, based on my demand, okay, based on my order, they are pulling the demand. Based on that, they are producing and giving you the goods. Is it clear? That is my pull model. Is it clear? So push model, here goods are produced based on the anticipated. I am anticipating for next 1 month how much will be the demand. Based on that, I am producing. Yes, produced goods will be purchased by the customer. I will produce, that my customer will buy. However, in pull model, goods are produced based on actual demand. Customer will actually place an order. Only based on that I am going to produce. Yes, the goods demanded by customer will be produced. Here I am not producing. Whatever my customer demands, how my customer demands, that I am going to produce. Is it clear, everyone? Yes, should we continue, students? Any doubts, everyone? Yes or no? Yes, next we have two main things, students. Yes, one we have upstream supply chain management, then we have downstream supply chain management. What is my upstream supply chain management, students? It is managing all my transactions with my supplier. Okay, so I am having my supplier. Yes, suppose say for example, I am telling, yes, we are providing SCMPE recorded classes. We are having suppliers. One supplier is giving me pen drive, one more supplier is giving me, say for example, A4 sheets. Yes, how do we manage all the transaction? How should we maintain a relationship? Upstream, two things are there, students. Yes, it is telling, firstly, relationship with suppliers. Ensure you are maintaining a good relationship with your supplier. Then use your information technology to automate the process. So firstly, what we are telling, yes, have a good relationship with supplier, maintain a good relationship with supplier. Only then he will give you the best quality goods on time delivery and at the best price. Suppose I am telling I wanted pen drives. Okay, I have purchased 1000 pen drives from my supplier. I have purchased that. Then I have not made payment at all. Next, every time he was calling me, I have not picked at all. I have not picked these calls at all. Now, all the pen drive that I have purchased has become, yes, I have used it. Now, I want more pen drives. Now, I am calling my supplier again. Yes, your old payment was there, right? I will give it back to you. Can you please give me 500 more pen drive? Will he give me, students? Will he give me? Yes, even if he gives me, what he will tell? First, settle my old amount. Now, for the current amount, yes, pay me in advance. Again, I am not going to give you discount. Pay me complete amount. Only then I will give you the goods. Yes or no? So, yes, in my upstream supply chain management, I should be having a very good relationship with my supplier. Only then he'll give me the best quality goods on time delivery at the best price. If you look at Apple, yes, they're having a very good relationship with their suppliers. They're paying them premium amount, upfront advance amount they're paying. But they're telling best quality goods, whatever you're having, you should reserve for Apple only. Okay, so you should be maintaining a good relationship with supplier. Once you have maintained a good relationship with supplier, you can use your information technology to automate the process. Yes, how you can use IT to automate the process? Yes, you can go for e-procurement, online e-procurement. In that, three things are there. One is e-sourcing, e-purchasing, e-payment. E-sourcing is selecting the supplier. That is a one-time thing. Based on that, e-purchasing is you're placing an order, you're placing a purchase order. E-payment means you're making a payment. Yes, this is just a one-time. E-purchase and e-payment are going to be recurring. Say for example, I'm telling we are Maruti Suzuki. Okay, we want tires. Okay, so we have looked at different suppliers. Okay, finally we thought that okay, MRF is giving the best tires at the best price. Okay, so firstly we've maintained a good relationship with MRF so that they can give me the best quality tires on time delivery at the best price. Okay, then what am I going to do? Yes, I will try to use information technology to automate the process. Yes, what I am trying to do, see, every time I have to keep telling MRF, okay, yes, tomorrow I want 10,000 tires, 3 days later I want 5,000 tires, 4 days later I want 2,000 tires. Yes, it is going to be difficult. Now think of a car manufacturing company, how many components they want? More than 500 components. To every supplier, every week you have to keep calling and telling. Yes, there is possibility that he may forget, there is possibility wrong number is being informed. So use information technology to automate. How you can automate? Firstly, e-sourcing. You are telling online select your supplier. Yes, it is selection of supplier. Electronic invitation to tender. Now your big, PSUs, all of those people, if they want anything, they'll be, yes, coming up with e-sourcing, online, yes, electronic invitation to tenders. Based on it, whoever is interested, they'll pay. Say for example, one construction is there. Yes, if you are interested, if you are having the expertise, yes, you can place your bid. Okay, e-sourcing. Yes, annual maintenance of laptops we want. Yes, PSU is telling annual maintenance of laptop we want. Yes, whoever interested can place their bid. So based on that, based on expertise, based on the best cost, we will select the supplier. Is it clear? So first we will select the supplier. Once we have selected, yes, we are going to place e-purchasing of the goods. Yes, it results in lesser time, lower cost and better results. Finally, yes, e-purchasing we have done. Yes, payment should also be automated. Now look at this, students. I am telling, yes, suppose I am Hyundai Creta. Yes, I have first selected, I have selected my supplier. Too many suppliers were there. I have done e-sourcing. I have selected Apollo Tires as my supplier for tire. Okay, suppose I am telling 5,000 cars need to be produced tomorrow. That means for 5,000 car, for every car, how many tires are needed, students? For every car, 5 tires are needed. Yes or no? 4 normal plus 1 your spare tire. Yes, so that means for 5,000 car, 25,000 tires will be needed. So what your information technology will automatically do that calculation. The moment your customer has placed an order, yes, your information technology will be so much integrated. It will combine all the orders. By end of the day, it will tell, okay, today we have got 5,000 orders. That means for every car, 5 tires are needed. Automatically, it will place an order with Apollo Tire telling, okay, 2 days later, I want 25,000 tires at this particular location. Say, for example, at my, yes, Gujarat location, Gujarat plant. So that is my e-purchasing, online purchasing. There is no need for us to do anything. And e-payment, once purchasing is done, payment also you do it through automated means, through online, so that there is no issue, no tension at all. Is it clear, students? This was your upstream supply chain management. Two things: ensure you're having a good relationship with supplier, and use information technology to automate the process. Now let's revise whatever we have told. Everyone, yes, try to visualize, students. Supply chain management, all activities concerned with the flow and transformation of goods from where? From my source supplier to my end user, to my final customer, is called as supply chain management. Supply chain, I have to manage all the activities so that I can get the best quality goods, yes, quick delivery, and at the best price. Is it clear? Yes. Then we have told supply chain management, basically two things. One is my upstream supply chain management, manage your transaction with supplier. Downstream, manage your transaction with customer. Fine. Then we have told supply chain management steps. Calculator production. First, come up with a plan. Based on that, procure your raw material. Based on that, manufacture your finished goods. Based on that, deliver your finished goods. Based on that, give your service. Okay. We had push model, pull model. Push model, based on anticipated demand, I produce. The produced goods will be delivered to customer. Yes, pull model. Yes, I'm producing based on actual demand. I'm pulling the demand from my customer. Based on what my customers want, I will produce and give it. Okay. Then we have told upstream and downstream. Upstream supply chain management, two things. First, maintain a good relationship with your suppliers. Yes, use your information technology to automate the process. Fine. You have your downstream supply chain management. What are we telling in downstream supply chain management, students? Downstream supply chain management, four things we have. Upstream, what all we had? We told first we should maintain a good relationship with supplier. Here also we are telling same thing. You should maintain a good relationship with customer. Again, there we have told use information technology. Here also we are telling use information technology. So once you have got your customer, yes, maintain a good relationship with your customer. Yes, use information technology to automate the process. Fine. But you should be getting your customers, right? For that you should be doing two things. One is relationship marketing. Yes, where all I should market, from where all I can get my customer, and come up with a brand strategy. Now look at this downstream. Yes, managing all your transaction with your customer. Four things, students. To get your customer, relationship marketing as well as brand strategy. Okay, I've got my customer. Yes, now give him good service, customer relationship management, and finally, yes, use information technology to automate the process. Is it clear? Yes. Now let's see one by one. Relationship marketing or 6 market model. It is telling where all we should be maintaining a good relationship. Where all should I focus? Where all I should try to maintain a good relationship. Yes, it is telling 6 different places I should be maintaining a good relationship. Assume we are Tata Motors. Okay, so where all I should be maintaining a good relationship so that I can deliver best quality goods on time at the lowest possible cost to my customer. Now, firstly, I am telling suppliers market. I should be maintaining a good relationship with my suppliers. Yes or no, students? I maintain a good relationship with suppliers. Only then he will be giving me the best quality goods at the best price. Otherwise, he will not be giving me on-time delivery. It is going to be an issue. So I have to maintain a good relationship with my supplier. Fine. Again, I am telling, yes, I should be maintaining a good relationship with my influencers as well. Suppliers market, influence market. Yes, who are influencers, students? Suppliers, influence. Yes, these are individuals or entities who are having the ability to influence the marketing environment of a firm. Yes, they are in a position to influence people's behavior, characteristics. Say, for example, you are telling influencers these days, you have your YouTube channels. Yes, say, for example, for purchase of cars. Okay, there are too many YouTube channels regarding car. You have Autocar India, Motor Octane, too many other channels are there, Power Speed, so many other things are there. So all these people are coming up with a review telling, okay, yes, how this car is there, unveiling the new look, the features, 5,000 kilometer review, yes, user review, all those things. You should be having a good relationship with these influencers also. For them, you should be giving premium service. For them, you should allow them, yes, to take a tour of the car. Yes, if at all frequently keep giving them some free cars, all of that goodies, so that they are happy. Because if they are happy, they will tell good things about us in the public. Based on that, yes, I'll be having a good brand image. Yes or no? Yes, again, it could be my news channels also, it could be my actors also, some big politicians also. Yes, anyone can influence. Okay, so I'm telling, yes, altogether 6 places I should be having a good relationship. First, with my suppliers I should be having a good relationship, because from him only I'm getting my raw materials, otherwise I will not get my raw material. Second, with my influencers I should be having a good relationship, because yes, they will further influence, yes, my customers. Based on that, my customers will start buying. Fine. Yes, thirdly, I have my referral market. Yes, influence is generally external people. Referral are generally my internal, my customers. Yes or no? Yes, referral includes my existing customers who have purchased, as well as some referral sources. So I'm telling, yes, there are some referral market as well. I have my existing customers. If he is happy, he has purchased, yes, suppose a customer has purchased Tata Harrier from me. Okay, he is very much happy with the performance, the speed, the service, everything. What he will do? Every time someone else is buying, he will also tell, yes, go for Tata, best cars they are giving. Yes or no? So from there also I will be getting my customer. I am telling from where all I can get my customer. So where all I should be maintaining a good relationship. Yes, from where all it is necessary for me to ensure I deliver the goods on time at the best price, to my customer. For all that. Yes, thirdly, I have my referral market. Referral means my customer also, it could be my referral sources also. Then I have my internal market. Internal market. Who is my internal market, students? We are telling internally, within the organization also we are having a market. What is that? It is my staff. Internal department as well as staff. Now I am telling, yes, in Tata Motors, my own employees, they will also be wanting cars. Yes or no? So for them, I will give some discount, so that whatever they want to buy, if at all they want to buy cars, they will purchase from Tata Motors only, so that they will also be happy. Yes, once they are happy, they will also tell to more people, telling, okay, yes, Tata Motors cars are good. That is one point. Okay, you give them the goods, you make them your customers only. Point number one. Second, even if your customers are, yes, even if your employees are not your customers, what we are telling is, take good care of your employees. Yes, take good care of your employees. If you take good care of them, they will take good care of your customers. Now look at this, it might quite be possible. Yes, I am a company which is manufacturing, say, heavy equipments, which my employees never want. Big industrial equipments. But I should be taking good care of my internal market, my employees. I should be giving them proper remuneration, growth opportunities, incentives, all of that. Why? Because if they are happy, when they are dealing with the customer, yes, they will ensure, yes, they are having a customer-oriented corporate culture. So if we are, making our employees happy, they will in turn, if you are making our employees happy, they will in turn, yes, make our customers happy. So you should be making your employees happy as well. So have a customer oriented corporate culture. For that, you should take care of your employees properly. Yes, reward them properly, give them growth opportunities, give them incentives. Okay, that is your fourth market. Finally, we are telling, we have our customer market. A referral is only a part of the customer who is referring. Yes or no? Suppose I have 10 students. In that, 2 students are referring my class to others. It does not mean that I take care of only those 2 students. I should give quality service to all the 10 students. Again, in my customer market, yes, it represents all my existing customers, prospective customers, as well as intermediaries. In my case, suppose I am telling, yes, my existing students, my prospective students, my future students, with them also I should be maintaining a good relationship. My existing students, my prospective students, as well as if at all there are any intermediaries with them also. And finally, we have a recruiters market. Yes, finally I am telling, okay, all of this is fine. Yes, I have maintained a good relationship with my supplier. He is giving me best quality goods. Influencers, referral, I have taken care of. Next, my supplier, customer market, all of that I have taken care of. Yes or no? Internal market, customer market. But yes, I'm having existing employees. They are happy. Internal market, they are happy. But I want a new employees for new post. I'm not getting only. So I should be maintaining a good relationship with my recruiter also, because if I want a new employees, I should go to my recruiter. Yes or no? So I should be having a good relationship with recruiter market, so that I can get my access to potential employee who possesses the required skills for the job position. Is it clear, everyone? Altogether 6 different markets are there. A simple mnemonic we have created. Siri, you know Siri? Yes, Siri, the way we have Alexa, all of that. Siri, Apple has Siri. Yes or no? Yes, Siri I have purchased at a very cheap rate. What happens, students? Siri I have purchased at a very cheap rate. Siri, S stands for suppliers market, I stands for influence market, R stands for my referral market, I stands for my internal market, C stands for my customers market, R stands for my referral market. This way you can remember, or alternatively, look at this. Supplier, you can tell employees, customer. Yes, with my supplier, I have my suppliers market to ensure that yes, supplier is giving me on time goods. With my employees, internal market to ensure my existing employees are happy. Recruiter market to ensure that yes, if I want new employees, I'm getting. In terms of customer, I have my customers market to ensure my existing as well as future prospective customers are happy. Second, I have my influence market. So based on that, I'll be getting more customers. Again, I have my referral market. This way also you can remember the 6 market model. Is it clear, everyone? Yes. Next, use of information technology is there. It is telling the same thing. Yes, you can use information technology to automate your downstream supply chain management process. Okay, you guys can read it. Now again, brand strategy. They are telling yes, in order to yes survive the competition, you should come up with a brand. You should stand distinctively separate from competition. If you go to any of the McDonald's store, you will be looking the standard things. Yes, one red color, yes, Joker kind of person will be there. Heading will be there in red color. That M will be in yellow color. Some other things in white color. Yes, the way their furniture is there, white color. Yes, their uniform, everything is standard. Why is it that way? Because you go anywhere to McDonald's, you see it from a very distance, you will realize, this is McDonald's. Yes or no? Yes, companies have gone to such an extent that even the tiles used, they're ensuring it is perfect. Yes, throughout India. Yes, so in our nearby place, there was one MI store. Okay, they wanted to start an MI store. So they told that yes, the tiles which were there, they wanted to change it. They wanted pure white tiles. Why is it? So that when customer comes here, anywhere he is going, he can realize just by looking at the tiles also, yes, that this is MI store. So we are trying to build a brand. So we are coming up with a brand strategy. So branding is important to have a distinctive identity in the eyes of customers. Branding makes a huge difference in appeal. So branding could be either usage of logo or any specific color or any other means which makes the product distinctively visible amongst others. Is it clear? And final point I have, students, which is customer relationship management. I've told, yes, downstream supply chain management. Firstly, to get my customers, I have 6 markets model as well as I have my brand strategy. Once I've got my customers, I should make them happy. Yes, then once I've made them happy, I will use information technology to automate the process. Customer relationship management. Yes, managing and analyzing customers' interaction throughout the life cycle, throughout my life cycle, whatever my customers' interaction is there, and managing so that I can improve my relationship with my customer. Now, this includes all the things. Yes, every day on your birthday, you will be getting messages from, either car companies or your HDFC, your banks, or you'll be getting from your West Side Lifestyle, all of this. Yes, all this is a part of your CRM. Every time you go, you make billing. Okay, they'll ask, sir, can you please tell me your date of birth, your name, your mail ID, all of those things. Yes, through that, they'll try to keep interacting with you. They'll try to keep coming up with offers with you so that, yes, they can maintain a relationship. Now, in that 4 things are there, students. Now, look at this in a very simple example. I'll try to explain. Okay, suppose we are HDFC Bank. Okay, yes, it wants to maintain a good relationship with one of its customers. Suppose we are telling we are XYZ Associates. Okay, a CA firm. So we have taken, all our transactions are happening through HDFC Bank. For all our employees, we have given, yes, HDFC Bank account we have opened. Now, first, what HDFC Bank is going to do? First, it will analyze all the customers and their behavior. Yes, all the employees who are there, suppose partners are there, other senior CAs are there, articles are there, other staff are there. Okay, everybody's accounts, yes, it will analyze and it will see what behavior is there. Okay, suppose HDFC is telling, okay, yes, there are some, yes, bank accounts which are having a very high turnover. Some bank accounts are having low turnover. Some bank accounts are going periodically for loan. For them, yes, we can keep pitching in, telling, okay, yes, this time loan rate has reduced, so kindly go for loan. Some, yes, accounts are having high balances. For them, we can pitch in, telling, okay, yes, higher rate of, interest is there on your FD, kindly put your FD, etc., etc. Yes, high turnover is there. You can come up with, say, for example, credit card, free credit card up to 2 lakh, 5 lakh. Low turnover is there. You can come up with some strategy. First, I should analyze. Yes, my customer. What is my customer doing? What is his behavior? What is his buying pattern? What is his need? From my customer's data, I'll be having a complete customer's data, students. Everything is running on data. Everybody is having complete data about you. So first, they will pick all that data. They will analyze the customer and their behavior. Yes, based on that, they will see the customer account profitability. They will see every customer's profitability, every category of customers' current profitability. Customer account profitability means current year profit. This is the current year profit. Customer lifetime value means it is the profit over the lifetime. Yes, throughout. Suppose for 5 years it is going to be there. Over the lifetime, what is the profit? Is it clear? What HDFC Bank is going to do? We have partners, we have CAs, we have articles, we have other staff, etc. etc. Firstly, it will analyze all the customer and their behavior. Okay, based on it, it will calculate for every category the customer account profitability. Yes, while it calculated, yes, customer account profitability, it realized that partners as well as CAs are profitable. Articles and other employees are not profitable. Yes, however, don't take a decision. Yes, what we are telling, go ahead. Yes, look at the lifetime value of customer lifetime value. It may be possible that articles right now are not profitable, but the time they become CS, yes, they will start making more and more transaction, turnover will be more, yes, balance will be more, yes, they could be profitable in the future. So do not just see the current period profit, see the, yes, a lifetime value my customer is giving me. What is my customer's lifetime value, students? It is the net present value of profit from lifetime of customers relationship. Yes, throughout the lifetime, what is the net, yes, what is the profit I am getting? Present value of all that profit is my customer lifetime value. Based on that, I will be taking a decision. Now look at this, customer account profitability. For every customer, I have to calculate my profit and I have to see if he is currently, in this current period, he is profitable or not. For that, I should be distributing the cost properly to every customer. That I am going to do using activity based costing. Activity based costing as a technique, yes, we will be discussing in some chapter, strategic analysis of operating income. There, how to do customer account profitability, yes, we will be discussing. Now, yes, steps is given. Yes, analyze your customer, split it into segments. We have done for every customer range, calculate the revenue, calculate the cost. Yes, identify and retain quality customer, re-engineer or eliminate unprofitable customer. Simple. Yes, again, customer classification based on your categories. Yes, your customer you can mainly classify into 4 different categories. Either you can tell these are my platinum customers, very high profitable, or I can tell these are my gold customer, yes, profitable. Yes, or I have my iron customers, yes, low profit but fine, desirable. Or I have my lead customers, they are not profitable, not desirable also. Is it clear? So you have a small mnemonic, Procter and Gamble India Limited. P, platinum customers. G, gold customers. I, iron customers. L stands for your lead customers. Now, yes, we are telling don't take a decision purely based on the current period profit. Look at the lifetime value. So what we have to do? Yes, throughout the lifetime, whatever profit is there, take, present value of this. Say for example, Geo came. Yes, in the first year, it was incurring loss from every customer, but it knew that subsequent years it is going to earn profit from that. So what it has to do? From the lifetime of customer relationship, what is the profit? Get the present value of that. Bring it to present value terms. That is my customer lifetime value. If it is positive, I know that overall in the lifetime customer is making profit. If it is negative, I know that yes, customer is of no use. Okay, so one calculation is there here. You guys can see that. It is nothing but NPV calculation. Yes, present value of inflows minus present value of outflows. Yes, once it is done, yes, once I have analyzed my customer, I have calculated the current profitability, I have seen the lifetime value, what I'll have to do? I'll have to start taking my decision. Yes, I will select my customer. Suppose I'm selecting my articles. Okay, I've selected my customers. Okay, articles, I feel in the long term, they're going to be very much profitable for the bank. HDFC Bank is telling, okay, we have selected the target customer and decide how to reach them. Okay, then acquire the customer. So you are trying to acquire the customer. You are telling, okay, for the next 2 years, yes, we are going to give you, yes, higher rate of, lower rate of interest on your education loan. Or say, for example, we are going to give you credit card of 20,000 rupees. Or we are going to give you, yes, etc., etc. Yes, bank charges we are going to reduce. Whatever, you come up with a strategy and you try to acquire the customer. Yes, once you have acquired the customer, yes, customer retention. First you have selected, okay, articles. You have acquired by giving them some offers. Then you have to retain them for long period by giving them good quality service. And customer extension. Try to get more and more services from your customer. Yes, customer extension. Again, 3 things are there, students. Resell, cross-sell, upsell. Now, resell is selling the same product one more time. Cross-sell is, selling a closely related product. Upsell is selling a more expensive product. Suppose you go to a McDonald's. Okay, yes, 3 people you go. Yes, you are buying 2, say for example, Mac Aloo Tikki. Yes, they're asking, sir, you guys are 3 people. Should we make it 3 Mac Aloo Tikki? Resell, selling the same product again. Yes, cross sell. They're telling, yes, along with Mechalotiki. Yes, why don't you try? Why don't you try some, yes, Coke as well. Yes, cross sell, sell related products. Yes, upsell, sell more expensive. They're telling, sir, Mechalotiki is very small. We have a, yes, very good, what do you call, combo offer available. Yes, we will be getting Makalu Tiki as well as French fries, Pepsi, everything at 150 rupees only. Why should you? You should try that one at least. Upsell. You are selling more expensive product. Is it clear, everyone? This is my customer relationship management. Yes. So next you have your miscellaneous points in supply chain management. Now remember students, supply chain basics at the end summary, everything will be clear. Okay, summary, everything we have brought it together at one place, so you need not worry at all. Now supply chain management, first we discuss the basics. What is supply chain? The steps in supply chain, push model, pull model. Then we have told upstream supply chain management. Yes, managing transaction with my supplier, relationship with supplier, use of information technology. Downstream supply chain management. Yes, I have told, yes, to get my customer, 6 market model, CD at cheap rate, as well as brand strategy. Again, yes, my existing customers that I've got, I have to make them happy. Customer relationship management. Analyze customer and their behavior, customer account profitability, customer lifetime value. Yes, next, customer selection acquisition, yes, retention as well as extension. Finally, yes, downstream supply chain management is also over. Now, we have some miscellaneous areas. In that, first point is service level agreement. What is a service level agreement, students? Service level agreement is an agreement between your customers as well as service provider. Yes, suppose I am telling, okay, yes, we are Think with Tabish classes. We are providing, yes, recorded classes for CA Inter as well as CA Final. Yes, I have different service provider. There is one logistics company. Yes, there is one more printing person. Yes, what I ultimately want, I want that the goods which are ready should be delivered on time within 3 or 5 days. I want that the printing person, yes, the moment I tell within 3 days, he gives me the goods. So what I will do, I will enter into an agreement with my service provider. As simple as that. It is an agreement between a customer and a service provider, is called service level agreement. Here I will specify what all conditions are there, what all terms are there, how payment will be done. Yes, what all rewards are there, what all penalties are there. I will tell logistics person, yes, if it is a metro city, within 3 days you should deliver. Non-metro means 5 days you should deliver. Yes, monthly we will be doing the payment. If at all delay is there, that amount I will not be paying you. Yes, all these terms properly I will write, so that ultimately what I want, students, ultimately I want that my customer should be happy, customer should not regret, customer should be getting the goods on time. So for that I am entering into all these agreements. Okay, yes, it could be either a legally binding formal contract or it could be an informal contract also. Yes, rewards and penalties should be specified in a service level agreement. Is it clear? What all are the benefits of supply chain management? My inventory will get reduced, employees will get reduced, productivity will be improved, cost will get reduced, all of that you can write. Yes, again, there is one more point, students, key processes as per global supply chain framework. You guys can read it once by yourselves. Okay. Yes, not important from an examination perspective, but still, okay, we've written it down. Yes, finally, e-commerce and supply chain management. Now, we are telling how we use supply chain management in case of e-commerce. In case of e-commerce, supply chain management is very important, students. Why it is very important in case of e-commerce? Because your customer is located in different place. What is main thing? Yes, what is main thing is you should be in a position to deliver the goods on time, promptly to your customer, quickly as possible at the lowest possible cost. Yes or no? So for that, yes, your e-commerce becomes very important. Now, steps in case of e-commerce, yes, 2 sentences are there, students. Firstly, we are telling, yes, supply chain management is a backbone of e-commerce business. Okay, so in case of e-commerce, supply chain management is very important. Without that, e-commerce business cannot survive at all. Yes, what all steps are there? Same steps are there, students. Firstly, plan, procure, make, deliver, service. However, slight alterations are there. Now, plan. Yes, how are we going to make a plan in case of e-commerce? Can we do our plan based on what I want? Suppose I am thinking, okay, next one month, I am going to deliver 50 units to Bangalore, 20 units to Bangalore, 200 units to Delhi. Yes, can I make my plan that way? No. My plan should be based on customer's orders. How customer is going to order, based on that I have to make a plan for production. Yes or no? So my plan will be based on customer's orders. Fine. Yes, once I've made a plan, I have to procure my raw material. Again, based on my customer's order, I will be procuring my raw material. Based on that, I have to make. Yes, here they have given production. I have to produce my finished goods. Okay. Once I have produced my finished goods, what I'll have to do? I'll have to deliver my finished goods, which is also called as logistics. Yes, logistics could either be your own in-house logistics or you can outsource it to a third party. If it is in-house, give them proper training. If you have outsourced, yes, tell them your requirement. Yes, enter into a proper service level agreement. Is it clear? Finally, you will be having your customer service. Ultimately, yes, if at all any grievances, any issues are there, you should be coming up with the proper customer service mechanism. Is it clear, everyone? Final one point is there, which is SLA threshold, service level agreement threshold. Yes, in one practical question, this one point was there, so we put it here. Yes, what is the SLA threshold? It is the activity response time specified in a service level agreement. Yes, it is the activity response time. In what time? Yes, we should give a response to the activity. That term is called a service level agreement. Suppose I have told with my logistics person, I have told, yes, within 3 days, you should be delivering the goods. Yes, in a metro city. Yes, 90% of times, within 3 days, you should deliver in metro cities. 90% of times, within 5 days, you should be delivering in non-metro cities. This is the threshold. This is the condition that we have given to our service provider. Look at this. One service level threshold is given. Service level threshold of 90/20, 90/20 in case of a BPO. Yes, we have given a work to a BPO. Yes, to attend the calls, whatever calls, customer care calls are there to attend. So we have given a target of 90/20. What does it mean? It means that 90% of time call has to be responded within 20 seconds. 90% times, yes, respond to call in 20 seconds. This is my threshold. Is it clear, everyone? Yes, so with this, our supply chain management as a concept is over. Believe me, it is an ocean in the littlest time possible. Quickly, keeping in mind your last day before examination, we have revised the students. If I keep explaining for everything case studies, it is going to take time and time. Okay, yes. Now, final one concept we are having, which is gain sharing and outsourcing. Yes, 2 points are there. One is gain sharing, one more is outsourcing. What is gain sharing, students? Now, if you have to invest some money, yes, suppose you are having 10 lakh rupees, you want to invest. Either you can invest, yes, in FD or bonds wherein you are getting fixed return, or you can invest in equities wherein you will be getting variable returns. Yes or no? Same thing is happening. Now your supplier is giving you goods or services. Yes, traditionally what was happening, he is giving you goods, he was getting a fixed return. Yes or no? He is giving you goods, suppose say for example 10,000, you are paying him 10,000 fixed return. No tension, but fixed return. But now in case of gain sharing, what we are telling, my supplier will be getting variable return. That means if I am getting more benefit from that, supplier will be getting more benefit. If I am getting less benefit, he will be getting less benefit. What is it, sir? Properly explain this. Yes. One simple example, students. Yes, I wanted to launch my own website as well as mobile application. Okay. I started searching for people. Yes, website developers. Okay, first website developer came, he came up with this proposal, what all website he is going to have, how he is going to integrate all those things. I asked how much it is overall. He told me 2 lakh rupees. Fixed amount. Yes or no? Proper a contract of supply. Yes. Again, next person came. He told, yes, all these things we are going to do, sir. Full time we will be there with you. We'll ensure you are getting students. Yes, that will do, this will do. So many things he told. I asked how much. He's telling no need, sir. I was going, what? I was very happy. No need. Sir, no need. Nothing is needed right now. I was like, are you sure? Oh, why are you doing it? Yes, don't lie. Why are you doing it? He's telling, yes, I don't want anything now, sir. Yes, based on your students, based on your student registrations. Yes, give me 10% of your student registrations. Yes, give me 10% of student fees. So he is telling, yes, if students are not there, okay, I am willing to take a risk. But if students are there, more students we are getting, more and more money I'll keep getting. Okay, so what is my supplier doing? My supplier is not just giving me supply of goods or services. He is actually entering into an equity stake with me. So he is being a partner with me in my success as well as my failure. So now look at this, students, gain sharing arrangement. It is an arrangement between supplier and customer, wherein supplier provides goods or services. Supplier is providing goods or services without any guarantee of receiving payment. However, there is no guarantee of receiving the payment. Instead, the payment is made based on the benefits that emerge to customer as a result of the contract. Instead, how do we do payment? Yes, how much benefit? Yes, my customer will be getting. Based on that, I'll be making payment to my supplier. Is it clear, students? Yes, it is a very risky stance to my supplier. He can either walk away with nothing. Yes, I did not get any student. He will not get anything. Or if benefit to customer is substantial, I've got so many students, yes, supplier will be getting a huge return. It is as though supplier is taking an equity stake in the customer rather than just entering into a contract. Yes, it is going to be a win-win situation. However, there should be a predefined system for calculation of benefit. Yes, some reasons why gain sharing arrangement could become a failure. Unstructured terms of agreement. You have not properly told, telling yes, what is going to be 10% of fees? Is it before GST, after GST? Is it before reduction of expense, after reduction of expenses? Yes, that you have not told. You have not defined for how much period you have to pay. You have not told, should you keep making payment weekly, monthly, how? Yes, all those terms are not properly defined. It will lead to conflicts, fights. Error in implementation. You have not implemented properly. He did not come up with the proper website only. Yes, could be possible. Lack of efforts from one party. Yes, he is telling, okay, I will do a website. You should teach properly. I am not interested in teaching at all. Yes, I have not come up with any content at all. So website is empty. Again, he will be angry. Yes or no? Yes, again, bad relationship between the supplier as well as customer. Yes, we had a small fight in between based on one point. Because of that also gain sharing arrangement will come to an end. Is it clear? Finally, I have my outsourcing, which is also called as contracting out. What are we doing in contracting out? Yes, one part, yes, one task, one process, one operation, one work, yes, is shifted to some other party for a span of time in order to reduce your cost or improve efficiency. Say, for example, Apple. Yes, assembly of Apple products are done in, yes, China by a company called as Foxconn. Yes, the assembly operation is shifted to other party for a period of time. Why are we doing it? Either to reduce my cost or else to improve the efficiency of my operations. Yes, outsourcing could be for goods also, it could be for services also. Accounting service will be outsourced as well. Yes or no? Service also can be outsourced. Advantage, it will help me to reduce my cost. Yes, reduce my investment sometimes. It helps me bring flexibility in my operation. Yes, disadvantages, sometimes there is a risk that some sensitive data or information I may lose because I'm getting the work done from them. Now, Apple may be having a risk telling, okay, yes, from where we are getting, yes, the best cameras, what is the best process, all that's just sensitive data may be lost. Yes or no? So that has to be taken care of. Again, control over the operations may be lost. They may not be having control over operations. However, these people want, Foxconn want, they will, yes, manufacture and give. So I will not be having control over my operation. Final product I can see, but how it is produced, I will not be having control on that. Again, some quality problems could be there because they are not focused on quality. Okay. Now, how do we address issues in case of outsourcing? Yes, first prepare a detailed service level agreement. Before we are entering into outsourcing agreement, proper service level agreement has to be entered. Telling, okay, this is what we are doing for this much particular time. This is your responsibility. This is how you are supposed to do. This is the quality specification. This is the, yes, lead time. Within this time you have to give. Yes, in this particular moment, I'm going to make the payment. Everything has to be specified there. Yes, it should specify penalty also. Yes, again, company should be having a list of alternative service provider. If at all, yes, he is not giving me on time, I should be having alternate service provider also. Yes, I should not sit and look up telling, okay, he is not giving me, what should I do now? I should be having, yes, alternate service provider also. I should be setting up an audit team that makes regular audits of outsourcing entities. My outsourcing entities, how are they working? To see that proper audit team should be set up. Is it clear, everyone? With this, we have finished the chapter Modern Business Environment. Yes, now everyone, going to the, yes, most beautiful part, which is a comprehensive revision of the complete chapter. Everyone pay attention. It's the complete chapter. We have summarized, we have brought it together. Yes, so the complete chapter of modern business environment. So first we have told the main shift is from suppliers market to customers market. Concept number one that we have discussed was cost of quality. Okay, yes, there we have told we are having cost of good quality, cost of poor quality. We have components of cost of quality as well as miscellaneous areas. These components of cost of quality, we've told we have cost of good quality, cost of poor quality. Yes, cost of good quality, it is the cost incurred to produce good quality goods or services. Cost of poor quality, it is the cost incurred because we have produced poor quality goods or services. Okay, in that I have my prevention cost. It is the cost incurred to prevent poor quality goods or services from getting produced. It is generally incurred before the start of my production. Appraisal cost, to check if my goods or services is of perfect quality or not. It is incurred during the production. Okay, I have cost of non-conformance, internal failure cost, external failure cost. Internal failure cost, it is the cost associated with defects found. Defects are produced, but before they are delivered to my customers. External failure cost, it is the cost associated with defects found after the goods have been delivered to my customers. Is it clear? Yes. Now, I have miscellaneous points in case of cost of quality. Firstly, I have told, yes, the relationship between cost of good quality and poor quality, there is an inverse relationship. optimal cost of quality. It is that point wherein my overall cost of quality is minimum. Yes, how do we take decision? From a financial perspective, go for optimal COQ. From a non-financial perspective, you can also go for that alternative wherein your cost of poor quality is lowest, because your customer satisfaction will increase, brand image will improve, and overall, yes, your sales in the long term will also improve. Finally, we had our PAF model. Yes or no? Prevention, appraisal, failure. First, gather information about number of failures. Yes, Maruti car, we have told 20 failures. Apply assumptions, quantify the data. Okay, 20 lakh is the cost that we've incurred. Yes, now chart it into 4 elements: prevention, appraisal, internal failure, external failure. Yes, allocate resources to combat your weak spots. Do it on a regular basis. And measures to reduce your non-conformance cost. You have your TQM, you have your TP. Is it clear, everyone? Yes, the next concept that we have is TQM, total quality management. Yes, total quality management. Yes, management. It is a management philosophy, quality, which is aimed at improving the quality of goods or services. How? By involving everyone and by, yes, taking every process of the organization. You have the definition by CAMA as well. Everyone, yes, what is the definition, students? It is the integrated comprehensive system of PCBF, planning, controlling all business functions, so that goods or services are produced which meet or exceed my customer's expectation. So in that, first I've told we have the 6 C's of TQM. Yes, commitment, culture में हो तो continuous improvement हो, cooperation or customer focus हो तो control हो. Okay, 6 C's we remember. Commitment we want from top management. Culture, create a culture which focuses on quality. For that, training is needed. Continuous improvement, TQM is a process, not a one-time program. Cooperation from employees, total employee involvement is needed. Customer focus, everything is done based on, yes, the need of the customer. Yes, customer could be your internal or your external customer. Control, you should be having documentation, control mechanism, etc., etc. Yes, again we have told, yes, Deming's 14 points for TQM. Firstly, we have told raw material 2, labor 5, management 7. Raw material 2, yes, while you are purchasing raw material, cease dependency on inspection. One raw material, one supplier, 5. Again, with respect to labor, we had the mnemonic, yes, Tabish loves football, but the sad part is, temporarily we had to say rest in peace. Yes, labor, Tabish, T stands for training, give training, on the job training. Yes, next, L, yes, leadership, yes, institute leadership amongst your employees. Football, F, fear amongst your employees, drive out fear amongst your employees. Yes, B, barriers between department, break down barriers between department. Yes, but the sad part is slogans, eliminate slogans. Again, management, temporarily we had to say rest in peace. T stands for transformation, management is doing, transformation is everyone's job. E, institute education, as a management you have to give education. M, management by objectives, eliminate management by objectives. P stands for philosophy, adopt the new philosophy. Yes, RIP, R stands for remove the barriers to pride of workmanship. I is improve constantly and forever. P is your, yes, have constancy of purpose. Again, we had miscellaneous areas. PDCA, plan, do, check, act. Criticism, excessive focus on documentation, not applicable to your service oriented industries. How you can make investment in TQM, you can fine tune your product mix, processes, etc., etc. Yes, then we had the third concept, which was business excellence models. Now look at business excellence model. Yes, what is business excellence model, students? It is a philosophy wherein we are developing management systems and processes so that organization can improve the performance, create value to all stakeholders, and achieve excellence in everything we are doing. We are telling we should go beyond the customer. All my stakeholders should be happy and we should be ready for transformation, okay, for major change. So 5, yes, common business excellence models: Jabse, Japan, Australian, Baldrige, Singapore, EFQM model. Now again, EFQM model was there, which was important for us. Structure of EFQM model, we have told 3 modules are there. Direction, that is the why. Execution, that is the how. Results, that is the what we will be getting. Okay, yes, you have your song for that, yes or no? Yes, in direction, first we should be seeing, yes, what is the purpose of the organization? One car for every home, yes or no? Based on that, see how leadership is there, how culture is there within the organization. Are they ready for the change? Okay, that is your direction. Then you execute. Yes, engage all your stakeholders, ask what they want. They wanted electric car. Based on that, drive transformation, come up with electric car. Create a sustainable value, keep coming up with continuous improvement so that you can keep adding value, and final results that you're getting. Firstly, strategic as well as your operational performance. Finally, you have your stakeholder perception. Okay, yes, you have your song as well. Yes, so with that also you'll be getting all the terms. Next, radar approach, results that I want. For that, what is the approach I should go? Yes, deploy your resources. Yes, assess and refine. Uses of EFQM is there. Again, 7 categories of Baldrige criteria. Again, it's not important, you guys can revise once by yourselves. Is it clear? Yes. Next we have a theory of constraints, students. Yes, theory of constraints. So bottleneck, what is bottleneck, students? In simple term, it is your limiting factor amongst your limiting factors. Goldrat and Cox told, yes, don't go for maximized production, go for optimized production. Yes, main things, how do you maximize profit? First, calculate your throughput contribution per unit, selling price minus variable cost, however exclude your labor cost. Next, calculate your throughput contribution per minute. It is your throughput contribution per unit divided by time per unit. Okay, then calculate your factory cost per minute. It is the total factory cost divided by total minutes. Yes, then calculate your throughput accounting ratio. It is the ratio of your return to cost, return per minute divided by cost per minute. That is your throughput accounting ratio. If your throughput accounting ratio is more than 1, it is favorable. Yes, it is a practical question, students. Yes, Goldrat's 5 steps. Yes, what is Goldrat telling? First, identify your bottleneck. Okay, I've identified. Machining. Exploit your bottleneck. Okay, I've exploited. Yes, subordinate and synchronize your non-bottleneck based on your bottleneck. Okay, I've done. Elevate the performance of your bottleneck. Based on that, repeat the process. Is it clear, everyone? Miscellaneous. Yes, measures of, the TOC have told throughput, that is the rate of incoming money, should be increased. Operating expense, yes, money leaving the system should be reduced. Investment, money blocked in the system, should also be minimum. Yes, then we have told supply chain management. Yes, firstly, basics of supply chain management. Supply chain, all activities concerned with the flow and the transformation of goods from my supplier, that is from my raw material, to my end user stage. Okay, supply chain management steps. Yes, plan, procure, make, deliver, as well as service. Yes, types of supply chain. I have push model, wherein I am producing based on anticipated demand. Pull model, I am producing based on actual demand. Next, I have my upstream supply chain management, managing relationship with my supplier. Downstream, managing relationship with my customer. Upstream supply chain management, 2 things are there. Firstly, relationship with supplier, maintain a good relationship with supplier. Next, use information technology to automate the process. In that, you have your e-sourcing, e-purchasing, as well as e-payment. Now, downstream supply chain management. Yes, managing transactions with your customer. 4 things are there, students. Firstly, I should get customer. For that, I have relationship marketing or 6 market model. Then I have my brand strategy. Okay, once I've got my customer, I should maintain a good relationship, customer relationship marketing. And then I should use information technology to automate the process. Yes, 6 market model, 6 markets are there. We have told the mnemonic Siri at cheap rate. S stands for suppliers market, I stands for influence market, R stands for your referral market, I stands for your internal market. Again, C stands for your customer market, R stands for your recruiters market. Again, you have brand strategy. Yes, how do you have a distinctive identity amongst others? Usage of logo, specific color, etc. Use of information technology, use it to automate your downstream supply chain management. Customer relationship management. First, analyze your customer. HDFC Bank, analyze your customer. Yes, bifurcate into different yes, buckets. Okay, now for every category of customers, yes, calculate customer account profitability. Current period, how much profit they are giving you. Yes, you can classify them as, yes, platinum, gold, iron, lead, PGIL. Yes, PNG India Limited. Yes, based on that, again you see, yes, what is the profit over the lifetime. Calculate the present value of profit over the lifetime of customer relationship. Based on that, yes, acquire your customer, select your customer. First it is selection. Okay, select your customer, acquire your customer, retain your customer, customer extension, get more and more from your customer through, yes, resell, cross sell, as well as upsell. Again, you have some miscellaneous areas here. Yes, firstly, we have told service level agreement. It is an agreement between customer as well as service provider. Should specify rewards as well as penalties also. Again, service level threshold also we have told 90/20 in case of BPO. 90% of times pick the call in 20 seconds. Benefits of supply chain management is there. Supply chain steps in e-commerce, same steps only. Plan is based on customer's order. Yes, procurement is also based on customer's order. Manufacturing is also based on customer's order. Again, delivery is there. We are calling there as logistics as well as services there. Key processes as per global supply chain forum is also there. Is it clear? Yes. Finally, we are having concept number 6, which is going to be our, yes, gain sharing as well as outsourcing. Gain sharing. Yes, we are telling my supplier, yes, is giving me the goods or services, but without any guarantee of receiving the payment. Yes, instead payment is based on the benefit that is emerging to my customer as a result of that. Yes, it is a risky stance. Either he can get more or he can walk away with nothing. Supplier is taking equity stake in me. It is a win-win situation for both. Again, Outsourcing, we've told, it is a business practice where a task or a process is shifted to other party for a span of time in order to reduce the cost or else to improve the efficiency. Advantages, disadvantages, and how to address the issues is also there. With this, we've finished the chapter Modern Business Environment. Believe me, this is one of the lengthiest chapter, one of the chapter with the most theory amounts. Yes, we've ensured that in the little time possible. Obviously, in the regular class, we ensure that each and every point is very clear, 100% clarity we give. Yes, 5 to 10 times we revise daily on daily basis and ensure that students do not forget at all. Because it is a crash, because it is a quick revision, not even a crash. Yes, it is not possible to ensure that we revise it so many times. But we've given you an overall idea about all the concepts. I hope you would have got an idea telling what it is, why it is. Based on that, if you guys read it one time, revise it 1 or 2 times by your own, I think you should be good to go. Yes, with this, we end today's session, students. Yes. Okay, so see you guys in the evening. We have a chapter called Pricing Decision. Keep studying, keep smiling, keep rocking, and see you guys in our next session. Thank you so much. Have a great day. If you've liked the video, yes, if it was adding value to you, like, subscribe, comment, and do suggest to all your friends. Thank you so much, students. Have a great day. Hello Rockstars, I hope you're all doing amazing. Welcome to today's session of SCMPE Revision series. The chapter covered today is going to be Pricing Decisions. Again, very important chapter from our examination perspective. Again, this chapter is not that lengthy as compared to other chapters. Short and sweet. Let's try to quickly finish this chapter off. So pricing decision, if you look at the past examination analysis, on an average we have 9 marks from this chapter. So it is important. Now if you see May 19, one attempt alone, there was question of 40 marks, again 15 marks. So not that frequently tested, but whenever it is getting tested, too many questions are getting tested. So you never know. If a big question comes in your examination, we should always be ready for that. So let's begin with the chapter, students. So yes, so pricing decision. What is this term? Pricing decision telling. Yes, we are taking a decision about the pricing. What is selling a price we have to set. Okay, so it is policies, methods, and techniques. Yes, what all policies and methods we are using to determine the selling price of the goods or services provided by the organization. We want to set the selling price for a product. Suppose I am selling a pen. I want to set the selling price. For that, what all techniques I use to set my selling price, that is called as pricing decision. Is it clear? Yes. Now we will tell. Yes. Pricing can be done in 2 different cases. Either you will be doing your pricing for external customer or you will be doing it for internal customer. Suppose we are a Tata Steel. Okay. So we are selling the steel. Yes, we are selling it to our external customer who is DLF India. We are also selling it to, yes, internal customer, yes, who is my Tata Motors. So if I am selling goods or services to my external customer, the price charged will be called as selling price. If I am selling goods or services, I am transferring goods or services to my internal customer. Either it could be in the same company, yes, other division, or it could be within related companies. Okay, group companies. Yes, then the price at which I am transferring the goods is called as transfer price. Now, how do we determine the transfer price? Yes, what all issues are there? How do we do that? For all of that, we have a separate chapter, transfer pricing, that will be covering later on. But now, when I am selling goods to my external customer, what amount should be charged? What price should be set? That is called as my selling price. And how do we charge our selling price is what we are going to study in this chapter. Is it clear, everyone? So the foundation is clear. Yes. Now, you will say, what's the big deal, sir? Yes, we've been knowing that, cost plus profit is equal to my selling price. What's the big deal? We can set our selling price. For any product you want, give me the cost, give me the profit, I will set my selling price. But that's a difference. Yes or no? This chapter is telling us, take a proper, a systematic approach to determine your selling price. Now, the complete overview of the chapter, I'm going to tell it to you in 4 different steps, students. Now, not important from the examination perspective, but important for us to understand why these concepts are there. Okay, if you are selling goods to your external customer, you call it selling price. To your internal customer, you call it your transfer price. Now, look at this, students. Suppose this is me. Yes. Yes. Suppose I'm a consultant. Yes. There is a friend of mine. Yes. His name is Mr. Sandy from Pondi. He loves brandy. Okay. Now, he is telling, yes, I want to start my own pen manufacturing company. He is telling, okay, I will start my own pen manufacturing company. My cost is 10 rupees. He has decided. Yes, he has added his own profit. He is telling 7 rupees should be my profit. He set the selling price as 17 rupees. He started selling goods in the market, but nobody is purchasing because a similar product, yes, more or less with same utility, is available for 10 rupees, 12 rupees in the market. So nobody is willing to buy that. Yes, ultimately it is your cost plus profit is equal to selling price, but yes, it is not that easy telling yes, you just calculate your cost, add whatever profit you want. You have to follow some steps. So he comes to me asking, yes, how do I set my selling price? I am telling 4 steps are there. Yes. Now, we should consider external factors also. Yes. Now I am telling, yes, 4 factors are there. Yes. Firstly, we should determine the type of market in which company is operating. Market could be of 4 types, students. Either it could be perfect competition, monopoly, monopolistic, oligopoly. Say for example, I am telling I am a vegetable vendor. Yes, perfect competition. Then I cannot try setting my own selling price. I should see what is the amount charged in the market, the general market price. Based on that, I should set my selling price. However, if I am in monopolistic, yes, say for example, I am selling mobile phones, then I can set my own selling price. So first I should see which type of market am I operating in. Am I operating in perfect competition? Yes, monopoly, monopolistic or oligopoly. Yes. First I've seen what type of market I'm operating in. Yes, then I will try to see, yes, what type of product I am coming with. Yes, product could be of 3 types. Either your product could be a revolutionary product, or it could be an evolutionary product, or it could be a me too product. Say for example, yes, I'm telling, yes, Apple came up with its own new iPhone. That's a revolutionary product, completely changes the way market is looking. Yes, so you can charge a premium amount. However, you came up with an evolutionary product. Yes, okay, you will see what is the market price plus or minus, based on that you will set your price. If yours is a me too product, you don't have an option. You will see what is the price which is charged in the market. You just go along with that. Yes or no? So 2 things we have told. First, understand the market in which we are operating. Market could be perfect competition, monopoly, monopolistic, oligopoly. Yes, once you've understood in which market you are operating, now understand for that market which type of product you are bringing in. Yes, your product could be revolutionary, evolutionary, me too. Yes, then once you've understood your product, now come up with the pricing strategy. Now your pricing strategy could either be your skimming strategy or your penetration pricing. Skimming means you are charging a high amount upfront, slowly you will reduce your price. Penetration means you will begin with a small price, gradually you will increase the price. And finally, based on that, you should determine your selling price. Okay, so it's a step-by-step process, students. Yes, pay attention. Yes, this is how things happen in real life. First, we determine the type of market in which we are operating. Yes, market could be, yes, monopoly, sorry, perfect competition, monopoly, monopolistic, oligopoly. Yes, once we determine the type of market in which we are operating, yes, we will try to understand the type of product we are coming up with. Our product could be revolutionary, evolutionary, me too. Once we've understood the product, yes, then we'll try to come up with a pricing strategy. Pricing strategy could be either be skimming or penetration. Based on that, we are going to set our selling price. Now, giving you just 1 or 2 examples. In regular class, too many examples we analyze. Now, say for example, we have come up with a brand new Apple iPhone. First, we try to understand the market. Okay, it is a monopolistic market. Fine. Then we try to understand the type of product. Say for example, we are coming up with a completely revolutionary product. Yes, till now, something like this was never there at all. Like that, a mobile I'm coming up with. Okay, revolutionary product. Then I'm telling what should be my pricing strategy. Apple is telling, yes, we'll charge a high amount upfront. Yes, then slowly we will reduce. As and when next model comes, we will reduce the price. Okay, skimming pricing I'm going to do. Based on this, now set your price. Based on this, now you do, okay, my cost for this product was 40,000. I'm thinking I'll charge 200% on my cost. 80,000 will be my profit. I will sell at 1,20,000. Ultimately, it's your cost plus profit only. But yes, you want an approach telling how you're going to do that. Say for example, Amazon. Yes, Amazon entered the retail sector. Retail sector, I will say, is a perfect competition. Yes or no? Same product they are selling. They are not selling any different products. So yes, the type of market, perfect competition it was. Yes, the type of product they came up with. They come up with a revolutionary product. Yes or no? Yes, sit at home, you will be getting your goods delivered. Revolutionary product. Again, pricing strategy. It is not necessary that just because your product is revolutionary, you should go up with skimming pricing. They went with penetration pricing. They understand that, okay, people initially are going to be reluctant. And ours is not just a short-term game. Ours is a very long-term game. Apple is okay. Yes, we have launched a model, 6 months, it is over. Yes, Amazon is like, yes, we are here for the next 20, 50, 100 years. So slowly we can earn money. So they went with penetration pricing. Slowly they started, yes, initially with loss, slowly they started earning profit. Based on that, they set their selling price. Is it clear? So that is the structured approach for us on how do we set the selling price. Now this is not there in your textbook, yes, but still it is important for us to create a link to all our concepts. Okay, now look at this 4 steps. First, determine the type of market in which company is operating. Market could be your perfect competition, monopoly, monopolistic, oligopoly. Then understand the type of product. Your product could be revolutionary, evolutionary, me too. Then understand your pricing strategy. It could either be skimming or penetration. Based on that, finally, determine your selling price. Selling price could be cost based, market based, value based. Is it clear? With this, the chapter is over. I have given you an overall idea of what is there in this chapter. Now, one by one, first let's try to understand the type of market, the type of product, the pricing strategy, how to calculate the selling price. Yes, students. So let's see. Same thing is given here. Yes, you guys can read the notes. External customer, internal customer. Yes, procedure for determination of selling price. So first concept is understanding the different type of market in which company can operate. Okay, yes, you would have heard it already in your CA Inter somewhere, but still let's understand as though you have not understood it at all. Yes, first type of market is perfect competition. What is perfect competition, students? Yes, it is a type of market wherein there are too many sellers and too many buyers buying the same homogeneous products. Okay, look at this. What is this telling? I hope this is visible, everyone. Okay, yes. Yes, what is perfect competition? It is a type of market wherein there are large number of sellers, too many sellers, large number of buyers. Obviously, yes, if there are large number of buyers, only then it will be a market. If there are very few buyers, yes, it will never be a market at all. No one will want to enter that market. Okay, large number of sellers, large number of buyers selling a homogeneous product. Same homogeneous product they are selling, identical product. Yes, using identical production process. The production process is also same, and everyone has perfect information about price. Everybody has perfect information telling what is the price. This person is charging, this person is charging, this person is charging. Again, there is a free entry as well as free exit of firms. It's not that there is any restriction to enter the market. Anyone, if they want, they can come up with a business. So large number of sellers, large number of buyers selling a homogeneous product using identical production process. Everybody has perfect information about price. So let us try to understand a few examples. Yes, first, the vegetable vendor nearby. Too many sellers, too many buyers. Same tomato they are selling. There is no differentiation at all. Yes, selling identical, homogeneous, same goods they are selling. Everyone has perfect information about price. They know, yes, what price tomato is available in the next shop. They need not worry at all. Yes, pharmacy, you are buying some products on your pharmacy. Yes, again, it's a perfect competition. Yes, you are selling your FMCG products in retail sector. Suppose you are purchasing Lux soap, or say for example some shampoo, yes, or face wash, whatever it is. Perfect competition. Everywhere it's the same product. Okay, yes. Again, foreign exchange. You are dealing with the foreign exchange, foreign currency. Yes, again, if the product is same, homogeneous. If you want to purchase $1, it's the same dollar. You cannot tell, okay, I'm buying dollar from this particular person. It is going to have a different value. Same product. Yes, we know what is the price which is being charged. Clear? Yes. Again, trading in shares to stock broker. All these are few examples of perfect competition. Yes. Now let us see. Yes, every market we have bifurcated into 3. Yes, firstly, we have told what that market is all about. Secondly, we are telling how do we come up with the pricing in that market. And thirdly, few examples. Now, examples we already told: retail shops, vegetable shop, retail market, currency exchange. Now, how do we have a pricing in case of perfect competition? Tell me, students, can I set my own price in case of perfect competition? Is it possible for me to set my own price? Suppose I am a vegetable dealer. Yes, can I set whatever price I want? Yes, I am selling tomato. Same tomato is available everywhere else. Can I set whatever price I want? No, if I set whatever price I want, customers will not come to me. They will go to someone else. Because someone else is giving the same tomato at 20 rupees. If I sell it 70 rupees, will they come and buy? Nobody is going to come and buy. Yes or no, everyone? So what I am going to tell is, in case of perfect competition, firm has no pricing policy of its own. We are not having any pricing policy of our own. Firm is just a price taker. We are just accepting the selling price. That is, it will accept and sell at the market price. Market price will be determined based on demand and supply. Yes, the market price of tomato is, say for example, 30 rupee per kg. Everyone will sell at 30 rupee per kg. Now what will happen? Yes, if I try to sell at 25, everyone will reduce the price. So there is no point. If I try to sell at 35, nobody will come to me. So market will determine the price based on demand and supply. Yes, all the companies, all the sellers are just price takers. They will accept and sell at the market price. So I will not be in a position to determine at what selling price I will sell. The only thing that will be in my hand is how much quantity should I sell. Ultimately, my sale value is nothing but my selling price per unit into quantity sold. Yes or no? Selling price, I have no control at all. I am just a price taker. However, on my quantity, I have some control. Yes, the only decision a firm can take is regarding the quantity to be sold. Firm will continue to produce and sell so long as your marginal cost is lesser than or equal to your selling price. That is, so long as your marginal cost is lower than or equal to marginal revenue, you will continue to sell. Once your marginal cost is more, yes, we've already seen in decision making, it is no longer feasible for us to sell. Now look at this simple example I have given you. Yes, 100 units I am selling at 1000 rupees. My cost is 800. My profit is 200. Okay. If I sell 101 unit, yes, revenue is 1010. Cost is 808. Profit is 202. Marginal revenue, extra selling price is 10 rupee. Marginal cost is 8. Yes, marginal revenue is more than marginal cost. I will continue. Here, 102 units, 1020, 818. Yes, marginal revenue is 10 rupees. Marginal cost is also 10 rupees. I'm fine, I'm okay with that. Even if I continue, don't continue, it is fine. But look at 103 units. Yes, 1030 rupees. However, my cost is 830 rupees. My revenue is increasing by 10 rupees. However, my cost is increasing by 12 rupees. What happens to my profit, students? My profit is reducing because my marginal cost is greater than my marginal revenue. Will I go for this level, students? Will I go for this level? I will not go for this level. Yes or no? I will continue to produce and sell so long as my marginal revenue is higher than my marginal cost. That is, my selling price is greater than or equal to my marginal cost. Once my marginal cost is higher, I will stop producing and selling. Is it clear, everyone? Any doubts, students? Should we continue? Yes, so this was my perfect competition. Yes, we have told what is perfect competition. How do we go about pricing? Pricing, yes, there is no pricing policy of its own. We are just price taker. The only decision is about how much quantity we should sell. We will continue to sell so long as my marginal cost is lower than my marginal revenue. Yes, next I am having monopoly. Yes, what is a monopoly, students? It is a type of market where there is only one seller, students, but a large number of buyers. Yes, again, he is selling a homogeneous product. Obviously, one seller only. He himself cannot be selling, yes, different types of product. He is selling homogeneous products only, for which there are no close substitutes at all, and there are barriers to entry. Is it clear? Monopoly is a type of market, perfect competition, large sellers, large buyers selling homogeneous products. Here only one seller but large number of buyers selling a homogeneous product for which there are no close substitutes. Yes, just to give you an example. Yes, tell me example, students. Yes, Google as a search engine, monopoly, no one else is there close to it. Yes, Microsoft operating system, monopoly, no one else is close to that. IRCTC, yes, same railway service they are using, but there is no one else. Now, it could be because, see, restriction could be because of infrastructure, government regulation, whatever it is. But, yes, only one player is existing in the market. Hindustan Aeronautics Limited, yes, Android, Coal India, so many other examples are there. Yes, Meta, yes, all these are examples of our monopoly. Yes, now pay attention. Yes, how do I set my selling price in case of monopoly? In case of perfect competition, what we have told students, in case of perfect competition, what we have told, we don't have any decision. Yes, we are just price takers. Yes, however, in case of monopoly, what we are going to tell? I am the only player, yes or no, I am the sole player. Whatever price I want to set, I can set my price because I am the only player. There are not even close substitutes available for my product. Yes or no? The firm is the price setter. It is the price maker. Previously, perfect competition we have told it is the price taker. Here I am the price maker. It can fix any price it wants. It can fix any price it wants, but pricing is done based on elasticity of demand. Yes, I will set my selling price looking at the elasticity of demand. That is, ultimately, I will set my selling price in such a way that my profit will be maximum. Now, look at this, students. One simple example I am telling. Yes. Suppose, yes, I am falling under monopoly. Yes, I can set whatever selling price I want. Yes or no? 100 to 50, whatever selling price I want, I can set. But based on my selling price, customers' demand will fluctuate. I am setting a high selling price. Customers don't have an option, but only those who badly want that product, they will come and buy. I have reduced my price, more and more people will come and buy. That's the only thing. Now look at this. If I have set my selling price as 100 rupees, yes, I can sell 10 units. If I reduce it by 10 rupees, I can sell 10 more units. Yes, 80 rupees 30 units, 70 rupees 40 units, 60 rupees 50 units, 50 rupees 60 units. Now look at this. Yes, which selling price should I set? Yes, it is not that I should be setting my highest selling price. No, it is not even that I should be setting my selling price where my quantity is maximum. No, I should be selecting that selling price wherein the total profit is maximum. Suppose I am selling at 100 rupees, revenue is 1000, cost is 1000, profit is 0. Yes, at 90 rupees, revenue is 1800, cost is 1500, profit is 300. At 80 rupees, 2400, 2400 rupees profit. 2800, 2500, 300 profit. Yes, 0 profit, negative loss. Yes, where is my profit maximum, students? Where is my profit maximum? My profit is maximum at this particular point when my selling price is 80 rupees. That means ideally, what should be my selling price, students? My selling price should be 80 rupees. If I set my selling price as 80 rupees, overall my profit will be maximum. So looking at this particular factor, I will set my selling price. Now, as a monopoly company, I can set whatever selling price I want. If I want, I can set 100 also, 150 also, 50 also, 0 also. But ideal, what is ideal for me? Selling price of 80 rupees is ideal because it gives me the maximum amount of profit. Is it clear, everyone? Yes. So you have your examples here. Yes. Next, moving to monopolistic competition, students. Yes, monopolistic competition. What is a monopolistic market? Now look at this perfect competition. Large sellers, large buyers, large sellers selling homogeneous product. Monopoly, single seller selling homogeneous, same type of product they were selling. Now coming to monopolistic competition, students. Yes, it is a type of market wherein there are large sellers. Large sellers are there, large buyers are there. Now large number of buyers is compulsory for it to be called as a market. It will not be told everywhere. Large number of buyers should be there, only then it is called as a market. If there is only few buyer, yes, nobody will enter that market. Okay, large number of sellers, large number of buyers are there, so it is as good as a perfect competition, right? But wait, they are selling similar but not identical product or services. Yes, very beautiful line, students. What are we selling? Similar but not identical goods or services. Yes, we'll be using branding, advertising, packaging to differentiate our products from our competitors. Now, tell me a few examples, students. Yes, for monopolistic competition. Yes. Now, mobile industry. Yes, you have iPhone, MI, Samsung, Motorola, so many other companies. Yes, selling similar products. It's not that, yes, in iPhone, yes, along with phone, yes, you can, operate a rocket also, you can purchase land also, or else, yes, you can travel from one place to other place also. Same, ultimate features are same. You can call, communicate, we do video call, use your broadband services, all of that. But it's not identical. Some differentiation is there. Okay, selling similar but not identical goods or services. Next, shoes industries. Too many companies are there. Yes, ultimate objective is same only. Yes, but not identical goods. Fast food. Yes, too many different sectors are there. Coffee. Yes, Starbucks, Cafe Coffee Day, you have barista. Now you have recently some other things also. Yes, chai wala, all those things. Yes, similar but not identical goods or services. Again, you have your hair salon. Ultimately, you are getting a haircut only. But yes, it's not identical. Everywhere you get a haircut, it's not same. It is similar. That is the difference, students. Now, perfect competition. Large sellers selling homogeneous, identical goods or services. Yes, now in case of monopoly, single seller, restriction was there. There was barrier to entry. Yes, selling homogeneous products. Monopolistic, large number of sellers selling similar but not identical goods or services. Is it clear, everyone? Now, how do we set selling price? Now, I am telling, look at this. In case of monopolistic competition, yes, I am a price setter. I can set my selling price. But it's not like monopoly. In monopoly, whatever price on this earth I want, I can set. Because there is no competition. Here, I will set my selling price. But I will set my selling price keeping my market price into consideration. Look at this. Firm will set the price keeping market price into consideration. Say for example, yes, I am telling I am MI. Okay, yes, a nearby competitor Vivo has launched its phone. It is selling its phone at 15,000 rupees. Yes, I will set my selling price on my own. It's not that I am going to accept that, but I will set my selling price taking the market price into consideration. Okay, a similar phone is 15,000 plus or minus. I'm having a better camera. I will tell I'm having a better, say for example, battery. So based on that, yes, plus or minus I will do. Okay, I will set my selling price as 16,500. Is it clear? Firm will set its own selling price. However, yes, it will do that by taking the market price into consideration. Is it clear, everyone? Yes. Next, look at the students. Excess profits earned by monopolistic firms will attract more competition. So, in the long term, the excess profits will diminish. Very beautiful point, students. Now, what will happen? Initially, we'll keep earning, yes, excess profits. Now, say for example, I'm telling you a very simple example, MI. Okay, initially phones were there only in high price segment or else very low price segment wherein the quality was very bad. Now MI entered that 10,000 to 20,000 range. Yes, it came up with great quality, great features for 10,000 to 20,000 range. Now there was no other competition there. Similar but not identical product. Yes, on every unit it was earning a reasonably good amount of profit. Yes, excess profit. Look at this. Excess profit I was earning. Yes, normal profit percentage margin is say for example 10%. Yes, MI was earning initially say for example 30%. But what happens? Yes, there is a free entry. Yes, once people see that okay, yes, here there is competition, here there is scope for us to enter the market, what will happen? Yes, it will attract more competition. Only MI was there, slowly Vivo entered, Oppo entered, Realme entered. Yes, so many other people entered. Now also, yes, you are getting profit. You are getting profit. Every company is earning profit. Otherwise, they will not continue. But the excess profit will diminish. That extra profit that I used to earn. Yes, normal profit range was 10%, but I was earning 30%. That excess profit margin, that will diminish. And I'll in the long term, I'll only be getting my normal profits. Is it clear, everyone? Yes. Till where we should continue to sell? Continue to sell so long as your marginal cost is lesser than or equal to your selling price. Obviously, everywhere your decision making is simple. Yes, continue so long as your marginal cost is lower than or equal to your selling price. Is it clear? Examples we have told. Finally, we have oligopoly. Now, again, oligopoly. It is a type of market wherein there are few sellers. What is it, students? Few sellers, few, generally 3 to 5 big sellers selling homogeneous or identical products. What type of product? Homogeneous, same type of product. And firms are having mutual interdependence. They're completely dependent on each other. Yes, change by one firm will compulsorily initiate a change by other firm. Yes, will have an equal reaction by other competing firms. So now look at the example, students, for oligopoly. Yes, can you give me a few examples, everyone? Yes, first is your telecom sector. Yes or no? Yes, you have Vodafone, Jio as well as Airtel. Yes, now, yes, few players, there are only few number of firms. Yes, what type of products are they selling? What type of products are they selling? They are giving you homogeneous product, students. Yes or no? Yes, Jio is also giving you data calls. Yes or no? Airtel is also giving you the same. Yes, Vodafone India is also giving the same. Obviously, speed, slight difference will be there, but apart from that, no change at all. Yes or no? Again, I'm telling, yes, we have cold drinks. You have Coca-Cola, Pepsi. Again, under them only they're having too many different things, thumbs up, all those things. But mainly only two players are there. Yes, selling homogeneous, same products they're selling. Yes, passenger transport. Now we are telling, yes, you have to book a cab online. What all you are having? Ola, Uber. Only two people mainly. Yes, again you are telling tire industry. Yes, you have MRF, C8, Apollo tires, JK tires, 3 or 4 players. Again, online shopping, Flipkart, you have Amazon, you have. Yes, same things you are getting, homogeneous, but only few suppliers are there. Why only few suppliers are there? There is a barrier to entry. It's not as strong as your monopoly. Yes, if you are having a very serious barrier to entry, it becomes monopoly. But here, you're having 2 to 3 big players. Others cannot enter. Now, telecom industry, others cannot enter because it's already saturated. But existing players, yes, if existing players leave, if Geo continues to reduce the price, existing players will also leave, then it becomes a monopoly. Is it clear? Yes. So in this type of market we are operating. Now, what will happen from here? Sellers reduce, it becomes a monopoly. Sellers increase, it becomes a perfect competition. In between, what we have is our oligopoly. Yes. Now look at this, students. Yes, petrol pump also. Yes, Indian Oil Corporation, HP, one or two more you'll be having. Perfect example. Yes, how do we set our selling price? In case of oligopoly students, yes, firm will follow its pricing policy based on the pricing policy of competitor. Close your eyes, what your competitor is doing, yes, you should follow that. You cannot play with that. Now suppose I am telling, yes, suppose Coca-Cola and Pepsi is there. Okay, suppose Coca-Cola set its selling price as 30 rupees. Pepsi has to set its selling price as 30 rupees. If it tells, no, I am going to sell at 35, no one will come. Everyone will go for Coca-Cola. If Pepsi tells, no, I will sell at 25, I will give Coca-Cola competition. What Coca-Cola will do? Next day they will also make it 25. You cannot play with price in case of oligopoly. Both are strong firms. If you try playing, the other person also tries playing. Okay, so generally, yes, they will be matching the price. Okay, so we'll be following the pricing policy based on the pricing policy of your competitor. Yes, while determining our price, what all we should consider, students? We should consider the demand. Yes or no? If I change my price, what will be the impact on my demand? If I increase my price, my demand will reduce. If I reduce my price, my demand will increase. That is one point I have to keep in mind. However, one more point I have to keep in mind is also the reaction of other firms. Yes, how the reaction of other firm is going to be. That also should be kept in mind. Based on that, I should come up with my price. Now, ultimately, what firms do in case of oligopoly, they do not do anything different. They maintain the same price. Okay, more or less same price is being maintained, except for small fluctuation. More or less same price they will try to maintain. How they will maintain that? There are two ways: either a close analysis of each other's behavior or cooperation and collusion. Suppose I am telling, yes, I am Airtel. Yes, my biggest competitor is Jio for me. Now I want to know what all he is doing. Everything I want to do. How do I get to know what all he is doing? Either close analysis of each other's behavior. I will hire an employee who will be there full time only analyzing what Jio is doing. What is the price it is coming up with? Yes, it has come up with a new option telling, okay, work from home, extra data. I will also come up with that. Okay, it is coming up with some extra feature. Yes, yearly some extra feature it has come up with. Say for example, new yearly discount it came up with. I will also do that. It has increased the price. I will also do that. It has given discount. I will also do that. So I am keeping a person to closely analyze each other's behavior. Either I will do that or else cooperation and collusion. Yes, I will call Mr. Ambani. Yes or no? I will tell, see, only two of us are there. Let's do one thing. You also increase price. I will also increase price. Anyways, customers have no other option. Only two of us are there. So either they should come to you, they should come to me. Between us, let us not fight. Let us cooperate. Let us get together. Let us increase the price together. So what will happen? Customer has no option. He has to pay. So both of us will earn good amount of profit. So cooperation and collusion could also be possible. Is it clear, everyone? So what we are telling in terms of pricing policy, yes, firm will follow pricing policy based on the pricing policy of competitor. Point number one. Yes, while we are setting our selling price, you should consider the demand, the impact on my demand, as well as the reaction by my competitor as well. Yes, how do we maintain price? Two things: either close analysis of each other's behavior or else cooperation as well as collusion. Yes, all things are there. Razor companies, Gillette, Supermax, all of that is there. Now strategy in case of oligopoly. Yes, in case of oligopoly, either we can go for pricing strategy or non-price strategy. One additional point is there. Let's see that. Yes, pricing strategy is either we can go for predatory pricing or we can go for limit pricing, which is also called as entry force selling price, or we can collude with rivals and increase the price together. Suppose I am telling Jio. How did Jio enter the market? It entered with the predatory pricing strategy. It kept its price artificially low. Artificially low. It's not that, yes, it is selling at profit. Artificially, it is selling at loss. Why is it doing? Why is it doing? Why is it going for predatory pricing? Yes, to wipe off competition. Initially, Jio came, yes, free data to everyone. Yes, although it was incurring cost. Then they told, okay, 99 rupee per month you give, sufficient. Yes, why they were doing that? Yes, they wanted to wipe off existing competitor, all the other existing competitor. Yes, Domino, everything else. Yes, everything got wiped off. Yes or no? Yes, then it went for limit pricing, limit pricing. Yes, after that now what it is doing? Yes, it has set its price at 249 rupees per month. Yes or no? It's not that much of profit. Previously you were saying, yes, for 1 GB it was 250 rupees, 365 and all of that. Now monthly 2 GB per day, yes, 1 month free calls, all free messages, 249. Yes, then they've entered into limit pricing, limit pricing. What they are telling in limit pricing, yes, we want to discourage new entrant. Now see, there are other people also with investment. Yes or no? Now Adani is also standing. Okay, I can also invest in telecom. But yes, these people want to make sure that this sector is no longer attractive for them. If they see, okay, in this sector, good amount of profit percentage is there, 50% profit is there, 80% profit is there, it will attract competition. So now what they are doing, they are limiting the new entrant by setting the price low. Obviously, they are not selling at a loss. They are not selling at a loss. They are earning profit, but very low profit they are earning, so that they can ensure that there is no competitors entry. Is it clear? First was predatory pricing. I am keeping it artificially low so that I can wipe off my existing competition. Then I went to limit pricing, wherein yes, I am setting my price in such a way that yes, it is discouraging new competitor from entering the market. Yes, then what I will do, once all of this is over, there is no other competition, only two of us are there. Yes, we will collude with the rivals, increase the price. Yes, ultimately what we'll do, Airtel and Jio, only two of us are there, no one else is there. Yes, let us start increasing the price together. Till now we've struggled, we've put in our money, let's start earning the return on the investment. We'll start increasing the prices. Yes, customers have no other option because there is no other competition left. Is it clear, students? Yes, it is for this particular reason that yes, government of India had to ensure somewhere, Vodafone Idea is also there in the scheme of things. Otherwise, yes, this would have compulsorily happened. If only two players were there, yes, after a point of time, they would have collided, yes, colluded together, yes, increase the prices together. Okay, this was very much necessary to ensure that the sector remains, yes, attractive. Yes, not attractive, I would say the sector remains, proper, for the customers. There is nothing unfair happening to the customers in the long term. Is it clear, everyone? Yes, now your automobile, you can bring it in your monopolistic competition. Yes, monopolistic competition, because there you are having similar but not identical. It's not identical. There are differences, obviously. Yes or no? BSNL is still alive. Yes, how can I forget? BSNL was alive, is alive, will always be alive. Yes or no, everyone? Yes. But mainly in case of oligopoly, yes, firms will go for non-price strategy. What all are the non-price strategy, students? Yes, either they can focus on improving the quality as well as after-sale service. Airtel focused on that. Yes or no? Yes, it told, okay, price I will anyways keep slightly more is also fine, but I'll give best quality and best after-sale service. Yes, you can spend your money on your advertisement as well as sponsorship. Yes, Jio did that. Every IPL, every match. Oh, Jio, then what is it? They are spending on advertisement and sponsorship. So through that, they are trying to attract more and more people. Yes, it can come up with sales promotion schemes. Buy one, get one free. Yes, subscribe for 3 months, get 1 month extra. Subscribe for 3 months, get Hotstar extra. All those sales promotion. You see what is happening. Properly, exactly what is happening in real life, they have given it here, students. They can come up with the loyalty schemes. Okay, if you're a loyal customer, they can try to promote you more. Okay, by giving you some discounts, loyalty promotions, etc., etc., etc. Not getting into the details. Now, we have discussed the first concept, type of market. Now, look at the students, prepared a simple summary. Yes, number of sellers. Either you are telling only one seller or you are telling few sellers, many sellers. Yes, many sellers are there. Yes, we are selling homogeneous or identical product. I will tell it is perfect competition. Many sellers are there. We are selling similar but not identical. It is monopolistic. Yes, only few sellers are there. We are selling homogeneous or identical. It is oligopoly. Only one seller is there. I am selling homogeneous or identical. I will tell it is going to be monopoly. In case of monopoly, I am the price maker. I can set whatever selling price I want, but I will set my selling price in such a way that my profit is maximum based on my elasticity of demand. In case of oligopoly, I will set my selling price looking at the pricing policy of my competitor. That is, I will see the impact on my demand as well as the reaction of my competitor. Yes, I have to see close analysis of each other's behavior. Yes, and cooperation and collusion. Whatever I want, I can do. Perfect competition. We are price taker. Yes, we are not taking any decision about the price. The only decision is how much quantity we should sell. Sell so long as your marginal cost is lower than your selling price. And monopolistic, I can set my selling price. However, set that keeping your market price into consideration. Is it clear, everyone? Should we continue? This was our first concept, students. Yes, did you understand it? Yes. Now, moving to the next concept, students. Yes, once we've understood the type of market, then we should understand, okay, market is external. Now I should see for the market, which type of product am I coming up with? Okay, for the market, which type of product am I coming up with? Product could be three types, either a revolutionary product or an evolutionary product or a me too product. Yes, now let's try to understand. Simple example. Now look at this. Yes, during 2005, okay, mobile market consisted of, yes, Nokia, Motorola, BlackBerry. These were the biggest players. Yes, so what happened overnight? Steve Jobs came up with Apple iPhone that completely revolutionized, changed the way mobile industry operated. Yes, he came up with a revolutionary product. Yes, it was a monopolistic, yes, competition. It was a monopolistic market. Yes, he had to set his selling price looking at the competitor, but the product he came up with was a revolutionary. So he had the authority to set whatever selling price he had wanted, because it was completely different product. So you should not just see the market, you should also see for the market which type of product you are coming up with. Okay, Steve Jobs came up with iPhone, that was a revolutionary product. Based on iPhone success, yes, Samsung came up with some upgradations, evolutionary product. Yes or no? Yes. Next we will be having Me Too. Based on their success, too many other people. Yes, at that particular point of time, there was Carbon, there was Micromax, later on, Oppo, Vivo, Xiaomi, OnePlus. Too many companies have entered. Now these have become the Me Too products. Now look at this, students. Yes, what all these means. Quickly let us try to understand. Yes, revolutionary product. Yes, again, I can give you one more example, students. There's one more example. Suppose I'm telling, yes, car industries. Yes, right now in India, all these cars are there. Maruti, Honda, Hyundai, Tata. Yes, Mahindra, all these are there. Yes, Tesla came up with a revolutionary product. Yes or no? Electric cars, they came up with that. Driverless cars. Yes, revolutionary. Based on their success in India, yes, Tata started to adopt into electric. Tata started to manufacture their own, yes, electric vehicles. Evolutionary products. Is based on that, finally, yes, they came up with hybrid versions, all of that. Finally, now everyone else, they have got no other option, they are also trying to adopt to that. Yes, that becomes a Me Too product. Is it clear, everyone? Yes. Now let's look at the concept. Yes, what is a revolutionary? A product is said to be revolutionary if it is new for the market, completely new for the market. Like this, we had never seen before, we will never see again. iPhone, the first time it was introduced, and it has a potential to create its own value. It has a potential to create its own value. Once such a product enters the market, that becomes the norm of the industry. That becomes the way the industry is operated. Think of iPhone when it was launched. Yes, then it, the complete name was changed from mobile industry to smartphone industry based on, yes, the iPhone, the way the mobile they launched. Yes, Geo, they came up. Yes, they came up. Yes, obviously they came up with the same thing. They came up with data, calls, message, same thing. But the packaging was different. Previously, they were telling, okay, 1 GB this much, per call this much. They told monthly unlimited. Yes, the complete market changed. Now onwards, yes, everyone is buying, okay, yes, give me recharge for 1 month, unlimited. Yes or no? So, yes, it is new for the market. It has a potential to create its own value. Okay, it is going to have a revolutionary impact on the market, a completely revolutionary impact on the market. It is going to replace your existing method technology. They will enjoy product differential and have the potential to become market leader. If they focus properly, they can become the market leader. Yes, because they are having the product differentiation. They are having that first mover advantage. Yes, pricing, they will enjoy a premium price as a reward for the innovation and taking the first initiative. They are going to enjoy premium pricing. Obviously, you've seen all the revolutionary products majorly, okay. Yes, majorly your revolutionary products, they will go for premium pricing. Yes, Tesla, you've seen Apple iPhones, all of these are going to go for, yes, premium pricing, because as a result for their innovation as well as taking the risk and taking that first step. Is it clear? All your examples are there. Netflix also. Yes. Next we have evolutionary product. What is an evolutionary product, students? It is the upgraded version of an evolutionary product. Revolutionary product. Okay. Revolutionary product entered the market. Now iPhone entered the market. Yes, in that some issues were there, some things were there. Based on that, Samsung came up with their own smartphones. Yes, for the, yes, middle class segment. It was evolutionary. Yes, it was an upgradation of the revolutionary product. Yes, again, iPhone itself came up with their iPhone 2, 3, 4, 5, so on and so forth. Evolution. Yes, there are going to be few additional characteristics as well as features. Now, in this particular case, we are going to do demand-based pricing. We will see at this particular price what will be the demand. At this price, what will be the demand. Yes, all those calculations I will do. Ultimately, I will see at what price, yes, my profit will be maximum. Based on that, I am going to set my price. I will set my price based on my demand competition in such a way that my overall profit is maximum. Finally, I have my Me Too products. It is telling Me Too. Yes, it has seen that, okay, industry is lucrative. Yes, it will try to reverse engineer whatever products are there based on that manufacture. Now, what is MI doing? What has MI done? Yes, whatever products were there in the market, yes, it has reverse engineered, seen what all components are being put, how it is getting manufactured. Yes, it tried manufacturing the same product at a lower price. Me Too products emerge as a result of the success of a revolutionary as well as evolutionary product. Because of their success, because they are running in the market, because they are going for premium prices, we want to come up with the same product, however, give it at a lower price. They are very similar to evolutionary product. They are following similar production process and technology. Obviously, we have done a reverse engineering. From the finished goods, we are seeing what all components is used. Based on it, we are also doing. Obviously, same production process technology will be used. Pricing, they are just price takers. Pricing is determined mainly by the competitive forces. By now, they do not have any autonomy. Initially, they had the autonomy. Yes, now they have no autonomy. As too many people have entered the market, they are just going to be price taker based on what is being charged in the market, plus or minus. They will set their selling price. Is it clear, everyone? Any doubts in this one, students? Should we continue to the next concept? The third concept that we are having is our pricing strategy. What strategy we will set to set our selling price? Now, we have seen the type of market: perfect competition, monopoly, monopolistic, oligopoly. Then we have seen the type of product also: revolutionary, evolutionary, me too. It is not necessary that just because my product is revolutionary, I should start with, yes, skimming pricing. Yes, there are two different pricing strategies, students, two different pricing strategy. Yes, firstly, I have my skimming strategy. Just give me a minute. Yes, two different pricing strategy. First, I have my skimming price. In skimming, what I am going to do? Initially, I will charge a high amount. Slowly, I will reduce my price. Okay, yes, this is what was happened in case of Apple iPhones. Initially, yes, the moment Apple iPhone, latest Apple 15 iPhone is launched, they will set a high selling price, 1,50,000. Slowly, yes, they will reduce the price to attract more and more people. Okay, or else you can go for penetration pricing. Yes, what Jio did, initially very small price, 99 per month, 149 per month, 199 per month, 249. Slowly it can increase the selling price. Now, yes, see, there is no hard and fast rule that just because my product is revolutionary, I should go for skimming. You may be having that conception. No. Now look at Amazon. Amazon entered perfect competition market, retail goods, perfect competition, same goods we are selling. Too many sellers were there. Yes, it came up with a revolutionary product. You sit at home, we are going to deliver at your home. But it did not go with skimming pricing. It went with penetration. Initially they told, yes, we will give it at lower than the market price. Yes, because they were looking at a very long-term horizon. Now skimming price, in a reality, skimming price, you see, if your product life cycle is very short, penetration you see when your product life cycle, you're expecting it to be very long. Now Ola, Uber, yes, they entered the market, they came up with a revolutionary product. You need not wait for a taxi driver, you need not call, you need not listen to all the things he's telling. Yes, just on your app, he will come, he will pick, he will go. You just pay the amount. But they did not go for skimming pricing, they went for penetration pricing. From a small price, they went up. UPI, yes, they went for penetration pricing. So just because your product is revolutionary, not necessarily you should go for skimming only. It depends, it depends. Now let's see what is skimming, what is penetration, students. Yes, in case of skimming, yes, product is introduced to market at a very high price. Okay, later gradually the price is reduced. Yes, it is used for innovative products. Obviously, I can use it only for my innovative products. Yes, it is characterized by high promotional expenditure in the initial phases. In case of skimming, high promotional expenditure is incurred. Yes, I'm coming up with something which is completely out of the box. So in order to, yes, come up with that product, research and development is going to be high. And in order to make customers realize that they want it, the promotional expense is also going to be high. Two things are also high. Is it clear? Yes. Now, reasons for adoption of skimming pricing. When all can we adopt skimming pricing? Yes, demand will be inelastic in the earlier stage till the time product is established in the market. So we are telling demand will be inelastic. Yes, whether I change my price slightly, my quantity will not impact. Suppose I am telling iPhone I am selling. I am selling at 1,50,000. I am selling at 1,60,000. I am selling at 1,40,000. There are those premium iPhone holders. They will go and buy. Yes or no? So whether I slightly increase my price or reduce my price, yes, my demand will not be impacted. Because there is that premium category of people who will come and buy. So when they are obviously willing to come and buy, why don't you charge high? Anyways, yes or no? So that is, I am telling demand is going to be inelastic in the earlier stage till the time product is established. Initially, Apple iPhones are launched. Yes, people are standing in queues, crazy. Yes, they are just telling, we want an iPhone. Yes, so when people are there, yes, who are willing to pay a higher amount, why should we give them at a lower price? Okay, point number one. Yes, high price in my initial period will skim the cream of the market who are relatively insensitive to price. We are telling, look at this. Yes, this is the market. Yes, this is my creamy layer of people who are willing to pay a higher amount. So from them, I will get the higher amount. Yes, I will skim the cream. I will get that cream. I will get that extra profit. I will get that extra profit from the people who are willing to pay extra, but they want the products early. Yes or no? That's what Apple is doing every time. Yes, initially it will keep a very high selling price because they know, yes, they've created a brand wherein people will come and pay extra just to tell that I have a latest version of iPhone. Okay, so high price will skim the cream. We will, yes, remove that cream. We will get that premium. Yes, that cream. Yes, generally, yes, when you are, boiling your milk or whatever you call it. Yes, so you will be getting that cream on the top, right? So we are just trying to remove that premium layer, that creamy layer. We are willing to pay maximum price. For the balance people, I will give it at a slightly reduced price. Now, reduction of price later on will increase my sale. First, I will focus on that category of people who are insensitive. From them, I will get at the best price. Then slowly, once I reduce my price, what will happen? Yes, other people also who wanted to buy, but they were not willing to pay so much amount, they will also start buying. Yes or no? Yes. So next, they are telling, yes, high price is charged because in the beginning, the demand for the product is not known. At start, I won't be knowing. Telling for the next iPhone, whether 5,000 units will be sold, 50,000 will be sold, 5 lakh will be sold. So if I am telling, yes, I will set a high price so that even though I am selling very less units, I will recover my high research and development and my high promotional expenditure. Is it clear? And I would have incurred high initial capital cost on research and development, patents and huge promotional expenditure to recover the same. High price is charged at start. Few examples for you guys. Yes, you have your iPhones, initially high price, slowly they'll reduce the price. Intel processors, latest i9 processor, high price. So for older processors, they will reduce the price. Tesla, initially they'll come up with a high price, slowly for their older versions, once they start producing in mass, they will reduce the price. Yes, PlayStation games, initially high price, slowly they will reduce the price. Now look at the students, reasons for adoption of skimming pricing. Now look at this. I will tell at point T0, at point T1. Yes or no? At point T0, what I am telling? Yes, firstly I am telling demand is going to be inelastic. Yes or no? Whether I change my price, customers will still be buying. So why not? Yes, I charge a higher amount. Yes. Second, I am telling, yes, I can skim the cream of the market. Yes, two things. Firstly, yes, demand is going to be inelastic. Whether I change my price, customers will still be there. I can skim the cream of the market. Again, third, I will tell, I would have incurred high capital outlay cost, high research and development cost, high promotion expenditure. So obviously, I will tell, I will go for a higher amount. Yes, and one more point was there. High capital, yes, demand is not known, demand is uncertain. Okay, and finally, yes, after a particular point of time, T is equal to 1, after some time, if I gradually reduce my price, I will be in a position to increase my quantity. So 4 points. Yes, first I am telling, initially demand is inelastic. Yes, I can skim the cream from that segment who are willing to pay a higher price. Yes, I have already incurred the initial high capital outlay cost, high promotion expenditure. So obviously I will tell, I will charge a higher amount. Yes, slowly, once I have already skimmed the cream, yes, for my balance category of customers, I will slightly reduce my price so that I can sell more quantity. Is it clear, everyone? Yes, next we have penetration pricing with us. Everyone pay attention to penetration pricing. Yes, in this strategy, product is introduced to the market at a low price. We are entering the market at a very low price. Once the product is established in the market, gradually price will be increased. Yes, we are entering the market at a very low price. Geo, it's a very small price we entered. Once the product is established, slowly we increase the price. Amazon, at a very small price, they were selling it initially at losses for so many years. Once it is established, stabilized, they slowly increase the price, they start earning their profit. Zomato, Swiggy, you have your Myntra, all these people. Yes, your Ola, Uber, PhonePe, all these people. Yes, product is introduced at a very small price. Yes, once it is stabilized, once it is established, gradually the price is increased. Yes, why do we use it? Yes, we use it to popularize a new product and penetrate the mass market as quickly as possible. Now look at this, students. See, one thing which, yes, our textbook has not given is, see, ideally when will I go for skimming? Penetration. Skimming I will go if I think that, yes, my product is going to have a shorter shelf life, shorter life cycle. Generally you see, yes, iPhone, shorter period. Yes, again, they've told, okay, oh, you had your Intel processors, PlayStation, shorter shelf life. After that, you have to come up with a new thing. Penetration, you see, Amazon. Same Amazon only. The products will keep varying, but ultimately your product is Amazon, right? Yes, again, you've told, yes, your Ola, Uber. Yes, your Netmeds. You have your PhonePe. Yes, PhonePe, Google Pay, all this. It's very long product life cycle they're expecting. So they're telling, even though initially I incur losses, no issues. I will, yes, so recover it subsequently. Yes or no? Yes. So low price policy is used for long-term survival as well as profitability. Yes, low price will discourage competitors from entering the market. Again, reasons for adopting penetration pricing. What all are the reasons, students? Firstly, I'm telling my demand of the product is elastic to price. Now, say for example, initially Jio had come up with the same scheme telling unlimited data, but monthly you have to pay 700 rupees. Unlimited, everyone wants unlimited data, but existing, yes, Airtel data was available, 1 GB data only, but it was available at 200 rupees. Call was available at 200 rupees. They were incurring monthly 400. Yes, here we are giving so much more features, but we are telling 700. Whether, yes, customers would have switched so quickly? No. Yes, my change in demand is elastic to price. So they realize that quickly, and quickly they drop their price. Through that, they get a maximum demand. From that, slowly they start increasing their price. Okay, next we are telling there are substantial savings due to large scale production. Yes, if we are producing in large scale, there are substantial savings. What will happen, students? Yes, suppose I am telling I am producing only 1000 units. My variable cost is 5000, fixed cost is 2000 per unit, my total cost is 7000. Suppose for a mobile. Yes, but I am producing 10,000 units. My variable cost per unit will come down. Why? I am buying in bulk. I will be getting my bulk discount. Yes, all those things, benefits I will be getting. Again, my fixed cost, same fixed cost. Now it is distributed over 10,000 units. It will come down. So my cost, yes, will decrease by a great extent. So if I produce in bulk, if I sell in bulk, my cost will reduce. So if my cost is reducing, obviously I can sell at a lower price. Is it clear? Again, I am telling there is a threat of competition. So I am setting my selling price low so that I can create that entry barrier, and I want to popularize a new product and penetrate the market as quickly as possible. These are the reasons why we try to adopt penetration pricing. Firstly, demand is elastic. Yes, if I produce in bulk, there will be substantial savings. Yes, there is a threat of competition, as well as I want to popularize a new product. For these four reasons. Examples, same thing is there. Now, few additional points, students. There is something called as skimming pricing versus premium pricing. What is the difference, students? What is the difference in skimming and premium pricing? Yes, skimming pricing, skimming pricing. Now look at this skimming pricing. In skimming, I am setting a high price upfront. Slowly, I will reduce. iPhone, initially high price. But once the later versions of iPhone come, they will reduce the price so that they can sell more quantity. Yes or no? Initially, I will be charging a high price, but later on I will reduce my price. However, in premium, that's not the case. Full time I am setting premium price only. Say for example, price will always be kept artificially high only, so that I am catering, I am attracting only a niche category of customers. Say for example, I am telling Starbucks, every time you go, yes, coffee is 300 rupees only. They are not telling, okay, yes, weekly, Wednesday you come, we'll give it 50 rupees or 20 rupees. No, they are not going to do that. They are catering only to a premium category customers. Yes, Rolls Royce you are telling, Lamborghini you are telling, all these. They are telling we don't want these price sensitive customers only. We only want premium customers who can pay us more than what utility we are giving. Yes, they have to be paying more than what the utility we are giving. So we are keeping it artificially high so that only few people will afford, only few people will come for this. Is it clear? Next, penetration versus predatory pricing. Yes, there is a difference, a small difference, students. Penetration, my objective is, when I'm telling I want to penetrate, yes, penetration pricing, my objective is to enter the market. I want to somehow enter the market, make a place for myself. Predatory pricing means I want to wipe out the existing competition. Say for example, I am telling, yes, I've started with my CA final classes. Okay, I am telling, yes, I've started with my CA final classes. Yes, I want to, yes, obviously we cannot tell it as market, but still, okay, or else I'll tell some other example. Say for example, I will tell you, what other example can I tell? This only I will tell. Yes, simple for you guys to relate also. Yes, penetration means I am telling, yes, my objective is to enter the market. Yes, I have to enter the market. I should get few students. For that purpose, what I am doing, everybody is giving CA final classes at 15,000. I am giving it at 5,000. Objective is just to enter the market. Yes, there is no other objective telling, yes, I should wipe out competition, I should become monopoly. None of those things are there. I should just get a place for myself. However, predatory pricing, what is objective? The objective is just to drive out competition. What Jio did, it gave free. Objective was not to enter the market. If it wanted to enter the market, even if it gave unlimited data at 200 rupees or 300 rupees, people would have still gone for Jio in a small point of time. They wanted to drive out all the competition. They wanted to become monopoly. For that, they kept their price artificially low. Here my price is low. Here it is artificially low. So that, yes, existing all other competitors cannot survive only. Is it clear? Yes. Next we are having pricing in case of special situation. Yes, during recession, in case of recession, how do we set our selling price, students? In case of recession, I will set my selling price above my marginal cost but below my total cost. What am I telling? I will set my selling price above marginal cost. I will recover my marginal cost but below my total cost. What is it, students? Yes. Now look at this. Suppose I am telling I am a producer and seller of pen. Yes, to produce pen, my variable cost is 6 rupees, my fixed cost is 2 rupees. That is 1 lakh I will be incurring in a month. I will be selling 50,000 pen generally, that means per unit 2 rupees. My total cost is 8 rupees. I thought I will get a profit of 2 rupees, my selling price is 10 rupees. Normally I was selling at 10 rupees, but what happened? Yes, it is a case of recession. Nobody wants pens right now. Yes, assume for a time being. Now, now look at this, students. Yes, selling price normally I'm going to charge is 10 rupees, but it is a time of recession. Okay, customers are not willing to purchase the product at all. Okay, so what I can do, just for a short period during recession, if you needed, I can set my selling price at 7 rupees. That is between my, yes, it is higher than my marginal cost, but it is lower than my total cost. Yes, why? What will happen, students? But you will tell, but I am not recovering my fixed cost, right? Now look at this, students. We have already told in decision making, fixed cost we will incur irrespective of whether we produce or not. It is incurred for the period. 1 lakh rupees I will incur in a month. Whether I sell pen, whether I don't sell pen. If I sell at 7 rupees, assume I am selling 50,000 pen. Yes, I will not be in a position to recover 1 lakh fixed cost, but at least 50,000 fixed cost at least I can recover, right? Yes or no? Otherwise, yes, if I am setting my selling price as 10 rupees, no one will buy. Yes, I will not be in a position to even recover 1 rupee fixed cost. Now, if I have set my selling price as 7 rupees, at least 50,000 fixed cost I can recover. Yes, so from that perspective, during a recession only, I can set my selling price above my marginal cost and below my total cost. What all are the advantages, students? Look at this. I can continue to use the services of skilled employees. Suppose I am having skilled employees. Yes, so it is a recession. Either I will be taking a decision. I will shut down my operations for a while. Later on, I will start again. But if I am shutting down my operations, we have already seen that decision, shut down, continue versus discontinue business decisions. Yes, if I shut down my business operations, what will happen, students? Yes, later on it will be difficult for me to get the skilled employees. But if I am selling at a slightly lower price, but I am recovering my marginal cost and recovering a bit of my, yes, fixed cost as well, I can continue to use the services of skilled employees who will be difficult to employ if I have discharged them. Okay, my plant and machinery can be prevented from deterioration. Yes, otherwise I am completely stopping my production. All my plant and yes machinery, I will close it and keep it. Yes, after 1 year when I am just opening my factory again, yes, my plant and machinery, yes, will become deteriorated. I have not used it at all. But if I am using it continuously, it is in working condition. Yes, I can prevent it from deterioration. Again, organization can take advantage of improved business condition later on. Once we have come out of recession, yes, once the business condition improves, I can take advantage. Because other players who have shut down their business, they have to again start their business, restart their operations, get, skilled employees. They have to get their plant and machinery in working condition. They have to set the operations, everything. But I am already ready. I can take that plunge. I can take that jump. I'm already having that advantage because I was continuing my business. Is it clear? Yes. However, one point has to be kept in mind, students. We should not opt for drastic price cutting. I should not be going for drastic price cutting. Only to a small extent I should reduce my price. If I go for drastic price cutting, it will be difficult for me later on to increase my price. Point number one. Second, the orders accepted should not be for a long period. I should be accepting order only for short periods. Why, students? If later on my condition becomes better and I've accepted an order for a long period, telling okay, next 2 years I will give a pen at 7 rupees. Later on, yes, condition has become better. Everyone is, yes, selling at 10 rupees, but still I am selling only at 7 rupees. I will keep regretting that decision. So, yes, I should not go for a drastic price cutting. Order should not be for a longer period. It should be only for a smaller period. Is it clear, everyone? Should we move to the next point? Special points here. Yes or no, everyone? Pricing below marginal cost. Now, what is this, students? This is beyond our logic. Yes or no? We are saying pricing below marginal cost. What is it? Marginal costing. Yesterday, one complete chapter we have studied. Yes, it is going against marginal costing. It is telling even if you are getting lower than marginal cost, sell your product. Set your selling price even below marginal cost. We are not understanding what on earth is happening. Wait, we'll make you understand. Don't worry. Yes. In few situations, in few scenarios, we can set our selling price even below marginal cost also. When students, if my raw material is of perishable nature, yes, raw material is of perishable nature. Suppose vegetable, suppose I have purchased tomato, I have paid 30 rupee per kg. So my marginal cost is 30 rupee per kg. Yes, today evening, it is almost close to night. Okay, if I sell my product today, I can sell. By tomorrow, it will be of no use. I will just have to dispose that product. I'll just have to throw that product. Yes, to waste. Now, today evening, one customer has come. He is telling, yes, I will give you 20 rupees. Now, look at this. My marginal cost is 30 rupee per kg of tomato. Yes, my selling price, normal selling price is 50 rupees. Now, a customer has come. He is telling, yes, I will give you 20 rupees. Give me 1 kg of tomato. Will I give? Will I not give? If I don't sell, if I tell, no, my marginal cost is only 30, how can I sell at 20 rupees? Wait till tomorrow, it will become 0. You will not be getting anything. Now, if you sell, at least 20 you will be getting. Yes or no? So, if your raw material is of perishable nature, yes, now its shelf life is almost about to expire. Sell it at whatever cash realizable value. Don't see whether you are recovering your marginal cost also or not. Is it clear, students? If your raw material is of perishable nature. Secondly, if your stock has accumulated in large quantity and the market price has fallen. Say for example, I am telling, yes, I am a cloth manufacturer or a footwear manufacturer. Yes, I have designed one particular brand of cloth. Say for example, I will say, yes, during World Cup, yes, Cricket World Cup is happening. So during Cricket World Cup, yes, I have designed Cricket World Cup India jerseys. Okay, I thought so many people are going to buy, so I have produced 1 lakh jerseys, 1 lakh, yes, jerseys. Yes, my marginal cost was, say for example, 200. I was selling it at 500 rupees. Fine. Cricket World Cup got over. I'm still having, say for example, 10,000 shirts, 10,000 jersey shirts, which are still not sold. Now what happened? After World Cup, yes, India came up with a new jersey, with a new, yes, different logo, yes, different jersey altogether. Now it is of no use. Yes, stock has accumulated in large quantity. I'm having stock in large quantity. Market price has fallen. India has come up with a new jersey. Now this old jersey no one else wants. My marginal cost is 200 rupees. Now if I sell, yes, there is one customer who is telling, yes, I can buy it at bulk. I will give you 150 rupees. I'm telling my normal selling price is 500. He's telling, if you sell it to me now, you will get 150. If you wait for some more time, that also you will not get. Okay, so I'm willing to sell at whatever cash realizable value I'm getting, even if it is below my marginal cost. Is it clear, students? Or else, to popularize my new product, we have told 3 different scenarios. If my goods is of perishable nature, if stock has accumulated in large quantity and market price has fallen, to popularize a new product, Jio, PhonePe, what they have done? Yes, they were selling at a very small price, even below their marginal cost. Or if such a reduction enables firm to boost the sale of other products that are having a higher margin, it is called the razor blade model. I'll just give you one example. In our regular class, we give so many, a list of examples. Yes, you have your printer and printer cartridge. Yes or no? Yes, initially few years back, HP was selling the printer at a very small price, 2,500. They were selling at a loss. Yes, they were selling it even lower than their marginal cost. Why? Because they knew that, okay, people, yes, customers have purchased printer. Now continuously to take printer, they want cartridge. Cartridge they have to buy from HP only. Yes, HP cartridge, they are going to charge a higher amount. From HP cartridge, they will earn the profit. It is a recurring source of revenue. Yes, printer, they will sell at a loss. So if such a reduction, if a reduction in price, printer I am selling at a loss, people will be like a small amount only. But it will enable me to boost sales of my other product, related product, which is having a higher margin. Too many examples are there. I have just given you one simple example. Is it clear, students? Yes. In that particular case, I can set my selling price even below my marginal cost. 4 scenarios. If my raw material, if my goods is of perishable nature, or stock has accumulated and market price has fallen, yes, in order to popularize a new product, or such a reduction in selling price helps us to boost sale of other product which is having a higher margin. Yes, again I am telling, yes, if I am coming up with a new product for the company but not for the market, I am telling it is a new product, but it is new product only for me, it is not for the market. Say for example, I come up with my own set of mobile phones. Yes, smartphones. I am telling Tabish smartphones. Think with Tabish smartphones. It is new product for me. In the market already these phones are there. I cannot tell it is a revolutionary product. I am going to set a very high price, all of that. I will just have to go for my market price or slightly below market price. Is it clear? You can go for your revolutionary, yes, your skimming penetration only if it is new product for the company also, for the market also. Only if it is new for the market, you can go for your skimming penetration, all those, yes, whatever price you want to set. Otherwise, you have to go with your market price or slightly below your market price. Is it clear, everyone? Yes. Till here, any doubts? Should we continue, students? One more important point is there, students. Yes, pricing through my product life cycle. Through my product life cycle, how do I set my pricing? Now, product life cycle is a concept which will come in a different chapter. Yes, cost management techniques, that we'll be discussing 2 days later. But yes, how do we set our selling price? Now, in our product life cycle, we are telling every product has a life cycle which is under 4 stages: introduction, growth, maturity, decline. Introduction is the initial stage. Growth is that growth stage wherein we are getting more sales. Yes, maturity is that stage where everything stabilizes. Finally, there will be a decline. Okay. Now, how do I set my price? Through different stages of my product life cycle. In case of skimming, what do I do? In case of penetration, what do I do? This is important, students, from your examination perspective. Yes. Now, in case of skimming, what am I doing, students? How do I set my selling price? I have to tell what is going to be the impact on selling price, what is going to be the impact on my production cost. Now, in case of skimming, how do I set my price, students? Initially, what am I going to do? Initially, I will come up with a high price. Yes, on Apple, high price. Slowly, I will reduce my price. Yes, during growth. Yes or no? Initially, high price. During growth, I will slightly reduce so that I will get more quantity. Yes, during my maturity, I will try to stabilize my price. Slightly, I will give a reduction, but more or less, it will be stable. Yes, during decline, again, I will reduce my price. Okay, now look at this. I'm giving you a very simple example. Say, for example, Voltas. Yes, Voltas came with the first AC in India in the early 1950s. For the Indian market, it was a revolutionary product. They had not seen anything like that. So initially, they decided we will go for skimming pricing. Yes, so initially during introduction phase, they went for a very high price. Say, for example, they were selling this AC at 70,000 rupees. Introduction phase, high price. During growth, what we'll have to do? Slightly, we have to reduce our selling price. Yes or no? It is skimming. During growth, obviously, we will reduce our selling price. Suppose they are telling, I will reduce my selling price and bring it down to 60,000 rupees. Yes, why am I doing this, students? Two reasons are there. Firstly, I am telling, see, till now I have skimmed the cream of the market as I have attracted those people who were insensitive to price. Yes, now I also want to attract those people who are sensitive to price. So if I reduce my price slightly, they will be attracted. Point number 1. Yes or no? Yes, till now only those people who were willing to pay 70,000, I was attracting them. Now there are some people who are willing to pay somewhere around 60,000. I should attract them also. So for that, I have reduced my price. Okay, to gain market share and attract those people who are sensitive to price. Point number 1. Second is, I know that, okay, my product has entered the market, it has become successful. Obviously, I am standing alone there. Competitor will start coming. I don't want to make the industry look very attractive to my competitor. If I make this industry look very attractive, too many competitors will come. Ultimately, they will erode the overall profitability. So instead of that, what I will do? I will myself reduce my price a bit so that I can discourage competitors from entering the market. Look at this. One reason is to gain market share, but at the same time, I also want to discourage competitors from entering the market. So during growth stage, introduction, none of the people in India knew about AC. Growth stage, other people slowly started to get to know about AC. Blue Star, LG, all these people started to get to know about AC. So I will reduce my prices slightly so that I can gain market share. Firstly, I can sell more units. Secondly, I can to an extent try to discourage competitors from entering also. Okay. Next, during maturity phase. Yes, I have reduced my price already. Yes, during maturity phase, if needed, I can reduce my selling price slightly to maintain my sales quantity. If needed, I can reduce my selling price slightly even more. I was selling at 60,000, I can sell at 55,000. So that more units I can sell. Or else, what I can do is, I can keep my selling price the same, but give some add-ons to retain my market share. Suppose I am telling 60,000 only, but along with AC, we are going to give you a stabilizer. We can give some add-ons. So what is happening, students? Yes, introduction phase, we are charging a high price. During growth, we will reduce our price. Why? Two reasons. Yes, firstly, in order to discourage my competitors from entering, in order to attract price-sensitive customers. During maturity, either I will reduce my selling price slightly to maintain my sales quantity, or else maintain the selling price, but give some add-ons to my customers. And finally, during my decline phase, what am I going to do? I will reduce my selling price even further. During decline, there is no need for my product at all. Say, for example, yes, there has been an invention of a new type of, yes, product, okay, which will give, cooling, without impacting the environment adversely. Suppose some such innovation has come into picture. Or else say for example government has banned the ACs altogether. So what I will do, I will reduce my selling price even further, telling whoever wants to buy right now, let them buy. Yes, whatever I'm getting is a bonus for me. So no, it's my decline stage. Product has become obsolete and is replaced by better products. Yes, if I reduce my selling price and sell my product, I can at least reduce my holding cost. Yes, I have produced my goods. To hold those, I was incurring some cost. If I sell them, at least that holding cost, yes, whatever interest cost I was incurring, whatever storage cost, etc., I was incurring, at least that I can reduce. Is it clear, students? Any doubts till here? Should we go to our cost perspective? From our, yes, selling price perspective, we've seen high price slowly reduce, either reduce to maintain market share or maintain the selling price, give some add-ons. During decline, again reduce your price. Now what happens to my production cost, students? Everyone pay attention. Yes, production cost. Yes, it is my skimming pricing. It is my revolutionary product. Yes, when do I go for skimming pricing, students? I will be going for my skimming pricing when I have incurred a huge capital outlay cost, huge promotional expenditure. Yes or no? So initially my production cost is going to be huge, high amount of production cost. Yes, I'll be incurring high cost of production. Yes, because high research and development cost I have done, high promotional expenditure I have incurred. Yes or no? Initially, yes, to manufacture ACs, too much research and development we have done. Again, to promote it, too much promotion, too much advertisement we have done. So, initially, my cost is going to be very high. Say, for example, I am telling, yes, my production cost per AC was coming somewhere close to, say, for example, 50,000 rupees initially. Because firstly, only few people are buying. So, my fixed cost will be distributed on over only few units. Again, too much research and development I have incurred, too much promotion expense I have to incur. So, my production cost is going to be high. Now, in growth stage, what will happen? My production cost will reduce. Why will it reduce, students? My production cost, why will it reduce? Yes, four costs are there, students. My raw material cost, my labor cost, my variable overhead cost, my fixed overhead cost. All my four costs will reduce. Raw material cost will reduce. Why? Because I am getting bulk discount. Yes or no? Yes. Now, previously in introduction, I was selling only few units. Growth, I am selling more units. Yes or no? So I am buying more raw material. I can get my bulk discount, because of which my raw material cost will reduce. Labor cost will also reduce because my employees have got learning curve benefits. Previously, it was the first time they were producing AC. So they were taking more time to assemble one AC. They were taking 10 hours. Now slowly the time taken has reduced. They are assembling an AC in 7 hours. So my cost has also reduced. Is it clear? For labor, I have my learning curve benefit. Yes, again for my variable overhead, yes, I am having a larger batch size. Okay, for my fixed overheads, I am having economies of scale. So what is this larger batch size? Suppose I am telling setup cost to set up my machine. Okay, yes, I was incurring 10,000 rupee per setup. Yes, previously, yes, I was producing very little units, so I didn't know how many units were needed. So one time I've set up my machine, I was producing 100 units. Once I've set up my machine, I was producing 100 ACs. So cost per AC was 10,000 I've incurred, that is for 100 ACs. The cost was 100 rupee per unit. So it is variable cost. Setup is variable cost, but it is variable based on activity. We've already told in, yes, your decision making chapter. Variable based on units, variable based on other than units, activities. Now next to what we are doing, growth phase it is. Too many units you have to produce. I am now confident. What I'll tell, one time I'll set up my machine, I will produce 10,000 units. So 10,000 rupee cost I've incurred for 10,000. That means per unit, effectively the cost has come to 1 rupee. So your variable overhead cost, that is your setup cost, has also reduced from 100 rupee to 1 rupee. Is it clear? Because of your larger batch size. And your fixed overhead cost will also reduce because of your economies of scale. Yes, previously, yes, you are incurring a fixed cost of 1 lakh rupees, 1 crore rupees. It was for 10,000 ACs. That means for one AC you were incurring 1,000 rupees. Now you are incurring 1 crore rupee for 1 lakh AC. More AC you are producing. That means your fixed cost will remain same. More units are getting produced. That means your cost per AC becomes less. It becomes 100 rupee per AC. So because of economy of scale, your fixed overhead cost, yes, gets distributed over more units. So overall, all your cost gets reduced. Is it clear, students? Yes, during my cost in skimming, introduction phase, cost is going to be high because I have incurred huge research and development cost, huge capital outlay, huge promotion expenditure. During growth, my cost is going to reduce. How? Four things. My raw material cost will reduce because I am getting bulk discount. Labor cost will reduce because I have gained learning curve benefits. My variable overhead cost will reduce because I am producing now in a larger batch size. My fixed overhead cost will also reduce because I am getting economies of scale. Is it clear, everyone? Again, during Maturity phase, my cost will be constant because all my benefits already I've got. Bulk discount already I've got, nothing more I can get. Learning curve benefit already I've got. Economies of scale already I've got. Yes, larger batch size already I've got. So further reduction will not be possible. Yes, so and during decline phase, my cost will increase again. Why? In decline phase, number of units sold will reduce. That means my supplier will no longer give me the bulk discount. My fixed overhead cost, which I was previously distributing over more units, now I cannot be distributing over more units. That is, my economies of scale will also be lost. Is it clear, students? So now look at this. In case of skimming, what is happening? Yes, my selling price. Firstly, my selling price, initially high selling price. Yes, then I will slightly reduce my selling price. Why? Two things. Firstly, to discourage competitors from entering the market, to attractive price sensitive customers. During maturity, either I will reduce my selling price slightly to maintain the quantity, or I will maintain the selling price but give some add-ons, stabilizers. During decline, I will reduce my price again because my product has become obsolete. Okay. Now coming to my cost, students, cost. Yes, during introduction phase, I will be incurring high cost because huge capital outlay, huge research and development, huge promotional expenditure I have done. During growth, my cost will reduce. Yes, why will my cost reduce during growth phase, students? Because raw material I've got bulk discount, labor learning curve, variable overhead larger batch size, fixed overhead again I've got the benefit of economies of scale. During maturity it will be constant because I've already availed all the benefits. During decline again it will increase slightly because yes, whatever my bulk discount and the economies of scale that I've got, I'm going to lose it. Is it clear? Similarly, we have in case of penetration pricing, students. Look at this. Yes, in case of penetration pricing, at introduction phase, we will start with a low selling price. In case of penetration, what will happen? First, we will enter the market, geo. First, we will enter the market with a low selling price. During growth, we will increase. During maturity, again, we will increase. During decline, we will stabilize. Something like this is going to happen. Now, look at this selling price. During introduction, low selling price. During growth, I will increase my price. During maturity, again, I will increase my price. During decline, I will keep it constant. Is it clear? Yes, again, my production cost. Yes, in introduction only, my production cost is low. Yes, my production cost is low in introduction only. Why? Because I am producing in bulk. Yes or no? In penetration, I want to sell my units to more people. So I am penetrating the market. So I am selling more units. So obviously, I am getting some benefits upfront only. So my production cost upfront only is low. Is it clear? But when I enter my growth stage, it will reduce even further. Why? Same 4 reasons. Raw material, I've got bulk discount. Yes. Labor, I've got learning curve. For fixed overhead, I've got economies of scale. For variable overhead, I've got larger batch size. During, yes, maturity, it becomes constant. Yes, all my benefits I've already availed. During decline, again, it will increase because my bulk discount is lost. My economies of scale is lost. Now, if you see your cost from cost, yes, your skimming and your penetration is the same for growth, maturity, decline. Only in introduction it is different. In skimming, introduction also cost is high. However, in case of penetration, introduction also cost is low. Yes, here it is different. In case of skimming, high selling price, reduce your selling price. Yes, maintain your selling price or slightly reduce your selling price. Yes, even during decline, again reduce. In penetration, low selling price, increase, constant. Is it clear, everyone? This is one of the important concepts. So we have discussed this one also. Yes, again one small point is there. Yes, which is there in one of the questions. So I have put this freemium pricing. What is this freemium pricing, students? The term itself is telling it is free plus premium. So we are telling some things we are going to give you free. However, for some other things you have to pay a premium. Okay, it refers to a pricing strategy where few products or few services or few features are provided free of charge. However, for advanced features, premium is charged. Say for example, Gmail, 15 GB storage is free. Beyond that, you have to pay a premium. Yes or no? Yes, many mobile applications will be there. Zoom, 40 minutes call is free. About that, you have to be paying premium, etc., etc. Is it clear, students? Any doubts till now? Should we continue? Yes, that is our pricing method. So 3 things we have done. Firstly, we've seen the type of market in which we are operating. Perfect competition, monopoly, monopolistic, oligopoly. Then we've seen the type of product we are coming up with. We've told revolutionary, evolutionary, me too. Then we've seen the pricing strategy. Either you can go for skimming or penetration. Finally, all this is done. Finally, I'm telling, let me set my selling price. Selling price could be set in 3 ways, either cost based, competition based, or value based. Again, not that important, but let's quickly see. Yes, cost based methods. In that, I'm having full cost. See, there is nothing to be by hearted here. At least if at all a question comes, you just have to write it down. Now, full cost method, what it is telling? Yes, calculate your full cost, add your profit, set your selling price. Suppose your variable cost is 50,000, fixed cost is 30,000, your total cost is 80,000 of your mobile. Yes, you are telling I want 50% on cost. So you will set your selling price as 1,20,000. It is your total cost plus desired profit. As simple as that. Yes, next you have your variable cost based pricing. So here what you are telling? You are telling, yes, I will tell my variable cost plus desired return. So suppose I am telling 50,000 is my variable cost. Now my desired return should be in a position to recover my fixed cost also, should be in a position to give me the profit also. Suppose previously I have told I just want 50%. Now I am telling I want 150% because I have to recover my fixed cost also, profit also. So this way also I can set my selling price. Okay. Or else I can set my selling price based on the return on investment also. Here how do I set my selling price, students? Suppose I am making certain investment in my business in a year. I will be having the desire that I want this much return. Suppose I have invested 10 lakh. I am telling ultimately I want a 20% return. That means 2 lakh ultimately I want profit. So I should set my price in such a way that ultimately I will be getting 2 lakh as my profit. Now keep in mind one thing, students. So my total sale value, yes, will be equal to my total cost for the year plus desired return on investment for the year. Suppose I am telling, yes, the total return on investment that I want is 2 lakh rupees. Yes, the total cost of the goods that I am going to sell is 10 lakh. That means altogether I should be generating a sale of 12 lakh. Suppose I am telling 12 lakh I want by selling 1,20,000 units. That means per unit I should be getting 10 rupees. Yes, however, this way we are going to calculate. Now pay attention, students. Yes, very simple thing. Yes, how do I calculate my desired return on investment? Yes, return on investment. It is my, yes, investment into how much return percentage I want. Desired return on investment. So I will tell it is my capital employed, how much capital I have employed in the business into ROI percentage. Now ROI percentage that I am going to consider. Will I consider my pre-tax ROI percentage or will I consider my post-tax ROI percentage? Yes, will I consider my pre-tax ROI percentage or should I consider my post-tax ROI percentage? Tell me, students. Yes, in my desired ROI, should I be considering my pre-tax or should I be considering my post-tax? What is the concept telling? It is telling I should be considering my ROI percentage before tax. Now, very simple logic I will explain also. Now, look at this. What I want to set? I want to set my selling price. Yes or no? Yes. From my selling price, I will reduce my cost. I will be getting my profit before tax. So here, what am I doing? Yes, from my cost, I am adding my profit. So I will be getting my selling price. It is before tax. From that, yes, I will reduce my cost. Okay, I will be getting my profit before tax. So my ROI percentage should be before tax only. Now, proper explanation. Now look at this, students. Suppose I am telling, I am giving you one simple example. My total cost is 30 lakh rupees. My investment is 50 lakh. Yes, tax percentage is 40%. I want an ROI of 20% after tax. That means after tax, how much profit I want, students? After tax, 50 lakh into 20%, I want 10 lakh rupees after tax profit. After tax profit, I want 10 lakh rupees. Now, if I tell my selling price is going to be 30 lakhs plus 10 lakh, 40 lakh, is it sufficient? Yes, if I do 30 lakh plus ROI is, yes, investment into 20% after tax. Is it sufficient for me? I will be getting 30 lakh plus 10 lakh, 40 lakh as my selling price. Now see in reality what will happen. Sales is 40 lakh, cost is 30 lakh, my profit is 10 lakh. But on my profit I have to pay to government also. Yes, government is telling give me 40%, 4 lakh I have paid. That means my profit after tax will be only 6 lakh rupees. 6 lakh on your 50 lakh will just give you somewhere close to, how much it will give you, students? Will just give you 12%, but you wanted 20% after tax. Now what I am telling, look at this. See, for my cost, when I am adding my profit, I will be getting my selling price. From my selling price, I reduce my cost, I will be getting my profit before tax. So I am getting my profit before tax. So my ROI percentage should also be before tax. Only then I will be getting, yes, my selling price in such a way that even after I reduce my profit, I will be getting, yes, the desired profit. Now look at this, students. In this particular case, if I consider my ROI before tax, suppose I am telling if I earn 1 rupee before tax, I will be paying 0.4 rupee tax, I will be getting 0.6 rupees after tax. Yes or no? That means if I want 20 rupees after tax, how much I should be earning before tax, students? Yes, it is 20 divided by 0.6. Yes, it is going to be 33.33%. Yes or no? Simple calculation. If you want, you are having your formulas as well. Yes, you ultimately done 20 divided by 0.6. 20 is your ROI after tax. divided by 0.6 is nothing but your 1 minus tax rate. But I would always say do not by heart. Yes, do it logically. Yes, 20% I want after tax. Yes, which is nothing but 60% of my after tax profit. That means what is my before tax rate? Yes, 20 divided by 0.6, I got it as 33.33% I want before tax. Now you do it. You can tell your cost is 30 lakh. On your 50 lakh, you want 33.33% before tax. That means your sale value should be 46 lakh 66,667. Now compare, students. If your sale is 46 66 667, your cost is 30 lakh. That means your profit before tax is 16 lakh 66,667. Your tax, 40% of that comes to 666 667. Your profit after tax will be 10 lakh. My ultimate objective is, yes, I should be getting ultimately profit after tax, which is 10 lakh on 50 lakh. I should be getting 20% after tax. Is it clear, everyone? So now how do we do this? Look at this, students. Yes, I will set my selling price. Total sale value is equal to total cost plus desired return on investment. Desired return on investment is nothing but my capital employed into ROI percentage. But when I am considering my ROI percentage, ensure it is your ROI before tax. Yes, how do you get your ROI before tax? Simple cross multiplication you can get, or else you can also tell it is your ROI after tax divided by 1 minus tax. I do not believe in formulas. I only believe in logic. So that's what I am also telling you guys. Yes, when you can build your formulas, believe me, everything from start to end, you can develop formulas yourself by logic. So why should we try to by heart the formula, students? Is it clear? So this was using my return on investment. Example is there. If you want, you can see this. Yes. Next, I am having competition based pricing. I am telling, yes, I will set my selling price based on competition. Now, first one was cost based pricing. Yes, this cost based pricing I can go if my product is unique, if there is less competition. But we have told modern business environment, too much competition is there. You cannot be telling, yes, I will set the price the way I want and customer will still buy. No, competition is going to be intense. So sometimes what will happen, students? We will have to set our selling price based on what is happening in the competition, what my competitors are doing. So I will have to go for competition based pricing. So in case of competition based pricing, how will I set my selling price? There are two different prices which is given, students. First one is my going rate pricing. Second one is my sealed bid pricing. So what are these points telling? Let us try to understand, students. Yes, now first one we have is going rate pricing. Yes, what is this term going rate telling? It is the going rate. It is the average rate which is running in my industry. So I am telling, yes, don't worry anything. Whatever is the average price which is running in the industry, at that price you sell. Suppose I am telling I am a vegetable vendor. Okay, I am selling, yes, tomato. Yes, how should I set my selling price? There is no point looking at your cost, how much profit you want, ROI, everything forget. It is same product, perfect competition. Yes, ultimately, what your competitor is charging. He is charging 40 rupees, you also charge 40 rupees. End of the story, nothing more, nothing less. Is it clear, students? So in case of perfect competition, in case of oligopoly, yes, in all these cases, there is no way for me to charge whatever price I want. Suppose I am selling vegetables, or else I am telling I am selling Pepsi. I will see what Coke is charging. Same amount I will charge. As simple as that. Yes or no, everyone? Yes, should we continue? Now look at this going rate. What is the going rate pricing? I am telling it is the average level charged by the industry. Suppose I am telling one more example. Suppose I am ACC cement. Okay, there are different cements. Okay, yes, JP Cements is selling at, say for example 440. There is one more. Okay, Ambuja Cement is selling at, say for example 420. Some other cement is selling at, say for example 450. Yes, what is going rate? It is just the average of these prices which is charged in the industry. It is the average level charged by the industry. Yes, where do I use this? I will use this in case of homogeneous products. Yes or no? Homogeneous products, my perfect competition, my oligopoly, there I am going to go for this. Yes, the only thing I can do, selling price is already set. The only thing that I am having in my hand is cost control. I can survive if I can control my cost. Otherwise, there is no way for me to survive. Is it clear, students? So in case of competition based pricing, I am having going rate pricing as well as sealed bid pricing. Now, what is a sealed bid pricing? It is used for bids or for tenders. Yes, tender. I am going for a tender, students. Yes, I am going for tenders. Going rate, should I repeat it again? Okay. Going rate is nothing but the average. Yes, it is nothing but the industry average selling price. I will see what is the average selling price charged in the market. At same selling price, I will sell my product. As simple as that. Say for example, I am selling water bottles. Yes, same type of water bottle everybody else is selling at 200 rupees. I will also sell at 200 rupees. Suppose I am selling Bisleri water. Everyone is selling Bisleri water at 20 rupees. I will also sell at 20 rupees. I am selling calculator. Same type of calculator everyone is selling at 300 rupees. I will also sell it at 300 rupees. It is the average price charged in the industry, average level charged by the industry. It can be used in case of homogeneous product markets. The only thing that is there in my hand is a good cost control. Is it clear? Next, I have my sealed bid pricing. In a sealed bid, in a properly sealed bid, I am telling my price. It is generally used for bids or for tenders. Say for example, there is a government construction work. Yes, there is a nearby, say for example, big metro construction work. Suppose Bangalore metro construction work is there. So they will tell, yes, there is a big, yes, metro construction from point A to point B. Yes, 50 kilometers metro has to be constructed. Yes, they will tell, okay, what are the bare minimum qualification? Contractor should be having this degree, this certificate, at least 10 years. He should be there. He should have done at least one big company, yes, construction. Yes, all these constructions will be there. Yes, all the people, yes, who are satisfying all these conditions can come up with your tenders, can come up with your bids. Suppose I am fulfilling all these conditions. I will go with my bid telling, okay, I will undertake this contract. I will do it at 10 crore rupees. One more person will tell, yes, he will tell he will do at 9 crore rupees. One more person will tell he will do at 8 crore rupees. One more person will tell he will do at 12 crore rupees. For whom the bid will be allotted, students, for whom the contract will be given. It will be given to the person who charges the lowest. Obviously, he should fulfill the bare minimum conditions. Yes, amongst that, whoever charges the lowest, for him, the bid will be allotted. Now, why is it coming under competition pricing? Yes or no? Yes. So, how will I set my selling price, students? I will set my selling price based on what my competitor is charging. Okay, now look at this. If I know that, yes, my competitor is going to charge 8 crore rupees, I will never go for a bid with 10 crore because I know it will never be accepted. I will go for a price lower than 8 crore. If I think it is still feasible for me, I will go for 7.9 crore. Because ultimately I have to get my bid, ultimately I have to get my contract. Is it clear? So this is why it is coming under competition. Yes, I am going for a bid. Yes, while I am setting my price in a bid, when I am telling in a sealed bid, I am telling my price, telling, okay, my price is going to be 12 crore. Yes, what I am thinking what all my competitors will charge. Based on that, I will be setting my price. Is it clear, everyone? A bid is a firm's offer price, firm's selling price that it is telling. Yes, it is set based on the expectation of how my competitor will set the price. If I am expecting my competitor will set 10 crore, I will keep it at 9.5 crore, something like that. Yes, a bid is set at a lower price than what is set by other competitors. Example could be construction work, defense contract, etc., etc., etc. Now, there is this table telling what is going to be the impact if you change the price on the impact on the profit as well as the probability. If you increase your selling price, your profit will increase. Suppose your original bid was 9 crore. You increase your selling price to 10 crore. Your profit obviously will increase because for the same contract you are getting 10 crore. However, the probability, the likelihood of getting the bid will reduce. However, if you reduce your selling price to 8 crore, your profit will reduce. However, the likelihood of getting the bid increases. Is it clear, students? So first we have discussed cost based pricing. Next we have discussed competition based pricing. We have discussed going rate as well as sealed bid. Then finally we have our value based pricing methods. So here we have true economic value as well as perceived value. Now, true economic value, perceived value, very simple, students. Yes, let's do it very quickly. Yes, true economic value. What is true economic value? The term itself is telling the true economic value the good is trying to give to me. What is the real worth that product is giving to me? Yes, it means the value or benefit that the product is intended to deliver to my customer. Yes, relative to other products. When comparison to other products, how much value, how much benefit it is supposed to give me. That is my true economic value. Yes, it is irrespective of whether the consumer can recognize the benefit or not. Now I am having a formula. True economic value is cost of next best alternative plus value of performance differential. What is it? Let's try to understand, students. Everything is pure logic. Suppose I am telling I am MI. I am coming up with a new phone. Okay. I want to set my selling price. Okay. Yes, there is a comparable phone which was launched by Oppo. They had set a selling price of 15,000. So it is running in the market at 15,000 rupees. So I am thinking 15,000 anyways I can sell it. Because Oppo is selling at 15,000, I can also sell at 15,000. But wait, both the products are not the same. I am having some extra features. I am having some performance differential. What are extra I am having? Yes, I'm having a better camera than Oppo. Yes, so if you just look at that camera specification, yes, my customers will be willing to pay me 3000 extra for that camera because high quality pictures it is in a position to click. So ideally, how much my customers should be paying me for my MI phone? 15,000 plus 3,000, 18,000. They are willing to pay for my MI phone. That is the true economic value. Again, I'm telling, yes, not just that, storage is also better than Oppo. So for that, on a standalone basis, yes, to get better storage, my customers are willing to pay 2,000 rupees. Yes, again, speed is also better. For that, my customers on a standalone basis are willing to pay 1,000 rupees. So what I'm telling, yes, my phone can be compared with Oppo's latest phone, whose selling price is 15,000 rupees. However, I have come up with 3 advanced features whose individual value is 3,000, 2,000 and 1,000. That means how much extra value I am giving when compared to Oppo phone. 3 plus 2, 5 plus 1, 6,000. That means altogether how much value my phone is giving to my customer students. How much value my phone is giving to my customers. My phone is giving a value of 21,000 rupees to my customers. So I can set my selling price somewhere in the range of 21,000. Is it clear? So I am telling, yes, it is the cost of next best alternative. In my case, okay, what is the cost of Vivo plus the value of performance differential? How much performance differential extra features I am having, that will give me my true economic value. Say for example, I am telling, we have come up with Grand Vitara, latest car. I am already having a Creta. For Creta, people are willing to pay, say for example, 18 lakh. But here, we have come up with Assume 7-seater option. For that, people are willing to pay 2 lakh extra. We have come up with a panoramic sunroof for which people are willing to pay 1 lakh extra. That means what is the true economic value of Grand Vitara? 18 lakh anyways they were willing to pay for Creta. So 3 lakh extra they are willing to pay for that extra seating as well as panoramic sunroof. That means the true economic value, the real value my product is giving is 21 lakh rupees. Is it clear everyone? Any doubts? Yes. So it is the cost of the next best alternative plus the value of my performance differential. Now pay attention students. See, all this calculation I as a company am doing. It is not necessary that my customer will appreciate this. Suppose I am telling, yes, suppose there is one person, okay, yes, I call her the selfie queen. The only job she has to do in life is, yes, click selfies, upload on Insta, put it on Snapchat, nothing else. She wants phone only for one particular purpose, that is to click pictures. She doesn't care what the storage is, what the speed is. The only purpose she wants in life is camera. Now look at this. For her, I am telling, yes, see ma'am, yes, there is a phone by Oppo which is selling at 15,000. Fine. Here we are coming up with a better camera, 3,000 extra. She's like, oh, better camera. That is what I wanted. Okay, 3,000 I'm willing to pay extra. She's telling, yes, ma'am, we are coming up with better storage space also, 2,000. She's selling storage. I don't want storage and all. Just give me camera. Yes, again we are telling, yes, we have come up with a better speed, 1,000 rupees extra. Yes, anyone is willing to pay because the speed is much better. She's telling, I don't want speed. I just want to click photos. That means what is the value she is perceiving as a customer? True economic value is the value I as a company am telling to my product. Perceived value is the value which my customer is perceiving. Yes or no? Yes, the selfie queen. She is telling, see, we are telling 21,000 value. Yes, it is giving. But she is telling, see, Oppo phone, it was available at 15,000 rupees. I was willing to purchase that. But here, camera is better. So I can pay 3,000 extra for my camera. That means how much value she is thinking. She is telling, you give me RAM, you give me specification, you give me whatever. I don't care at all. It is there, it is not there, I don't care at all. All I want is a better camera. That means what is my value this phone is giving me? What is the value the phone is giving me? It is only giving me a value of 18,000. So maximum how much she will be willing to pay, students? Maximum amount she will be willing to pay is only 18,000 rupees. Is it clear everyone? Now look at perceived value. What is your perceived value? It is the value which is actually delivered by the product. Actually how much value we are giving. Okay, from the customer's perspective. It is the amount the customer is willing to pay for the product. How much customer is willing to pay. Yes, customer in this particular case, 15,000 anyway she was willing to pay for Oppo. 3,000 for extra camera she is willing to pay. She is not willing to pay for these features. Just because we have come up with advanced feature, it is not necessary. My customer should appreciate and be willing to pay for that. I should be seeing how much worth my customer is getting from the product. That is the perceived value from my product. Is it clear everyone? Now look at this, students, how pricing will be done. Suppose I am telling, yes, in our case, the true economic value of our mobile, MI's mobile phone was 21,000. But I should not be setting my selling price at true economic value. Yes, The cost of producing the mobile phone was, say for example, somewhere I'm telling 12,000. The perceived value which that girl was assuming was 18,000 rupees. Now, if I set my selling price at beyond 18,000 rupees, 18,000 rupees is the perceived value from the perspective of that customer, that selfie queen. She is thinking, okay, 18,000 value it is giving me. Yes, will she be paying anything more than 18,000 rupees, students? Yes, will she be paying anything more than 18,000 rupees? Yes, she will not be paying anything more than 80,000 rupees. Yes or no? So what I am telling, yes, if I am setting my selling price at higher than my perceived value, customer will not buy. She is telling 18,000 only worth it is. I will not be paying more than that. Yes, my cost is 12,000 rupees. If I sell it lower than 12,000 rupees, will I be getting any profit, students? My cost is 12,000 for my MI phone. Will I be willing to sell it lower than 12,000? No, seller will not be selling it lower than 12,000. That means in what range should I set my selling price? I should be setting my selling price in the range between my perceived value and my cost of goods sold. 12,000 is my cost of goods sold, 18,000 is the perceived value. In that range, if I set my selling price, company is also happy because company is also getting profit. Customer is also happy because customer is thinking that 18,000 benefit I am getting, but it is available at 16,000 only. Sometimes you may have heard people thinking, yes, product is very much worth, yes, value for money, worth the money that I have put. Why? Because they feel that the perceived value is more, but the amount they have paid is less. Say for example, you have gone to a hotel, you've had nice food, very best food you had. You are thinking, yes, this bill may come to 1,000 rupees, but you saw the bill is only 800 rupees. Will you be happy or not? You'll be very happy. You're telling, yes, perceived value. I am thinking, yes, we have got a value of 1,000 rupees, but they are charging only 800 rupees. So your customer is happy. So what I'm telling, perceived value is the maximum amount your customer is willing to pay. But ideally, keep your selling price slightly lower than your perceived value. Keep it between your cost of goods sold and your, yes, perceived value, so that customer is also happy, you're also happy. Is it clear, everyone? So now look at this. Pricing, company should set a selling price at lower than perceived value but higher than cost of goods sold, which is beneficial for both the people. Is it clear? Yes, with this we have finished the pricing methods. Cost based pricing we have seen, competition based, going rate, sealed bid, as well as value based, true economic value. It is the value that the product is intended to deliver from company's perspective. Perceived value, it is the value that the customer is perceiving, yes, that the product is going to deliver to him. Is it clear, everyone? Now we have the final concept, which is the miscellaneous areas. Quickly we'll finish this off. Till here, any doubt? Should we continue, students? Okay. Yes, miscellaneous areas. Yes, whatever is there in the textbook we have put, whatever I feel is not important, I'll just tell you. You can read it by yourselves. Now, profit maximization model or theory of price. Very important, students. A very beautiful concept. Now, try to understand, students. Yes, what is a company's objective? Whether yes, I'm telling one of the three you have to tell, students. Whether company's objective is to increase the selling price, or is it to increase the sale quantity, or is it to increase my profit? What is my objective? Ultimate objective is to increase my profit. Yes or no? I don't want to sell my product at maximum price. I don't want to sell maximum product. My objective is I want to sell my product at that price, and I want to sell that much quantity which is going to give me the maximum profit. Is it clear? So the objective is to find out that selling price at which goods should be sold and that quantity of goods which have to be sold, so that overall my profit is maximum. Yes. As per economic theory of pricing, yes, economic theory, we know that profit is going to be maximum at the point where my marginal revenue is equal to marginal cost. This we have already known. Yes, slowly, initially my marginal revenue will be higher than marginal cost. Till then we continue, we expand. Slowly it reaches to a level wherein my marginal revenue will be equal to marginal cost. That is the point at which my profit is maximum. Beyond that, if I continue, my marginal cost will be greater than my marginal revenue. That will reduce my profit. So maximum I should go to that point wherein my marginal revenue is equal to my marginal cost. Now there are steps to solve the question. Yes, in our regular class, detailed explanation, derivation we are going to do. But here quickly, in the littlest time possible, let's try to understand what is happening. Suppose I am telling you, students, Mr. A is a seller of tomato. He is selling tomato. Yes, variable cost per kg of tomato, assume it is 80 rupees. Yes, if he is setting a selling price of 100 rupees, demand is 0. If he is selling tomato at 100 rupees, no one is buying. Okay. If selling price will be reduced by 10 rupees, demand will increase by 5 rupees. What I am telling, if I reduce my selling price, if my selling price I reduce by 10 rupees, my quantity, it will increase by 5 units. Can I tell? That means to increase 1 unit of quantity, by how much my selling price should be reduced, students? To sell 1 unit, by how much my selling price should be reduced? My selling price should be reduced by 10 divided by 5, 2 rupees. Yes or no? This is called as my slope. Yes, technical term use this B. You can call it as B or you can call it as slope. In very simple language, it means, yes, by how much I should reduce my selling price in order to sell 1 unit quantity. As simple as that. Now look at this, students. Look at this. If I am setting my selling price as 100, no one is purchasing. But if I reduce my selling price by 2 rupees, what will happen, students? One customer will purchase. Yes or no? If I have set my selling price as 100 rupees, no one is buying. But if I reduce my selling price by 2 rupees, yes, if I reduce my selling price by 2 rupees, quantity will be increased by 1 kg. If I set my selling price as 98, my quantity will be 1. If I reduce my selling price by 2 more rupees, I set my selling price as 96. Yes, I can sell 1 more unit. I can sell 2 kg. I reduce my selling price further by 2 rupees. 94 I make it. Yes, again 1 more kg I will be in a position to sell. I reduce it 2 more rupees, 1 more kg. This way all my options I have set. Yes, in all the options I have seen what is the total revenue, marginal revenue. I have seen the total cost, marginal cost. I have seen my total profit. The point at which my total profit is maximum is this point, students. Okay. Yes, you guys can see it by yourselves. Yes, if I am selling at 90 rupees, I will be in a position to sell 5 units. Total revenue is 450. Yes, your cost is 400. Your profit is 50 rupees. This is the maximum profit. Now, same answer. In this case, okay, we've got it by trial and error. Every time it is not necessary we should be getting it by trial and error. So, how do we get this answer? What I ultimately want, I want 2 things. At what selling price I should sell? How much quantity I should sell? 2 things. Now pay attention, students. Yes, we'll try to tell you the logic as quickly as possible. Now selling price I got. Yes, if I am selling 0 units, what is my selling price, students? If I am selling 0 units, my selling price could be 100. Yes, if I want to sell 1 unit, what I'll have to do? Yes, I have to reduce my selling price by 2 rupees. Yes or no? If I have to sell 2 units, what I'll have to do? I have to reduce my selling price by 4 rupees. 2 rupee per unit into 2 units. 4 rupees, that means I should make it 96. If I have to sell 3 units, that's what it is telling, yes or no? If I reduce my selling price by 2 rupees, I can sell 1 unit extra. If I have to sell 3 units, means I have to reduce my selling price by 6 rupees. 2 per unit into 3 units, that is 94 rupees. Now this is the formula of my selling price. Now look at this, students. I am giving annotations. Selling price is equal to A minus B into Q, where A is the selling price at which my quantity is 0. Yes, understand. See, it's very simple. It is my selling price at which quantity, demand is 0. Okay. B is my slope. I've told it is my slope. B is my slope. I can also tell it is my change in price divided by change in quantity. I have told if I reduce my price by 10 rupees, quantity will increase by 5 kg. That means 2 rupee per unit. In very simple terms, slope, I have told you to sell 1 unit, by how much I should change my price. To sell 1 unit, by how much I should change my price. That is what my slope is all about. And Q is how much quantity I have to sell. Yes or no? Here I am telling, okay, I have to sell 0 quantity, minus 2 into 0. I have to sell 1 unit, 2 into 1, 2 units, 2 into 2. Yes, suppose I am telling, yes, I have to be selling 5 units. What should be my selling price? Now I can get very simply, students, A minus BQ. A, selling price at which demand is 0, 100, minus B. In order to sell 1 unit, I have to reduce my price by 2 rupees. That means in order to sell 5 units, I have to reduce it by 10 rupees. That means my selling price should be 90 rupees. As simple as that. Is it clear, students? Whether the formula of selling price is clear, everyone? Should we continue? Yes, is this logic clear? Selling price logic is clear, students? Yes, so your selling price is nothing but your A minus BQ. Now we have to calculate marginal revenue, students. Now look at this. Yes, we've got that our ideal selling price is 90 rupees per kg. Ideal quantity to be sold is 5 kg. Yes, same thing we'll get formula method. I've told selling price formula is A minus BQ. where A is the selling price at which quantity is 0, B is the slope, which is nothing but change in price divided by change in quantity. In very simple layman terms, in order to sell 1 unit, by how much I should reduce my price? As simple as that. Q is the quantity to be sold. Now, I should get to know first how many quantity is to be sold. Now, pay attention students, what I am telling. I have to calculate my marginal revenue. Yes, I will tell how do we calculate marginal revenue, then steps to solve the question, I will come at that. Yes, marginal revenue formula they are telling it is A minus 2BQ. Yes, in very simplistic way, I will try to explain in the regular class, proper derivation, yes, logical explanation, too many things we are doing, but here in a very simplistic way, we are going to explain. Now look at this students, what is my marginal revenue? In very simple terms, it is how much extra revenue I have got by selling 1 unit extra. Yes or no? Very simple. Suppose I have to sell 5 kg, my selling price should be 100 minus 10, 90 rupees per kg. If I have to sell 6 kg, my price should be 100 minus 2 into 6, that is 100 minus 12, 88 rupees. Now if I am selling 5 kg, 90 into 5, my total revenue is 450. If I am selling 6 kg at 88, my total revenue is 88 into 6, 528. That means how much extra revenue I have got, students, how much extra revenue I have got. My extra revenue is 78, that means my marginal revenue is 78 rupees. Now I have to calculate it using a formula. Now look at this students, very simple logic I am giving you. Yes, I am going from 5 kg to 6 kg. So two things are happening. One, there is a gain, one, there is a loss. What is the gain? Previously I was selling 5 kg, but now I am in a position to sell my 6th kg. 1 kg extra I am in a position to sell at 88 rupees. That is my gain. Yes or no students? I am having a gain. Previously I was selling only 5 kg, but now 1 kg extra I am in a position to sell. On that extra kg I am getting 88 rupees. That is my gain. Is it clear? Okay. But there is a loss as well. What was happening? Previously 5 kg I was selling at 90 rupees. Yes, now, yes, when I'm selling 6 kg, I'm selling at 88. That means 5 kg at 88. My 6th kg also I'm selling at 88 rupees. That means, can I tell, on my 5 kgs, I have lost 2 rupee per kg? Yes or no? So, in order to increase my kg by 1 rupee, I have reduced my selling price by 2 rupees. So, on my existing 5 kg, I have lost 2 rupees, 10 rupees I have lost. So, I can tell I have gained 88 rupees, I have lost 10 rupees, 78 is my net gain. Is it clear students? Logic. Yes, so I have lost 10 rupees. So can I tell on my existing 5 kg, I have lost 2 rupee per kg? Yes, I can tell that. Now look at this, what I am telling. What is my gain? What is my gain? It is my new selling price. My new selling price of 88 rupees is my gain. How do I get my selling price, students? I have told you the formula. Yes, selling price formula is A minus BQ. What is my loss, students? What is my loss? I have lost 2 rupees. On my existing 5 kg, I have lost 2 rupees. What is 2 rupees per kg? It is my slope. Yes or no? In order to reduce my quantity by 1 unit, I have to reduce my selling price by 2 rupees. That is what I have lost. On 5 kg, I have lost. I have lost it on my 5 kg. That is my quantity. So A minus BQ. This is my gain. However, I have lost my BQ. So my marginal revenue is A minus BQ, which makes it A minus 2BQ. Very simple explanation, students. Proper derivation, differentiation, all of that is there. Yes, in the regular class, we are going to discuss it in detail. But here, in a very simple way, I have told you, yes, if I am selling 1 unit extra, that 1 unit extra revenue I will be getting, that is my gain, A minus BQ. However, on my existing units, I will be losing because my selling price will reduce. I will be losing that slope amount. So, minus BQ. So, A minus 2 BQ is going to be my marginal revenue. So, two formulas we have explained, we have made it clear. So, selling price is A minus BQ, marginal revenue is A minus 2 BQ. Now let us see what is the steps to be followed. Till here we have just seen the formulas. Now what is the steps to be followed to solve the question, students? Firstly, I want 2 answers. I want what is the quantity I should sell. Again, I want at what price I should sell. Firstly, I will try to get what is the quantity to be sold. I know that profit is maximum at the point where marginal revenue is equal to marginal cost. Okay. Marginal cost generally will be given in the question. In this example, we will see. Yes, I have to just equate my marginal revenue to my marginal cost. Suppose I know my marginal cost is 80 rupees. I have to just equate my marginal revenue to my marginal cost. What is marginal revenue, students? Marginal revenue is A minus 2BQ. Generally, my A will be available, B slope will be available. Yes, so the only missing data is Q. So I will be getting how much quantity I should be selling. Is it clear? So marginal cost will be available. Yes, I know marginal revenue is A minus 2BQ. Based on that, I will equate the formula. I will be getting how much quantity to be sold. Once I've got how much quantity should be sold, now I know if I have to sell that much quantity, what is my selling price? Because selling price is A minus BQ. So here A is also available, B is also available, Q is also available. Based on that, I can get my selling price. So quantity is also available, price is also available. Now look at the students, in this particular case, how do I calculate? Everyone pay attention. Now look at this, my variable cost per kg is 80 rupees. That means my marginal cost is 80 rupees. Yes or no? Can I tell profit is maximum at the point where my marginal revenue is equal to marginal cost? Yes. Marginal cost is equal to 80 rupees. So marginal revenue, which is A minus 2BQ, should also be equal to 80 rupees. Now, what is my A, students? If selling price is 100, demand is 0. That means my A is equal to 100. I will write it here. Yes, what is my B? What is my slope? To sell 1 unit, by how much should I reduce my price? If I reduce my price by 10 rupees, quantity will increase by 5 kg. B is 2. Yes or no? Both the data is available. 100 minus 2 into Q is 80. So 100 minus 4Q is equal to 80. 4Q becomes equal to 20. So 20 divided by 4. Yes, my Q is equal to 5. That means ideally I should be selling 5 units. I've got the answer. So now I want, if I have to sell 5 kg, what should be my selling price? I know selling price is A minus BQ. So if I set my selling price as 100, no one will come. But in order to sell 1 unit, I have to be reducing my selling price by 2 rupees. That means in order to sell 5 units, I should be reducing my selling price by 10 rupees. That means my selling price should be 90 rupees. So I should be selling my goods at 90 rupees. I should be selling 5 kg goods. As simple as that, I have got my answer. Now look at this, same answer I got, 5 kg at the rate of 90. Same thing we've got using the formula, students. So look at this, 2 steps. First, calculate your quantity. How? Calculate your marginal cost. Equate your marginal revenue equal to marginal cost. Marginal revenue formula, you know, MR is equal to A minus 2BQ. Substitute, get your quantity. Once you've got your quantity, calculate your selling price. Selling price is A minus BQ. As simple as that. Very important from the examination perspective, students. Yes. Next few miscellaneous areas are there which are not important, but quickly let's try to discuss this and finish off the chapter. Principles in case of product pricing. What all factors have to be kept in mind in case of product pricing? One is price customization, one more is price sensitivity. Now what is this price customization? What is this price sensitivity? Yes, price customization. I am telling first I will set a standard selling price. Then I will keep customizing it based on the requirement, based on the needs, based on my customers. So how can I customize my price, students? I can customize my price based on 4 different factors. Either I can customize based on time differential, or I can customize based on demographics, or I can customize based on product line, or I can customize based on customers' past behavior. Mnemonic will give you, don't worry. Yes, first I am telling based on time differential. Yes, so pricing of product is sometimes based on time differential. That is a different price for different time periods. Say for example, I am telling gym subscription. Yes, if you are opting for gym subscription for 1 month, it will be 2000 per month. However, for 1 year, it will be 8000. That means monthly it will come down to 800 rupees. For different time period, different price. I am customizing my price for different time period. Price customization. Or else movie prices, different time. If you are going for afternoon, 12 o'clock to 3 o'clock show, price will be very less. Night, yes, 8 o'clock to 11 o'clock show, price will be high. Price customization. Ola, Zomato, during, yes, peak times, surge pricing. Price customization based on time differential, based on the time difference. Is it clear, everyone? Yes. Same product, different price I am charging. Yes, based on demographics. Same product, different price I am charging based on demographics. Yes, based on age or your social status. Simple example, in case of railways or buses, for senior citizen, special concession will be there. Yes, if you are going for amusement park, for children, special benefit will be there. Or if you are having college ID card, special discount will be there. Amazon Prime, if you are under 24, or if you are a college going student, 50% discount will be there based on demographics, that is your age or your social status. Even though product is same, you can customize your price so that you can reach more people. Based on product line, say for example, you are coming up with a mobile. Say for example, you are telling, yes, 1 plus 10 with 6 GB RAM, this is the price. With 8 GB RAM, this is the price. Same product, however, slight changes are there in the product line. Yes, in the features. So for based on that, you are customizing, changing your price. Or based on customers' past behavior. Based on customers' past behavior or changing your price. Say for example, yes, a person has been buying on credit from you from the past 5 years. every time correctly on time he is giving you the goods, so you can give him some extra discount. There is one more customer, he is buying from you, he is not paying you on time, so what you will do? Yes, you will increase the price, you will not give him on credit. Say for example, there was a student who has learned from me, he has got a rank in CA Inter. For final, I'll tell you, I'll give you free classes. Yes, there was a student who was not serious during CA Inter. He wants now classes for final. Assume. Yes, assume I'm telling, yes, I'm going to charge extra from him. Assume. I will not do that, but still I'm telling, assume I'm charging extra from him. Yes, based on customer's past behavior. Is it clear, students? So 4 things I have told. Firstly, based on time differential, based on my demographics, based on my product line, based on my customer's past behavior. You have a small mnemonic here, TDPC. Yes, I'm telling, in 10th, if you get a distinction, dad will gift you a PC. In 10th, if you get a distinction, dad will gift you a PC. T stands for your time differential. Yes, D stands for your demographics. Yes, P stands for your product line. C stands for your customer's past behavior. Is it clear, everyone? That is my price customization. Then I have my price sensitivity. I am telling how sensitive my price is with respect to change in factors. Sometimes my price will be very sensitive to a change in factor. One factor changes, yes, my demand changes by a very big amount. Sometimes my price will not be that sensitive. So in different scenarios, what will happen to my price sensitivity, students? Now look at this, very simple examples I'll tell you, you guys can remember. Now not important for you guys to by heart from the examination perspective. Yes, not important to by heart from the examination perspective, but still, yes, let's try to quickly understand and keep it. Now look at this, students, everything I'll explain one by one quickly. Either my price sensitivity will be high, or my price sensitivity will be low. You have to tell me, students, price sensitivity is high means my price is highly sensitive. Yes, slightly I change my price, yes, too many customers will leave me. Slightly I increase my price, too many customers will leave me. Slightly I reduce my price, too many customers will join me. Yes, price sensitivity is low means, yes, doesn't matter much. I increase my price slightly, yes, customers will still be there. I reduce my price slightly, still my customers will be there. Yes, that is price sensitivity is low. Now look at this substitute awareness effect. If I am aware of substitutes, if I am aware of other substitutes, what will happen, students? Price sensitivity is going to be high. If I am not aware of substitutes, price sensitivity will be low. Say for example, I am telling, yes, I as a student, I was looking for offline classes for CA Inter. At that time, there was only one institute. There was no other substitutes available. That means what will happen? There are no other substitutes. That means price sensitivity will be low. So they are charging 40,000, they are charging 60,000, they are charging 70,000. If I have to learn, I have to go there only. Price sensitivity will be low. Whether they increase or reduce the price, I will still go there. But if there are 5 different coaching centers, one coaching center increase the price, I will go to some other coaching center. Price sensitivity becomes high if I am aware of substitutes. Is it clear, everyone? Total expenditure effect. If the total expenditure is a low proportion of consumer's income, price sensitivity is going to be low. Suppose I am telling I am earning yearly 12 lakh rupees. Assume I am earning yearly 12 lakh rupees. Yes, I wanted a bottle of water. Bottle of water I was seeing in a mall, it was available at 25 rupees. However, if I go outside, yes, if I travel around 2 kilometers, I will be getting water at 20 rupees. If I go outside, water is available at 20 rupees. But right now I am in a mall. What will I do? Will I drink water from mall or will I go all the way outside? Yes, drink water at 20 rupees. What will I tell? My income is 12 lakh. This expense is a very small proportion of my income. So I am telling, yes, buy it from mall only. Yes, let's not think too much about that. Just 5 rupees, right? Yes, it's fine. If expenditure is forming a low proportion of consumers' income, price sensitivity will be low. However, if expenditure is going to form a significant proportion of consumers' income, price sensitivity is going to be high. Say for example, I am telling I am purchasing a car of 15 lakh rupees. Suppose I am buying, I have to pay 15 lakh rupees. But if I purchase from Pondicherry, it will be 13 lakh rupees. What will I do? Obviously, I will go to Pondicherry and buy because 2 lakh rupees it is less. So, if it is a low proportion of income, sensitivity will be low. If it is a high proportion of income, sensitivity is going to be high. Now, again, unique value effect is there. Yes, the more unique the product is very unique. There are no other substitutes available, comparisons available. Price sensitivity will be low. Say, for example, Apple, very unique the product is. Sensitivity is low. Whether they increase or reduce the price, people will still buy it. yes, a difficult comparison effect. If the product is difficult to compare, price sensitivity will be low. If you cannot compare the product with something else, yes, it becomes, yes, difficult to, yes, your price sensitivity will be low. Say for example, I am telling, yes, I have a barber who does my haircut. Properly he does, I go within 15 minutes, properly he does my haircut. Yes, I'm very much accustomed to that. Now somewhere else I go, I'm not getting that comfort. Now other barbers are charging 100 rupees. He is charging me 150. Still I am going here. Why? Because it is difficult to compare the service, the quality, the satisfaction he is giving with others. Is it clear? So if it is difficult to compare, price sensitivity becomes low. Say for example, yes, I am giving CA final classes, one more faculty is giving. Suppose you have taken CA inter classes from me, you are very much satisfied. So in CA final, you cannot compare it with someone else. So you are telling, even though, assume this faculty is charging high, still you are like, okay, we'll go for this faculty only because it is difficult to compare with someone else. You are accustomed. Is it clear? Inventory effect. If your product cannot be stored, price sensitivity is going to be low, students. Now understand this particular point. Yes, what I am telling, say for example, you have gone for a trek. Okay, you have gone for a trek. Yes, so in the trek, okay, you have to compulsorily buy water there. You cannot store your inventory. You are having your trekking bag. In that already some items you are already having 1 liter bottle. Already you already drank. Now you are in the middle of the trek. Yes, there is one small shop which is available. Water bottle they are selling at 100 rupees per liter. Will you purchase from there or will you keep bargaining there? What will you do? Will you purchase from there or will you keep bargaining there? I have no option. I will purchase from there at 100 rupees because inventory effect. Yes, it is difficult for me to hold the inventory. I cannot hold. Yes, if needed from at the start of my trekking point itself, I can put 10-liter water on my back, but it is going to be very heavy for me. I cannot hold my inventory. So if I cannot store or hold my inventory, price sensitivity becomes very much less. Is it clear? One more example I am telling. Say for example, yes, I have started a business of giving fresh juices, fresh fruit juices. I thought what I'll do is I will buy in bulk fruits from apples from Kashmir. Yes, 10 tons apples I will buy for 1 year. I will get at the best price. But what is happening, students? I cannot buy, yes, 10 ton apple, hold it for 1 year. So I cannot do that. It is difficult to store my inventory. So obviously that option I cannot go for. So what I'll have to do? Every day how much apple I want, that much only I will purchase. So that much I have to purchase. I will buy from a, yes, nearby locality person only. Yes, he is giving me at 100 rupees, but the nearby shop person is giving me at 200 rupees. I don't have an option. I cannot buy in bulk and hold my inventory. So I have no option. Yes, my price sensitivity becomes less. Is it clear, everyone? Understanding? Yes, the logics. Yes, end benefit. If the expenditure on product is very low compared to the total cost of the product, yes, the price sensitivity is again going to be low, students. Suppose I am telling, yes, you have purchased an AC from an AC showroom. The AC cost is 50,000 rupees. Okay. Along with the AC, you also want a remote for the AC. Yes, they have, yes, put a bill telling 60 rupees for the AC remote. Sorry, not remote, the battery used in a remote. Yes, battery used in a remote is 60 rupees. Now, if you go outside, same remote is available at 20 rupees. Now, will you go outside or will you tell it's fine? More often than not, you will tell it is fine. Because, yes, the expenditure on your product on the battery is very less compared to the total cost of your end product. Total AC cost is 50,000. Yes, your cost on this product is very less compared to 50,000. Just 60 rupees. You are telling, yes, your price sensitivity is going to be low. Is it clear, everyone? Yes. Then sunk investment effect. If your product is used along with an asset which is previously purchased, you have previously already purchased an asset, for that you are incurring the cost. Price sensitivity is going to be low. Now, just giving you a simple example, yes, at our home 10 years back we purchased Sony LED TV. Okay, we paid around 80,000 at that particular point of time. Within 2 months, yes, its display, yes, there is something in that which is called, I don't remember the exact name. Okay, so that went off. So we had to replace it. If we have to replace it, we have to incur 20,000 rupees. Now, will we incur 20,000 or we will not incur 20,000? If I incur 20,000, I can correct my, yes, TV. Otherwise, I will not be in a position to watch my TV. That's what I'm telling. Already 80,000 we have incurred. Yes or no? Now, if I have to use this, I have to incur this 20,000. So I will not think too much about that. I've already purchased an asset previously. So along with that, I'm incurring this expenditure. My price sensitivity will be low because I want this expenditure at any cost. Otherwise, I cannot use that. That is why if you have purchased a good phone, suppose you have purchased a OnePlus phone for 50,000, You have to change your display for 10,000. Still people will go and change the display. Why? Because sunk investment effect. I have already put 50,000. Now, if I have to use that 10,000, I have to incur. My sensitivity is going to be low. I will do that. Is it clear? Price quality effect. If my price quality is higher, if my quality is higher, sensitivity will be less. Shared cost. If the cost is shared amongst multiple people, sensitivity will be less. Suppose think of it, students. Yes, while you guys are doing your articleship. Yes, while you guys are doing your articleship, you guys are staying together. Suppose 5 of your friends are staying together. Previously, the rent was 20,000 per month. So for every person, it was coming as 4,000, 4,000. All of a sudden, they've increased it to 25,000. If you're thinking of it as an individual person, you're telling, okay, 5,000 cost has increased. But when you're looking at it as a group, you're telling for every person 1,000 cost has increased. We guys can adjust. Yes or no? If your cost is shared, then the price sensitivity becomes less. Is it clear, everyone? Yes. So for this also you are having a mnemonic. You guys can see it by yourselves. Yes. If you do your studies properly, you will be getting your PlayStation. Yes. Studies. S stands for substitute awareness, T stands for total expenditure, U stands for unique value, D is difficult to compare, I is inventory, E is end benefit, S is sunk cost, SP is price quality, S is shared cost. Not that important, but still you guys can read it one time. Yes, next points, yes, if you need, you can read it one time, but I'm not going to discuss. Price adjustment, they're telling once I will set my price, I'm going to adjust it. Yes, based on how much are you buying in bulk, are you a distributor, are you a wholesaler, are you making payment on time, based on that I will give discount. Yes or no? Suppose HP, selling price is 1,20,000, but for a distributor I will give 40,000 discount. If you are buying in bulk, I will give you 20,000 discount. If you are paying upfront in cash, I will give you 10,000 discount. Yes, price discrimination. Yes, charging different price based on different time periods. Say for example, flight fares. If you are just booking near the travel date, it will be high. Before only if you are booking, it is going to be low. Yes, all these things are there. Yes, structured approach to pricing decision, not important because it was there in the textbook output. Sensitivity analysis is also not important. Again, pricing of service is also not important. Pricing policy is also not important. You guys can just have a look at this once if at all you want, not compulsory at all. If at all you still feel you have to read it, obviously you can read it once. Yes, with this the chapter is over, students. Now let's quickly have a revision of this chapter. Yes, so pricing decision chapter, we have told 4 concepts. We have told mainly, yes, firstly, when we are setting our selling price, we should see what type of market we are operating in. Yes, then we should see the type of product we are coming up with, revolutionary, evolutionary, me too. Then we should see the pricing strategy, skimming penetration. Then we should come up with a proper selling price. Fine. Type of market could be perfect competition, monopoly, monopolistic, oligopoly. Perfect competition, large seller, large buyer, selling homogeneous product. Everybody is having perfect information about price. There is free entry and free exit. Yes, how do we set our selling price, students? We are just a price taker. We are not taking any decision about the selling price. The only decision is about the quantity to be sold. Sell so long as your marginal cost is lower than or equal to your selling price. Fine. Next we have monopoly, wherein we have one seller but a large number of buyers selling homogeneous products, for which there are no close substitutes and there are high barriers to entry. Now, in case of monopoly, firm is the price setter. It can set whatever selling price it wants. However, ideally, set your selling price based on demand elasticity. That is, set your selling price in such a way that your profit is maximum. Fine. Next, monopolistic we have. Yes, here there are large number of sellers who are selling similar but not identical products. Mobile, similar but not identical products. We try to differentiate using branding, advertising, packaging, etc. Yes, here also we set our own selling price. We set our selling price, however, keeping the market price into consideration. Okay, then we have told the excess profit earned by a monopolistic firm will attract a new competition. So in the long term, the excess profit will diminish. We have told you, MI example, yes, Oppo, Vivo entered. Yes, then we finally have oligopoly, wherein there are few sellers selling homogeneous, identical products. And firms are having mutual interdependence. Interdependence is very high in case of oligopoly. Yes, in case of oligopoly, we are going to follow the pricing policy based on the pricing policy of my competitor. Yes, and how do we maintain our price, students? Either by close analysis, what he is doing, I will also do, or cooperation and collusion. Yes, cooperate and together increase your price. Now, yes, strategy in case of oligopoly, price strategy, non-price strategy. Yes, price strategy, predatory, keep it artificially low to, yes, remove your competition, limit pricing to discourage new entrants from coming, and collude with rivals and increase the price together. Non-price, either you can focus on quality, advertisement, sales, promotion, loyalty scheme. Yes, next, type of product, either it could be a revolutionary, evolutionary, me too product. revolutionary product, it is new to the market, has a potential to create its own value, and it replaces the existing method or technology. Yes, it is going to have a revolutionary impact on my market. Pricing, I can charge premium pricing, yes, for taking the risk, for taking that first initiative. Evolutionary, it is the upgraded version of revolutionary product with some additional features. Yes, I will go for a demand based pricing. That is, based on the demand, I will set my pricing. Me too, it has emerged because of success of revolutionary product or evolutionary product. Yes, they are having similar product or similar production process, because ultimately they have done reverse engineering. Is it clear? These are price takers. Yes, selling price is set based on competitive forces. Is it clear? Then we have told pricing strategies. Either you can go for skimming price or you can go for penetration pricing. Skimming price, what you are doing, product is introduced at a high price. Yes, slowly, gradually price is reduced. Yes, it is used for innovative product wherein high promotional expenditure is incurred. Yes, penetration pricing, product is launched at a low price. Slowly, once it is established, price is increased. It can be used to popularize a new product and to penetrate the mass market quickly. Yes, it is needed for long-term survival and profitability. Now, when do we go for, yes, skimming pricing, students? See, one simple mnemonic I have told. Yes, at t is equal to 0, time is equal to 0, what is happening? At time is equal to 1, what is happening? At the time when I am introducing, yes, demand is inelastic, so I change. Yes, it is inelastic. Again, at t is equal to 0, high price will skim the cream of the market from the people who are relatively insensitive to price. Again, at t is equal to 0, demand is not known. Again, at t is equal to 0, I have already incurred huge initial capital and promotion cost. So I am charging a high amount, and slowly after a point of time at t is equal to 1, after some point of time, if I reduce my price, I will be in a position to sell more units. Now in case of penetration, yes, when can I go for penetration? Yes, you have your mnemonic PDLC, you can tell it as product life cycle. P is to popularize a new product. D is if your demand is elastic to price. L is if you are having substantial savings on large scale production, and C is if you are having competition threat. Is it clear? Yes, then we had additional points. Pricing during recession. During recession, we can set our selling price above marginal cost but below total cost. Advantage is we can use the services of skilled employees and we can use the plant and machinery and take advantage if my business condition improves. However, do not go for drastic price cutting and do not accept a long price order. Yes, pricing below marginal cost also I can go, that is any cash realizable value. Only in few cases, if my goods is perishable, vegetables, if stock has accumulated and market price has fallen, yes, clothes I have told. In order to popularize a new product, Geo I have told. Yes, if such a reduction helps me to boost the sale of other product which is having a high margin, I have told, yes, printer as well as the cartridge. Again, pricing through my product life cycle. Now look at the students, skimming, selling price initially high, then I will reduce my price. Yes, in order to discourage competitor as well as gain market share. Yes, during my maturity, I will either reduce my selling price slightly or I will maintain my selling price but give some add-ons. Yes, during decline, I will again reduce my selling price. Yes, my cost in case of skimming, initially introduction will be high. Yes, growth will reduce, maturity will be constant, decline it will increase. Growth it will reduce because of 4 reasons. Raw material, bulk discount I have got. Labor, learning curve they have got. Variable overhead, larger batch size. Fixed overhead, economies of scale. Maturity, same thing is continuing, so no change. Decline, my bulk discount is lost as well as my economy of scale is lost. Coming to penetration, selling price, initially low selling price, increase, constant. Low, increase, constant. Now in reality, think of it students, in case of skimming, I will be getting my maximum profit in introduction and growth. In case of penetration, I will be getting my maximum profit by end of growth and maturity stage. That is what is happening initially. Yes, Apple, initial 6 months, they will get whatever the profit they want from the product. Then just for the sake of selling, they are doing. Yes, Geo, initial 1 year they have sold at loss. Then they have started earning profit. Yes or no? Yes, just one additional point I have told. Yes, now, production cost in case of penetration, initially only low because we are selling more units. Yes, in case of growth, it will reduce again because bulk discount, learning curve, larger batch size as well as economy of scale. Maturity, it will be constant. Decline, it will increase because my bulk discount and economy of scale is lost. Is it clear? Then we have told how do we set our selling price? Cost based, either your full cost plus profit or your variable cost plus profit or your return on investment, wherein you are telling, yes, it is your total cost plus a desired return on investment. Your desired return on investment is the capital employed into ROI percentage before tax. If after tax percentage is given, you have to convert it into before tax. Is it clear? Now, competition based pricing, you are having going rate as well as sealed bid. Going rate, selling price is the average level charged by industry. You use it for your homogeneous goods. Yes, sealed bid, it is used for bid or tender. Yes, we are setting the price based on what my competitor is going to charge. So I will be setting my price slightly lower than that. Is it clear? And value based pricing, firstly I have my true economic value. Yes, it is the value that the product is intended to deliver from the company's perspective, supplier's perspective. True economic value is the value of next best alternative, Oppo 15,000 plus the value of performance differential. Yes, I am telling my perceived value is the value which is actually perceived by my customer. Okay, yes, ideally how should I set my selling price? It should be between my cost of goods sold and my perceived value. Is it clear? Then we had miscellaneous areas. In that, firstly, we've told profit maximization model or theory of price. I've told my objective is to determine my selling price and quantity at which my profit is maximum. Two formulas we have told: selling price is A minus BQ, where A is the selling price at which demand is 0, B is the slope, that is change in price divided by change in quantity. Again, I have told marginal revenue is A minus 2 BQ. Logic I have told is A minus 2 BQ. Now, steps to be followed. First, calculate the quantity. How do you calculate the quantity? I know profit is maximum where MR is equal to MC. MC will be available. MR, you know the formula A minus 2 BQ. A will be available. B slope will be available. Get your Q. So, you've got your quantity. Based on that, calculate your selling price. You know the formula of selling price A minus BQ. Yes, this is over. Very important question, students. Price customization. Yes, TD. PC, if you get distinction 10th, you get distinction, you will be getting PC. Based on time differential, yes or no? Based on demographics, children, elderly people, based on product line 6GB, 8GB, based on customers' past behavior, proper timing payment if he is done, you are going to give him discount. Again, price sensitivity we have told, you guys can read it once. With this, the chapter is over, students. Yes, so go back, revise this chapter, and tomorrow we'll continue with the next chapter. So keep studying, keep smiling, keep rocking, and see you guys tomorrow for our next chapter. So if you have liked the video, yes, make sure, yes, if it was adding value, do suggest to your friends, like, and help us to continue the good work. Thank you so much, students. Have a great day.